a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola. How's everybody this morning?
It's good.
Good, yeah. I personal fast market this morning.
So you really just don't care about, you just had to blow through that just for a perfunctory purpose. You just
Yeah.
Cool.
That's just
Cool. I'm on board. All right, so you're in a fast market.
Standard intro.
You're in a fast market. Go ahead.
Yeah. Well, I told my wife that I don't want her nagging me anymore about the garbage.
Nice.
Yeah.
Nice.
So on TikTok, that would cut to like a photo of you, and then it would say "in remembrance of Tony," and then it would have like your. It's like, and I told my wife I didn't want her nagging. It was like,
no, like I know Wednesday night is garbage night.
Yeah.
Okay.
You know, like I don't need a reminder. I'm a big boy. I had that kind of attitude yesterday. I was feeling all puffy chested. Caught a couple of things in the market yesterday.
Yeah.
You know how it is. You know what I mean? I was going back to back in the day when you were younger. You know, kind of thing. So I don't need that reminder anymore.
For the record, I am a lifelong # Team Chris. Go ahead.
So when I woke up this morning, there was, and when I went to bed last night, there was no nagging or anything else like that. And then when I woke up this morning, I noticed I was the only one without my garbage on the end of the driveway. So I had to get all my, my garbage throughout the house, which I normally usually do, and throw it in the garbage. So I was a little bit late this morning. So I'm a little.
2 days in a row, a little late. Wow.
You literally have one job.
100%.
She's running the rest of the house like the Navy, and you have one job.
It is. You are correct. You are correct. But the garbage is out. Remember that. The garbage is out. So I did my job.
Well, that's after 15 years. You start. This is how it snowballs.
22 years. 22 years.
No, 15 years. I mean, of this job.
Oh, of this job. But
now you're late 2 days in a row. Now it's a pattern.
It was like 4 minutes. I mean, I got here at 5 to 6 instead of 8 minutes to 6
then
or 9 minutes.
Next week it turns to
next minute 6 a.m.
Next time it's 15 minutes.
It keeps snowballing. Yeah,
it's not a good sign, guys. Sorry.
Yeah.
Sorry.
But I got my text message when I got here because I try not to check my text messages anymore when I'm driving. That's my 2026 thing. I'm not 100%. But I try not to check anything while I'm driving anymore. And when I got downtown and I checked, she goes, "Did you do the garbage?" Yeah. She knew. So
that's amazing. I love that for her.
Yes, I do too. Anyway, that's my dilemma for this morning. But the rest of the dilemma is here we are again on a Thursday. Beautiful day to be alive here, unchanged market.
Are you trying to appeal to the mercy of the court? What is going on? Like,
I should probably.
What did you do?
I probably should apologize here to the wife and say, sorry, I need the reminding, so she hears it. That's what I probably should do.
That's what I would do.
That's what I would do too. That's what I would do too. Anyway, how are you guys?
Can't complain.
Good.
No issues. No, what's going on with you over there? You got the horns out today.
You needed that yesterday, not today. You got Nvidia basically unchained.
Now I'm a little self-conscious. I feel like I'm.
No, you got to give the people what you want. Listen, we need viewers by any means necessary. So
this is kind of popping out a little bit. So I feel like I'm a little.
Show the people what you're working with.
You guys missed that window. You could have done that sort of thing, many years ago when I was a little.
Oh, we're zooming in. Oh, they're zooming in.
They are zooming in.
They're like enhance.
No, please.
They're like enhance.
Oh no. I'm really sorry to everybody in the chat that's waking up to that. Wow.
What did you get up to last night, Nikki?
Nothing much. I wish I had
to regale us with a fantastic tale.
No.
Mm-hmm.
No. I have nothing. I mean, we had a great day in the markets and did a lot of trades yesterday, and that was the highlight. Got home, did nothing.
Okay.
Yeah. Wish I had a big update for you.
That's okay. You can always make one up, I guess. I don't know. There's not a lot going on. Like sports are kind of meh.
Yeah.
Like, I mean, spring training started, so that's good. But the Bulls have lost 10 in a row, 11 in a row. I don't even know. Like, I don't really care.
Yeah, neither do I. You're right. But spring training did start. I saw that. Yeah, while I was scrolling, that was like, even my wife said, is it spring training? I go, it must be.
Yeah. I mean, it's almost
Hockey
March.
started back up, though. Like,
Yeah, after post-Olympic break. Yeah. So hockey is back. And the Combine started. So the number 1 draft pick and the Heisman winner from the number 1 undefeated, never daunted Indiana Hoosiers, Fernando Mendoza, is in Indianapolis at the Combine.
Are you going to get a jersey?
Maybe. I think I will. Here's something funny. You want to know how much the paradigm has shifted? IU 2026 football tickets sold out instantly, and they are now emailing people to please go to basketball games.
Yeah, that's what you have to do.
What are we doing? It is wild.
You got to think that the team will gradually get better just with the accolades.
Sure.
That you
there's a snowball effect.
There's a snowball effect where
Sure.
People are like, "Oh, Indiana, that's a pretty cool place. They won the national championship for football.
Yeah.
Maybe I'll go there."
Well, we've never been like, I mean, we're good at we were a basketball school forever.
Yeah. You were.
Yeah, we were.
Now you're a football school, but
I just don't know what to do with myself. Like, I still see tweets and get tickled about it. Like, I would just try not to be obnoxious about it. But I am excited about the Combine. Bears, I think, have the 23rd or 25th pick.
something like that. Yeah.
Something like that. So
D-line, hopefully. I don't know what we do. We're trade it maybe. Max Crosby is lurking.
I just want to go down there. I just want to see all the boys running.
No.
Is that better than the boy aquarium?
I mean, it's kind of like the boy farm.
Fashion show. It's a boy fashion
right?
show, basically. Yeah.
Right? I mean, they got to strip down. They got to measure things, right? I volunteer as tribute. How fast do you think you could run a 40 in?
Oh God.
What's the
brings me back
fastest
to
40?
the,
Isn't it like a 4.09 or something?
I have no idea.
Under 4.3 is usually blazing.
Yeah, but I think Green.
There we go.
I can't remember his first name.
Xavier Worthy holds the record for the fastest 40-yard dash in NFL Combine history, running official 4.21 seconds in 2024. The Texas wide receiver.
That's not the fastest of all time. I know Bo Jackson ran faster than that.
No, I don't.
Gemini, Google Gemini AI overview. Why would you lie to me?
Nobody back then was faster than what is in the NFL right now.
So that's
my
what
God,
it says.
Willie I think you're completely wrong. Fastest.
This is.
I don't know. Bo Jackson was dragging that wagon. I don't know.
Bo Jackson was so fast.
I know. I don't know. I'm just showing you what Google.
Green. It was somebody Green, if I remember. 11
Gemini's.
fastest 40-yard dash players.
Okay.
Oh. Okay.
But what do you think you could do it in, Nikki? So 4.21 is the all-time record.
God, I don't even know. I don't even know what's a good number to get to.
Without all systems shutting down.
Or just pulling something and coming up lame. Do I get to do it again? Or is it just one and done?
Oh man.
What would be I don't even know what a crazy number would be. I think 5.
We got some pretty good hallway here. I might map out a course later today.
No, but that's not fair. You need straight away.
I know we have straight hall. I think we could have 40 yards of straight hallway.
No. You think so?
I don't know. Outside on the street.
Outside.
Yeah.
For the Combine, we should do a 40-yard dash.
Yeah.
I would probably have my money on. I could see Glenn being in there.
Glenn with the quiet speed.
I'm
going to put my money on Quentin.
Quentin said, we asked Quentin, he said he wasn't the fastest. He was fast.
He's built for
he's more
power
of a
up.
power guy.
Right, okay, but not
Bo Jackson is widely credited with running a legendary 4.13 40-yard dash at Auburn.
Okay.
I mean, I'm just remembering. I don't know.
But now with photographic video technology, it's with
there's a
latency,
clicker.
right? There's a latency.
This is like when they held up the baby and said, 8.7 ounces.
Right.
And what a big baby.
Right. Yeah. But now you got infrared cameras taking pictures of wolf dogs in the Olympics. I don't know.
They're all faster than I'm ever. I mean,
that's the takeaway.
Then I'm ever be able to go 10 yards. Right.
Yeah, I would like to know like what an average
And I think I'm also going to set like
40.
I think we should have a tasty combine, and we should also get some tape from production, like some of that gaffer tape, and see how high you guys can jump.
Yeah, well, we should just get one of those like spinning those.
We don't have any money.
Yes, we can do that.
I can make one.
But we could do it with just like you take the tape and then you jump and you stick it on the wall. So who do you think has got the best vertical in the office? I'm gonna say Westwater.
Oh,
because he's lean.
He's real lean.
Yeah.
That's a good guess.
Yeah, that's my sleeper. That's my sleeper pick right there.
Do they do it by height? Like the person's height? Do they adjust it? I'm asking the question. I really don't know.
I don't know.
You know.
I believe so because it's jump.
Yeah, because it should be vertical jump. So like if you're 6 feet, they set it 6 feet and above. If you're 5'5", they set it 5 feet and above. It makes sense.
Yeah.
I
think I think Gus is probably our all around best physical specimen.
Sure.
Athletically.
Sure. What about Mikey Butler? Because he's too old now. Are you going to throw shade to your work wife? Mikey
wow, how soon you forget the old girl.
Mikey's good, but he's a little bit on the older side. Errol is another one that he's
deceptive. Yeah.
Yeah, he's lean. He's lean.
Yeah.
Okay.
I give you.
Hey, let's stop talking about our coworkers like this.
Yeah. We're talking about their athletic.
Prowess.
You gotta blend.
And you gotta throw the dark horse Beth in there. She's probably the best athlete we have here anyway. So you gotta put her in there.
She was like a softball champion. She would.
I know. I'm not kidding.
I know.
You gotta blend everything. Like I'm thinking like because those guys are like prime, the mid-20s, like.
Got it.
Yeah.
And then there's our IT department.
Yes.
It's a spectrum.
Yeah.
It's a range.
I'm just kidding. All of a sudden, my computer goes black. I'm just kidding, guys.
Yeah.
Anyway, all right. Well, good times all around. Well, did you do anything fun, Bat, last night or no? Just watching more movies that you don't know the names of?
Yeah. But no movies last night. Quiet, early night because I didn't have to do the garbage. So it was an early night.
Yeah.
It was an early night. So.
Okay.
No, nothing special.
Well, we have a great show for you today. A lot of really good content headed your way as we come spinning out of the turn almost to the end of the week on this thrilling Thursday at the top of the 8 o'clock hour. Fan favorite trades from the research team live. We have the world's greatest financial think tank presenting their trade ideas to the bats. So hopefully we're going to get some good trades. And then the man, the myth, the legend, Mr. Italian Horn himself, Nicky Batista, Johnny Trades.
Oh,
how you doing?
It's all sex appeal.
How you doing?
We lost a couple of viewers on that Zoom in, but we gained a lot more on social.
Hey, welcome the Cougars. Sure. Welcome the Cougars to the chat, Nicky. Drop a fire emoji in the chat for all the Cougars.
I do what I can.
Which bearish, bullish, neutral.
Yes, one of each.
Yes,
Johnny Trades. Yes,
that's what you do. That's what you do. That's going to be Nicky at around that 8:40 time frame. Then 9 o'clock for market measures, strategy performance in different market sentiments. Break it down, Nicky.
So I haven't really looked at this one.
Okay.
I will
TBD. TLDR. Didn't read it. Okay.
Yes.
Oh, not the crickets with the sound effects.
But yeah, so talking about more on like,
Strategery.
That's the way to put it.
Love it.
I'm going to give you some numbers here just before you go on for a quick second on this 40-yard dash. NFL players average is 4.77.
Okay.
This comes from Dino.
That includes like linemen and everything.
Yeah, everybody, just the average. So that's like society, right? You've got.
No, these are elite athletes. But
yes. But I'm just giving for them. I'm just saying.
There's a bell curve.
So what do you think? I was just giving that for context. What do you think the average? This comes from Dino and Wakanda. It's true. What do you think the average male adult can run a 40-yard dash in? I gave you the NFL player 4.77. Fastest players around 4.2. What do you think the average?
Well, I said I was hoping I would get at a round of 5. That was what I was hoping.
Well, not to be that person, but are we talking a guy from Wakanda, or are we talking a guy from the South Side?
The average. It's a pretty wide range. Everything being equal here.
Those are very different.
You say you can do a 5. What do you think the average is?
Hoping that I could.
Are you above average or on or?
I would athletically. I would say I'm above average.
Above average. Okay, go ahead. Yeah.
Are these men self-reporting, or is this like, or like has this been?
I don't have that information.
Right? Is this like
information.
Omega, like being like, yes, we have the times?
Yeah, I would say so. Yeah. What do you think?
I'm gonna say probably 10 seconds.
Oh,
5.5 to 6.5 is
Okay.
the range.
is the range.
Yeah.
Oh, so I
for
could
an average, relatively fit. I should have added
Okay,
that too.
5.5.
Okay, well, you didn't add.
I
You
said
didn't
I
say,
should have added that. I
you
didn't read the whole
say
thing.
that. I was thinking all the dudes that I've seen have liked my profile. And
Sure. I get it. Yeah.
5.5.
Might have to sell you at 5, but
Yeah.
We're gonna go hit
I was
the street.
hoping I could be close to 5.
We're gonna hit the street. It's almost as fun as when, like, on your street, it has like the speed detector. Like, if your HOA sets that up,
Yeah.
to see like what you could get like as a top running speed.
Yeah. For a very short period of time. Yeah.
Right. Not sustained.
Yeah,
but-
not sustained.
Right.
40 yards.
Right.
That's it. That's all.
And then we got live from the trade desk today at 9:30-ish. Q, and it says here Frank,
I know. Special guest.
the
Glenn-
indoor kid.
Yeah, Glenn. No,
Oh, did he get invited to the Swiss
I'm
Alps
just
again?
kidding. We love Glenn.
Did he get invited to the Swiss Alps again? Like, where is he?
Maybe. He's a little bougie.
Is he in Cannes?
Yeah. So we got Frankie,
Frankie.
a fan favorite.
Yes, not Frankie in the chat.
no,
Frankie-
Mr. Caberna.
Yes,
You kidding
Frankie,
me?
the
Yeah.
indoor kid. Right, yeah.
The
like you
old
said.
indoor kid himself coming
Yes.
back.
Yeah.
Oldie
Love it.
but a goodie. And then, that's our run of show for today. Hey, programming note, tomorrow is hashtag Fan Friday. So we need your trade ideas for Fast Market. You know what to do. You know what to do. Submit your trade ideas, and you could be featured on tomorrow's show.
tastylive.com/fastmarket.
Fast Market.
Email support at tastylive as well.
Okay.
You can send that in.
Good job.
Send it in now.
Mach Schnell. Do you want your daily dose?
Sure.
Yeah, let's go. Hit with my theme music. Oh,
Our leading
In
story,
today's
breaking
headlines.
news, across the wire. Our leading story, top story. Let's jump in.
In today's headlines,
Breaking news.
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's February the 26th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news?
Earnings for this evening, Mr. Bat. I got all the ones from yesterday.
Sure. Maybe something for the Johnny trades, a couple of smaller size stocks for if you want to look for an earnings trade in there. I know we do bullish, bearish, and neutral usually at 840, but you got XYZ, relatively.
Block, Square, or
$50
whatever
ish
they're calling
stock.
it
You
now.
got Dell, got decent market sometime in there. Then you got Intuit, NTAP, and Autodesk, ADSK.
Yeah, this morning you had Baidu and VST.
Perfect.
Yep.
Hey, dollar slips as Nvidia buoys investor hopes in absence of tariff news. The dollar began the day on the back foot during the Asian trading session on Thursday as better than expected earnings from Nvidia. Don't worry, we're going to get into that. Boosted investor confidence. The U.S. dollar index, which measures the greenback's strength against a basket of 6 currencies, held losses from Wednesday's. Why? What is wrong? Wednesday's session. I'm going
Yeah,
through
dollar's been weak, and all of my FX positions are just waiting for this blast off to the.
That's right. That's
Blast
right.
off.
Just waiting. I'm just early.
You're
like a
primed.
coiled
You're just
spring.
early.
Yeah, it's like a coiled spring. I'm just early.
You're priming the pump there.
Not wrong, just early.
Not wrong, just early. Exactly. That's
Anything else in like the euro? Yen's been kind of also on its butt
Yen
too.
finally caught an uptick.
Hey.
I mean, small, quarter percentage point, but it's up. Euro's up. I think the pound was up small also when I looked. It is. And let's see the Aussie dollar, which has been the strongest of the group, down small, tiny.
Yeah.
A couple of ticks, nothing. No movement one way or the other. A little bit stronger, a little bit weaker on the dollar.
A little bit stronger now. Okay, great. Hey, in other news, CME is reopened yesterday after a little kerfuffle, halted natty gas and metal markets after a technical halt. They had to reopen the metals and natural gas futures and options market after a brief halt due to technical issues. What happened with you guys?
I don't know about them, but no halt with us. You were trading the metals great yesterday.
this
Gold silver
last
ratio.
morning, yeah.
You got gold. Both are down and down. Gold is down around $35.
The ratio's at 59. We were trading it at 57 yesterday.
Right, we were buying it at 57 most of the time. Yeah.
We were scalping
Just
on it.
under.
We're not holding for 2.
Yeah, but we didn't sell it from the 57.5 standpoint. Well, it did a little bit. Something
What number is optimal for that ratio?
there is.
So it's not really that there's like an optimal number. It's
Okay.
just that these two assets are really highly correlated. And so, prior to the craziness that's happened in metals, we sat at a ratio of about 100. That was kind of the range. It was like 90 to 100-ish. And we got outside that range. So now we're at 59 right now. We're
Yeah.
at 57 yesterday. We got as low as 47. And that's just how many ounces of silver to buy 1 ounce of gold. And so, we're well outside what the
normal range of yesteryear.
last
If you can look
year.
back
Last
at
year
that.
was 100 ounces of silver to buy 1 ounce of gold. Now it's only 50.
Oh.
So that's what you're trading. So you're trading that as a pair. The value, how many of those is what you're trading. And it moves, each percentage point is $1,000.
Okay.
So trading from a 57 to a 59 is $2,000 on that pairs trade.
Gotcha.
On the smaller one. On the bigger one, it's $10,000.
That's correct.
Or it's $20,000.
$20,000.
$10,000 per point.
Yep.
Makes sense.
Yes.
Okay, thank you for explaining that. And then just checking in on natural gas because it was also affected.
It's down about 8 cents or so. A decent sized move, almost 3%, down to 2.78. So it's about as low as it's been for quite some time. I mean, it flirted with $4 in the beginning of February. So
Okay.
less than a month ago.
I mean, yeah, my heart still goes out to all the people on the East Coast that got literally like feet of snow. But it's going to be 60 here tomorrow, so
That doesn't help them either. I don't think, but yes.
get the bike out. Let's go.
You say it as if that's our norm.
Yeah.
We've been in 20-degree purgatory here.
I know.
Yeah, we've been in a deep freeze.
Yeah.
Hey, it's Thursday, so that means let's check in on the softs, see what they've been doing as we almost come to the end of the week. Corn closed higher yesterday, but I know wheat and soy are also moving around. But I just like to do a weekly check-in on the softs. They don't get the
You know
love.
what? They have good IV rank. They're in, well, at least corn does. Wheat and soybeans. Soybeans has good IV rank too. Wheat does not. But these are really hard products to trade. But soybeans are going parabolic to the upside. Wheat is kind of in no man's land, and corn is kind of at the low end. So it's just all about the beans right now. But hard trade for me to look at. So many other things going on.
Yeah, I lost my Westwater, my inside man, my man on the streets. My man.
He's here. He was here
No,
yesterday.
I know, but I'm not on the show with him.
Oh.
With Mike. Like,
It's out of sight, out of
He
mind.
literally sits across from you.
I know, but I need this box has magical.
Men are so lazy. Literally, he sits across. You'd be like, hey, my guy.
Pretty picture, though.
The corn. Yeah, it is. The sun rising up over
Looks
the
nice.
cornfields.
Looks tranquil.
Yeah. Come to Indiana. Unless you're the Bears. I don't want that.
Yeah, don't know.
Then don't. But to visit for tourism, come to Indiana.
Yeah, sure.
It's beautiful. There you go. JP Morgan, they raised their long-term forecast for gold prices to $4,500 an ounce yesterday, while keeping their 2026 year-end forecast at $6,300. Spot gold has risen by 20% this year, hitting a 3-week high of $52.48 on Tuesday. We talked about metals a little bit already, but just
we did.
So
Gold is trading just under 5,200. I mean, a week ago it was 4,900. So to say that gold has moved about $30, it's moved $300 in that 1 week time frame. So /GC, if you look at a weekly move, just go over 5 days, about $150. So well inside its expected move as of right now, down around 5/8 of a percentage point. I guess kind of flirting with its expected move.
JP Morgan, the stock, and the banks themselves have taken it on the chin a little bit over the last couple weeks here.
And bad press too. They've been
well, they got caught up in the Anthropic.
Yeah.
Anthropic's all the AI agents are just gonna send stable coins across to each other, and there's no need for JP Morgan anymore.
Right, or MasterCard,
or analysts
Visa,
or stuff like that.
Analysts,
Yeah.
or humans in general. The humans are going extinct.
JP Morgan.
And then
303.
Jamie Dimon is like, yeah, this stuff is keeping me up at night.
Yeah.
And
It's unchanged at 303, IV rank at 22 for JP Morgan.
Yes.
Bitcoin climbed towards $70,000 level as U.S. equities rise. Crypto, is it back?
It actually hit 70,000 just about 500 on the futures. On the cash, it hit around 69.8 or so.
Ooh, couldn't get it.
No, couldn't get it. It's sitting there.
Would you call that a line of resistance, sir?
I don't know what you call it. I call it a ray of hope for Bitcoin. It did have one of its better days in quite some time. 2 better days. It's basically unchanged right now. At least the Bitcoin Cash BTC/USD down $180.
I thought it would continue a little bit today. I thought today was going to be a risk-on day. It doesn't.
Well, you shouldn't be surprised it's disappointed because it's been disappointing you all year long.
No, I meant in general. I thought today was going to be a risk-on day in the market, and it seems like it's not going to be that way. But maybe that changes. I don't know.
What about your Coinbase or MSTR, or the most shorted, or IBIT?
Coin was up like $22 yesterday.
Because they're going to tokenization.
Everything.
It's unchanged right now, maybe down $1 coin.
Yeah. We haven't been trading a ton of it. We have a iron condor, 20-point wide iron condor there. Skews slightly short delta.
What's the IV in there?
It's come up a little bit, 51 IV rank.
Oh, okay, that's good. There's no earnings in the way. Okay, get in there.
Yeah.
Wait, what are you waiting for?
What are we waiting for? Get in there.
And MSTR down $1 also, sorry.
Yeah.
No, I'm so sorry. But I'm trying to get to what everybody is waiting for. That's Nvidia. Nvidia reported better than expected earnings and revenue for the fiscal fourth quarter. And they're like, and you want to know what else? They're like, for our forecast, they're like, we're going to straight up double what we already did. It's like Nvidia won an Emmy, a Grammy, an Oscar, a Tony, and a Nobel Peace Prize. And Wall Street was just kind of like, meh. I don't understand. They brought in revenue 68 billion versus 66 expected. Forecast was great. Revenue for the quarter climbed 73%. What more do you people want?
No, it's unbelievable numbers. It's a inside up move as foretold.
Yeah, he did.
But
you did foretell.
I think
it got up to around $200 or so, right?
Yeah,
it closed at 195.
205-ish in that, like after.
That would have been outside or the expected move. It got up to about 2.
No, it would have been like right at
the expected
like a $12
move.
expected move. A stock of 195
for the week.
For the
right?
week,
about $10 for the day.
Yeah, for sure. We talked about this a little bit in parallel to what happened with Google, where there's a certain point where you're like fully valued. And it feels like you've kind of got to that point here with Nvidia where, the numbers are amazing, but it's $5 trillion company and it's been choppy in this range. It's kind of, it feels like you've gotten, like you're there. It's as big as it gets in the short term.
To me, in like pop culture sense, Nvidia is this beautiful doctor that's on Love is Blind, and she has a beautiful house. She's saving lives. And the market is this dude who lives in his parents' basement with $300,000 of credit card debt who's like, you know what? I prefer women who do Pilates. That's what he said to her.
I know.
She deserves better.
Yeah.
But Nvidia is going to be a premium seller's dream, right? The IV rank was not good at 27. The expected move I thought was extremely low.
Yeah.
At $10, $12.
You did point that out.
Yeah. So for me, the market had it priced perfectly. We talked about upside risk being 1, downside risk being 2. That was kind of how we looked at the whole thing. We both thought it was going to be probably to the upside if it was going to do anything, and it really didn't do anything. So it works out pretty good.
Yeah.
Well, we'll see. Maybe if there's post-earnings still juice in Nvidia, but probably not.
If I could add one thing,
yes.
If the market hadn't rebounded back to basically all-time highs, and
you probably had a $10 up move.
Right.
Well, but it did the day before because you asked. You're like, we're all
kind of baked in. It's
Spider-Man.
Like Spider-Man. You're a little late.
But yeah, all right.
Yeah.
Hey, other earnings. Investors have been hammering software stocks in recent weeks, and Salesforce results did come in line with analyst expectations, but the software company's full-year revenue picture did not. Salesforce did bring in revenue of $11.2 billion versus $11.18. Their revenue grew 12% year over year, but their guidance disappointed CRM.
Yeah, this one seemed a little. There were a couple they tweeted from the company Twitter account, and it was like we're buying back stock. See, we're not scared of AI. And it's like, okay, do you have like a gun to your head here? Like while you're posting this?
It's like, are you cool?
Yeah, it's like, are you okay? And a lot of those, Nvidia had a buyback too, announced more of a buyback. But those buybacks are there. It's not like that money goes in right like today. It's not like they say, okay, we're going to buy 20 billion of stock and I'm going to buy it right now. It's over a period of time and it's subject to change.
Right.
Those things like you could put that number out, and I think that's kind of the feeling that I had. CRM not looking great. That stock is basically unchanged. Maybe it's bottoming now, but of the software stocks, that one looks about as bad as it can get.
Well, hold your opinion because Snowflake expects annual product revenue estimates above estimates as AI boosts demand. Snowflake had their earnings last night, and they made their agentic platform available in September, and they expect products revenue of $5.6 billion for the fiscal year ending in 2027. Their first quarter revenue forecast came in at $1.26 billion to $1.27, and that was above estimates.
What do you think about that? Snowflake up around $1 last time I looked. Now it's up $2 or $3, but
yeah, these have been a premium selling dream.
They have been. This is have an Ivy rank of 82.
Oh, wow.
Yeah, huge expected move. I don't know, $18, $20, something like that.
Yeah, and we talked about Workday yesterday. Mm-hmm. That stock went from down 10% to basically unchanged.
Yeah.
By the end of the day.
Crazy.
Which is nuts.
We use Workday here.
Yeah.
That one is another one. I hate that platform.
Well, here's another oldie but a goodie, Zoom. Zoom had earnings.
Zoom.
Yeah,
Golly, golly.
Zoom, golly, golly. Zoom forecast quarterly profit below Wall Street estimates, signaling intense competition and a cautious spending environment could continue to weigh on its earnings. Their revenue came in at $489 million.
Down around $4 near its lows. I mean, it started the year closer to 96. It's trading around 81 this morning, closed at 85. Still inside the expected move, but on the low end of a trade. Maybe something to look at for post-earnings trades, for Johnny trades. We'll see.
Sure.
I mean, the markets in Zoom, you're going to be looking at April are not good. I mean,
right.
They're about 70, 80 cents wide, but maybe they'll tighten up today after earnings.
There was a moment where it got caught up in the Anthropic stuff because I think they had some piece in the funding, early round funding in Anthropic. So I know. Like they own, they put like 100 million or so some number in Anthropic early on that is probably worth.
I did remember,
a decent sum of money. But that has since worn off. That was the move really that it had from like 80 to almost 100 about a month ago, like early 2026. So kind of giving that back up. I don't know, just some context to the stock.
Newer IPO Chime, CHYM, the fintech firm, forecasts 2026 revenue above Wall Street estimates, helped by strong demand for its digital banking products. Chime expects full-year revenue between $2.63 billion and $2.67. Damn, didn't know you had it like that, Chime. 6.7.
Good job, Adi.
Do you ever trade Chime?
I think I've traded this once.
Okay.
Let's see when I traded this.
CHYM, 46 Ivy rank is pretty good. Stock's up about $1 and a half.
Let's see. I traded this.
Doesn't have weekly options.
July of last year.
Oh, wow.
Short put spread, the 30-20.
The 30-20, so you did a wide, $10 wide put spread.
Yeah, it's $10 wide put spread.
Did you make any money on it? Did you close?
$75.
Hey.
Nice.
Close it at $225.
Nice, because you could sell that spread now for probably around $8.
And that's the order chains for you. Nice little feature in the platform. I can go back 365 days, see this Johnny little put spread that I banked.
That's awesome.
Good job. Better buyback than sell.
Yeah.
Chime says that AI helped it cut costs by nearly 30%. So good job. Yeah. Good job out of them. C3 AI, so the best ticker symbol ever, AI, is cutting 26% of its global staff under the new CEO's restructuring push. Have you been trading AI at all? This particular ticker.
If you are OpenAI, there's probably something here that you could like cannibalize, let run and make a couple dollars off. But at a $1.5 billion market cap, if you're OpenAI, you got to buy this.
So, because you want the ticker?
You want the ticker?
Yeah.
I mean, come on.
And because Open Door is open.
Yeah.
Right. So they don't, I don't know what they're going to be. Like, because you got AI and Open is taken. So
OPAI.
Ope, like Midwesterner, like Ope. Ope, let me scooch past you.
So I don't know. I think that's
How are the markets in AI?
junk. It's a $7 stock here, so it's kind of just a call option.
If you believe the hype, you buy it. If you don't, you probably do
markets
nothing.
are not horrible to be. Well, I'm looking at pre-markets down, 26%, 30%. So
yeah, well, from $10 to $7, right?
big move.
Yeah.
President Trump will meet with executives from Amazon, Google, Meta, Microsoft, xAI, Oracle, and OpenAI at the White House next week, and all of the big tech leaders will sign a pledge to supply their own power for data centers. I don't hate anything about this. Like, stop making my bills so dang expensive. I'm a tiny lady. I don't use that much electricity.
Well,
but
you need a lot more heat because it's hard to keep you warm. You don't have as much. That's
true. That's true. But what are your thoughts on this? Any utility plays in this that you see?
The utility plays have gone banana land. GV. I look at is at almost $900.
Oh my goodness!
VST is another one of the data center power play type stocks.
And they had earnings this morning.
It had earnings this morning. It's up like $3 and change, kind of choppy around the 175 handle. I mean, I think this is great. Yeah, it makes sense. We shouldn't be subsidizing their
$1 trillion companies?
Yes,
we absolutely should not.
Yeah.
They should be paying me.
Yes.
Amazon's $50 billion OpenAI investment may depend on IPO or AGI. Oh, not it being conditional. Amazon's plan to invest that $50 billion in OpenAI could depend on whether or not the AI developer goes public or achieves artificial general intelligence milestone. Under the terms still being negotiated, Amazon would invest $15 billion upfront, with an additional $35 billion being contingent on the Microsoft-backed company hitting AGI milestone, which of course no one has hit yet. But what are you doing in Amazon? And are they smart to structure their funding like this?
I will say the bounce in Amazon from 200 to 210 has been a welcome addition to my long delta. I took off a call diagonal spread yesterday and reduced some of my delta overall. I'm just short a strangle, slightly long leaning. I mean, I think this is going to be more common, now that we've already thrown all the free money.
Right. Right.
Now they're starting.
And now that investors are kind of getting mad about the CapEx spend, they're like, hey.
Everything's going to be a little bit more okay, we'll give you into the next 100, but there's a little, you're going to have to pay this one back.
Okay, strings attached.
Strings attached, yeah. And this is how, you make a deal with the devil, which are these big companies. So,
what do you got going on in Microsoft? Amazon, Microsoft, how about for you, Bat?
We've been trying to buy the dip a little bit in Microsoft. It's been working a little bit. We can use a little bit more. I mean, this was $385 a couple of days ago. It's $400 now. Back near the range. Volatility's come in a little bit. IB rank at 31. So Microsoft has been behaving. Amazon been doing around the same, maybe even a little bit better.
Yeah.
Amazon rank is down to 21 though. Yep.
Baidu, which had earnings this morning, but the stock's swift $11 billion reduction in market cap shows the company is still struggling to meet AI hype. The 20% slide in Baidu shares over the past month serves as a crucial reminder for companies in China's rapidly intensifying AI race. Investors are demanding tangible results. What is Baidu doing this morning?
This is just another testament to how goofy it is to trade any of these stocks. Baidu's down like
AI stocks or China stocks?
The China stocks. There was you've had so many different they, basically made the AI. Remember the DeepSeek stuff?
Sure, right. It blew up the market for.
Yeah, broke the market for a second. And then it was this isn't real. It's, coming from China. So it's I don't know how
it's real, but.
It's down $5. This stock from its highs of 160 and change down to 127. Ivy rank of 60 is good. Maybe a little post earnings.
If I put a tasty trade sticker on the back of here and I said, hey, we just built a phone. That's what it is. That's how real that was.
Oh, shots fired. I think this might be my favorite entry of a headline in 2026. One man bet his entire life savings against Elon Musk, and he won. This is a crazy story. A 37-year-old tax economist named Alan Cole used prediction markets to wager $342,000 that basically the government spending would continue to go up after Musk claimed that he was going to have Doge come in and reduce everything. And this guy was like, I know you're friggin' lying. I'm all in. And he kept betting and betting and betting, and they all cashed out. Props to that man and his giant cojones. He ultimately cashed out for a total of $470,000, netting a total profit of more than $128,000 or 37%.
Unbelievable. That's great.
I love it.
Yeah, no, I mean,
I love it when
put your money where your
pettiness.
mouth is.
Yeah, when pettiness pays off.
Yeah.
You got to get to it. But what's Tesla doing if you want to be with Elon?
It's wild because I was talking about this with Vecchio on the close yesterday, and we talked about it a little bit too. Tesla implied volatility is at basically the lows of any time I can remember.
It's like 3, right? Or something?
Ivy rank is 1.
Oh,
the actual implied volatility at 44.8 in March.
Which is good relative to other stocks. Not good till...
But not Tesla. Like,
Right.
it's not what it's usually a stock that has like 60, 70, 80% implied volatility. So I'm like, it's a little weird to see that. And it's still on the top 20 list every single morning. So that's my only anecdote. I don't have a position.
Staying in the prediction market space, an editor for YouTube's most popular creator, Mr. Beast, has been accused by prediction market Kalshi of insider trading. After an investigation, Kalshi found a reasonable cause to believe the editor had used non-public insider information about Mr. Beast videos to inform his betting on Mr. Beast related
like $4,000
contracts or something.
Like one on it. This is the swamp, right? So like somebody like Nancy sits on the sidelines and throws this one out there as a gift.
Yeah.
Here's your gift.
Yeah. I don't know. I mean, if you had insider information and you were going to do this, would you do it for $4,000? I mean, I get it. It's
that's all you got.
But maybe that's all he had. Like, pay your employees, Mr. Beast.
So they got this guy for $4,000. Like, big whoop. You know, come on. Way worse stuff out there.
Here's something interesting. The battle to bring restaurant reservations online has been brewing for more than a decade between companies Resy and OpenTable. But now DoorDash, Uber Eats, and credit card partnerships are ramping up the market and share grab. Starting this summer, Resy is integrating 5,000 eateries, bars, and wineries onto its platform, which is tied to American Express. DoorDash, the new entry, they announced in June its $1.2 billion acquisition of 7 rooms. And then Uber Eats and Booking Holdings and OpenTable announced a separate partnership. But it's like, can you imagine like being at dinner and you're like, ooh, this restaurant is so nice. Where'd you get the reservations? DoorDash.
I don't know. It just seems like it's going to get harder to go to like these restaurants. That's all.
Well, like going out has become so easy, but like there's no like middle of the road anymore. Either it's really like super expensive or like.
Except for his $30 steak that he goes for.
I got a lot of people Frankie wrote me back, said Boobies is one of the best steak sandwiches he's ever had.
Boobies?
And Niles, Boobys. Boobies.
Okay.
Yeah. It's been around forever. I think it's been around 30, 40 years. Blue and white building, phenomenal. If you're ever in Niles, check it out. Drive in, drive out.
Okay, there you go. Anything going on in DoorDash or
DoorDash? $173 on its lows, but off of its lows. I mean, you would make fun of me if I said it was on its lows, off of its lows back in the day. This was $165 stocks, $173, but it was $280, a couple months ago.
Yeah. A lot of these software names had a nice bounce yesterday. Good to see.
Yep.
Panera Equity, after it's languishing after a private equity company built or invested and then took the company straight to the dumpster. But they're trying to fight back. They are releasing their first ever value menu with mix and match deals. See, what happened with Panera is the prices got more expensive, but the servings got smaller. And like, I'm a Panera girly. Like, I love Panera,
I
but
thought they always did the half and half. Can you?
they do. They always
no,
did
it's-
have like a you pick two. They had a you pick two menu or whatever. But this is
Those sandwiches are not like
this is inspired by the you pick two, but the mix and match is 10 items and they're $4.99. So
interesting.
but they're this
Been to
this
Panera.
big.
It is not $4.99. I'm gonna
No, this is new, sweetie. So retract your thing, Boomer.
sold.
That I'm lying because it doesn't.
Sold.
You didn't
sold.
experience.
Sold.
So you're mad that when you went before they had announced this that you didn't get it?
It's no way it's $4.99 because it was like $15 or something.
Again, it hasn't rolled out yet.
Okay, again, I'm telling you, it's going to be a mini sandwich
Be a little
and a
bite.
mini
Yeah, a
thing
little
of
bite.
I know the prices are expensive. It is expensive. I will give you that.
no,
It's expensive.
no.
Here's something I have to ask why. Johnsonville and Keurig Dr. Pepper are teaming up to launch a fizzy glizzy. No. America's favorite sausage will now taste like the mysterious flavor of Dr. Pepper. Do you want to pop one of these bad boys on the grill? A fizzy glizzy.
Dr. Pepper is actually, with like a barbecue sauce, you put a little Dr. Pepper in.
Yeah.
It's a nice little addition.
It is a 23 flavor
There's
blend.
a little bit of resurgent with Dr. Pepper, I got to say, with the 16-year-old crowd.
Really?
Well,
Yeah.
they made a song on TikTok.
that what it is?
A creator made a viral jingle, and so then Dr. Pepper paid her $2 million.
Wow.
For the jingle. So now everyone is trying to make jingles. It's the most hilarious content
bring back berries and cream.
online.
Do you remember berries and cream?
Yeah,
Berries and
berries and cream.
That was the best.
Thank you. Yeah.
But do you want a fizzy glizzy?
I don't know. Dr. Pepper's got a bad rap ever since I was a kid. Our rumor was it was prune juice in there. So that was our urban myth. I can't, don't shoot.
Wow, I
from
don't
You know
that.
what I go wild for?
What?
Mr. Pibb.
Mr. Pibb.
That's in the same realm.
I guess
You only
so.
get it at like a movie theater
Now.
now.
Yes.
I think it's gone.
Yes.
It's like RC. It's like
Yeah, RC back in the day was for the poor kids like me who couldn't afford Coke.
Do you want me to get a violin? I don't have one under here. I'm so sorry. I don't know how I feel about this. I don't like when things explode in my mouth. Finally today for my video.
I just learned something I did not know for
Finally
15
today for my
years.
video.
I always wondered.
For my viral video.
damn.
This lady is a goat, is an icon. A lot of content creators do like man on the street interviews, and you never know what you're gonna get in like a man on the street interview because you're just interviewing like random people. But this lady, I think it's like in a New York subway station. So the guy asked, "Would you rather be a side chick to an NBA player or a wife, but of an average man?" So that was the question, and her answer. How do I subscribe to her newsletter? Watch this.
Would you rather be a side chick to an NBA player or a wife to an average man?
Side chick to an NBA player. For
Side chick?
sure. For sure. I'm married to an average man. I'm done with that.
Why do you pick the side chick though?
I'm fine because there's no commitment. You get all the fun, good dinners, nice hotels.
She's got a Disneyland shirt on.
It's fine.
She's
Side
not.
chick works.
Would you rather be a side chick?
Shit, no pause. For me, it was the no hesitation.
Yeah, just like straight up. I've been thinking. I'm glad you asked. I've been thinking about this.
You're like the dude I got back at the
I've been
crib.
putting it out there.
Yeah.
The dude back at the crib, straight trash.
Yeah, that chick has seen some things. Yeah.
She's like, fly me out.
ready for that.
Fly me. She's ready to get flown out and then blown out.
problem. Wow.
Wow, I've lost
She's a queen.
hope for all
Love that for her.
humanity.
Yeah.
Oof.
Follow that up.
Yeah, I'm gonna have to follow with a commercial break and get my composure. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. We'll ask Nick a similar question. We'll be back in 90 seconds with Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, confirm and send on this Thursday, February 26th. But before we do, please, let's take a look at the market. Do you think you were going to wake up before Nvidia came out with their earnings, seeing the market up 8?
No.
I thought it would be?
I thought it was going to be
28 or 28 one way or the other, right? I mean, a 30-handle move one way or the other.
Yeah, I thought we would be at 7,000. I thought that yesterday was going to be inside up for Nvidia, which I think we're getting.
Yeah.
Depends on where we open. But I figured that after Nvidia came off the table, it would be a little bit of a risk-on move. You'd have volatility get crushed, and it would kind of be just a little bit of a grind higher, like an inside up day in the market, which is like 30 points. I mean, that would
right. You've got an inside up day, but up 8 handles.
Yeah,
is kind
it's
of
not
like,
as much as I.
But it is at the high end of its range, which I think is for the night move, which I think is a little unusual. I mean, maybe after yesterday's move higher, we're just taking a little bit of a breather here. We had about a 30-handle move down to 69.40, up to 69.70, where we are right now. You just mentioned Nvidia, so I'll get right to it. I saw Nvidia up around 202. You said 205. Certainly over 200 at one point. Yeah. Looking at the highs from yesterday, it was 197, or from today, it's about 197 and change. NASDAQ up 15. It was the leader in the clubhouse yesterday for the first time in a while. It's up 13, basically unchanged. Russell basically unchanged, up 5. It was kind of the weakest of the group, with the Dow up 100. Volatility, 1931, really slashing through that 20 vol number all the way down to and flirting with 1930 on the low. As you can see here, we're back in that range of all the work that you did over the last couple of days of managing, rolling up and down. You really got paid, not yesterday, but the day before, quite nicely. And then it became a little bit of delta risk with the move that we had yesterday being outside the expected move for the E-mini S&Ps. Volatility sitting at 1930. Bonds going nowhere quickly, sideways at the higher end of the range here. Bitcoin finally caught itself a little bit of a bid, traded over 70,000 for a second there. It's trading at 68.2 right now, about $500 off of its recent highs. Ethereum actually had a better day than Bitcoin on a percentage basis, over 2,000 now, 2,065. Oil down $1. I think that helps most of Tasty Nation. We've been playing that slightly lower and selling some premium. Ivy rank of 76 is pretty good in there. Hopefully that'll come in a little bit with this down move. Remember, with commodity futures, as things go lower, usually volatility contracts. As you can see, it's been going higher. Volatility has been.
That's kind of the oil is a little bit the move today. So I was talking to Vecchio as well about kind of the Iran situation hanging over our heads, and he was talking about the EIA report, which TP also mentioned yesterday. With his trade, huge build. So there's tons of oil stockpiled. So you would think prices would go down. You got lots of supply, price goes down. And it's kind of been held up.
But that's the macro view, which I love it when it works. And it works 50% of the time, and it doesn't work 50% of the time.
And my question is, the dollar move that you're having today, is that telling you because are you playing it as the build in stocks, in oil reserves, or is it that the Iran situation is kind of coming off the table a little bit?
I'm not bright enough to figure that stuff out, and I just try
If the Iran situation comes off the table, though, you got to expect it to go down pretty significantly.
I've been trading it from the short side, not expecting it to go much higher than where it is. Ivy rank is high. It's been paying me a premium. If I get right, I consider myself just lucky. I don't consider myself good. Gold down $40, just about 0.75% move, and silver down 4.25%. Now that gold silver ratio, which we've been talking a lot about, using /MGC and /SIL, just about a small-ish product that you can get on a relationship. We usually like to buy it, just to clarify for everybody at home, we usually like to buy gold and sell silver. We do that on a 1-to-2 ratio. And we usually do it when silver overperforms gold.
Yeah.
Why? Because that relationship is trading around 59 right now. As Nick explained a little bit this morning, it was trading around 100. That's how much silver goes into gold. It was trading around 100. It got all the way down to 45, just rounding, and it's back to 59. We might look to do it. Well, we're not looking to sell it here with silver underperforming gold. Typically, that's not the way we do it. Now, if silver goes down 10% and gold doesn't move, maybe we'll look to do something on the opposite side of the trade. But usually we're doing it the other way. So it would be a no trade right now for us. Would you agree?
Agreed. You're kind of in the middle of the range.
Yeah, you're kind of in the middle of the range, kind of in no man's land.
Yeah, at least for the moment. And this has moved significantly.
Subject to change. It's change in a half an hour. Sure. Net gas down 7.5 cents. That's a big move, 2.5% on top of some big moves to the downside. About as low as it's been in some time. Maybe scoopy a little bit net gas on something. What do you think?
Yeah.
I mean, it's hard. UNG, you can go there. It's a tough product.
I'd rather just sell like a put spread in the futures.
Yeah, totally agree with you there. Nvidia was the earnings. You had Snow for earnings. Snow is up around $4. It was up around $1 earlier this morning. Baidu was the other one, down around $4 or $5. CRM was down $6 earlier. It looks like it's only down around $4-ish right now. XYZ, Intuit, Autodesk, Dell, just to name a few. You ready to get a little bit of confirm and send on this Thursday, February 26th?
Sure.
Let's do it.
You go.
Is it profitable long term to double down on 0 days that are going against you? I've been doing this for the last few weeks, and it's been paying off.
So I don't know if we've looked at this specifically. I know we've done somewhere like if it works really quick in the first, I think 10 or 11 a.m. is really central. Is really the spot where if you are out of your trade at that point, recentering to the same trade kind of played out.
Yeah.
But I haven't looked at this, or we haven't looked at this specifically of like, and it's hard to say losing. Is it losing to the upside or downside? There's a lot of variables there. But I would say generally, for my trading, it's one and done. It's just not something that's like a core of my trading. If you're trading this as kind of your core thing, I think you have to be adding. Like there's a lot of people that trade this way where, they'll put on their initial tranche. And as the market moves, you're adding to that position. Hopefully, like if volatility is changing in your favor and increasing, you're adding more to this position. And you're effectively butterflying the whole range of the position. It's very capital intensive. You can't do that with $5,000 or $10,000 or $20,000 account. You have to have a larger size account where you can, your first initial position is, a fifth of your total size that you're going to do for the day. Where you can butterfly around this whole movement, and each trade is kind of, it goes into the whole position. It's not each trade. You're not looking at each trade as like, I'm taking 20% from that one and 25 from
that
this
is correct.
one. It's a whole position. It's a whole position.
In a day.
In a day. You're managing the range and trading the range, not the positions themselves, not the each entry themselves, which is a trader. That's trading.
That's correct.
Putting the SPX trade on and putting a GTC in, that's just kind of like a passive, taking a shot day to day.
Yes.
If you're doing I'm going to add to it against, the position goes against me and I'm adding a new position, you're trading around that position.
Yes.
It's almost like scalping.
It is almost like scalping.
It's volatility-based scalping is what it is.
Yeah, I think this question stems from a lot that goes on X and formerly known as Twitter. My friend Jack, who I've met, does this a lot, and Eric is another guy out there who does this a lot. I've met both of them. They are
great peeps, amazing peeps, and they crush it. They're amazing,
and they crush it. I've watched Jack get concentration risk. You know what I mean?
For sure. And sometimes you take some big hits.
Yes. So take it with a grain of salt. 0 days, we've embraced them from our research. We try to take it from a very conservative point of view, taking 10 to 25 to 50% at max, doing it before noon, trying to throw out a lot of the variables just to make a couple of dollars to pay the electric bill, kind of thing. Other people are looking at it to, I want to maximize my return to its fullest, and I'm willing to watch it all day long and work it and add and keep adding and keep adding. And every time you add, you're adding more risk. And they are willing to take that huge gain and that huge loss. And they've both had them both ways. So trade at your own risk. I don't think this is something that is sustainable for everyone. I'm going to go back and tell you a quick story about my buddy Kenny Weiss, who I absolutely love, and I haven't talked to in a long time. And he's
got you started.
Got me started with my cousin John Downey, who passed. May he rest in peace. I mean, a lot of people help me, and as we try to help a lot of people here. When he left the floor in 1990, which I thought was quite early to go upstairs and be an upstairs trader, and I thought he was a phenomenal floor trader. I mean, I knew he was a phenomenal floor trader. I said, you will be back in a year. And he was established. And I said, there's no way you are going to give up the edge from the floor. And I stayed for another 15 years on the floor. There's no way that you're going to give up that edge and go upstairs. And he never came back. So I'm completely wrong about a lot of things a lot of times. And this, you could find your niche. And if they found their niche and it works for you, you got to run with it, man.
Yeah.
You got to run with it because life-changing.
Yeah.
Next question, please.
Great.
Yep.
Story there. 1990 was also a great year.
Yes.
If you remember, something happened that year.
You were born.
There you go.
I don't forget.
Pull that one out of you. What is the relevance of volume when assessing the market action? I often hear you guys talk about the volume of ES, but I'm not sure if it means anything with respect to price action.
On that note, volume, yes, it was pretty light.
Very light.
Under a million.
Under a million. It was like 800. I think think
we got like 300,000 cars traded at the last hour of the day.
Nothing.
Which is nothing. Before that, we had about 700,000. We didn't even get to 1 million. I think it's just banter between the two of us, just content to talk about. But it's good to know.
Yeah.
I don't think there's no way of making money. Like if we're at market highs and volume is low, do we sell off by 3% or do we go higher by 3%? I don't think there's something you can look at like that.
Yeah, I mean, a lot of times, just generally speaking, on down days, you're going to see more volume than on up days. And that's just usually because there's more activity, there's more volatility. Volatility and volume are going to go hand in hand.
Yeah.
So, I mean, I think that's part of it. I just think it's also kind of a market awareness thing. Like, it's like, you usually when things are moving, you expect to see a lot of volume. And yesterday was a low volume day on kind of a big upside move. On a day where it felt like a lot of people were kind of waiting for this day. You figure there'd be more like kind of flattening out of positioning. And it just didn't feel like that.
No, it didn't.
That's where I go with it. That's why I'm watching it.
Very good. Next one, please. How do you decide if you want to do a post-earnings trade? For example, would you do a trade in Nvidia this morning?
So I think it'll depend on where volatility is and where the stock.
Well, it's been low in Nvidia.
Yeah.
Let's go high level for a quick second. The stock's unchanged, near the high end of its range. It's got low IV rank. Do you think you'll put a post-earnings trade on in there?
It'll be interesting to see where my position. I'm kind of like neutral / slightly long, so I think I'll be taking positions off rather than starting new ones. Maybe I'll look at like a longer duration, diagonal or something like that. I think that's it's really gonna depend on what happens with volatility.
Yep.
Typically, if there's a big move in either direction and volatility stays bid, I'm more likely to put something on. Like the non-movement where you get a vol crush, it's gonna be you have to be directional with the trade. It's not like a short premium trade.
Yep. Totally agree. I don't have too much to add there. On the surface, if a stock has a low IV rank and I didn't have an existing position, I probably wouldn't be looking to put a post-earnings trade on. Now, if it had a high IV rank and that volatility didn't come in as much, I might be looking to put on a post-earnings trade. I like to do a lot of post-earnings trades for option trades today because I like to avoid the earnings themselves. So, a little subjective. Nvidia has tight liquid markets, so it certainly makes it a play. And if you had a directional bias, I'd be all in. Next one, please.
When would you choose to use a skewed strangle or iron condor over a centered strangle or iron condor? When do you play into skew?
I mean, I think it comes down to a little bit how much buying power I want to use. If it's an IV rank that's high, I'll use more buying power. If it's not, I'll use it low. Do I have a directional bias? I mean, that's probably the biggest key here. If you're using a skewed strangle, I'm assuming you're using it for directional bias, maybe a call closer at the money and a put further out of the money, or maybe you're taking advantage of call skew or put skew, where if there's call skew, you can go much further out of the money with your call and collect the same amount of premium as your put. So it would be delta neutral but skewed to the upside. I think it just goes to your personal directional bias. That's the way I would answer this.
Well said.
All right, let's take a quick 90-second break and come back. I never asked you that question because I protected you. We'll be back in 90 seconds. Listen to Tasty Live. We got more after this with the trades from the research team. We're back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with trades from the research team. Who is our first researcher? Starting out smooth as glass. That's right, my man. How are you, Gad?
I'm good. Everything's good.
Good.
Do you miss your man, Sahil?
Yeah, we talk.
I miss him.
Yeah, I call him every
There are so many ways to communicate today that there's no reason why you shouldn't be like texting with your brother every day or your dad or anything like that.
Oh yeah? Well, you know, the phone, this phone that you have, it goes two ways. Okay? It's a two-way thing where my text goes to you, your text goes to me. It's a two-way thing.
Your mother or anybody, you know, just a little check-in. Hey, how you feeling, old man? You know, that kind of thing.
I know. We text each other.
That's right.
I don't reach out to him.
That's right.
I reach out to his dad.
Okay.
And then, or his mom. So
love it.
I
love it.
Is he having fun?
So much fun. But he got sick.
He did?
Yeah, because of the air, the pollution.
The air?
Yeah.
Air, it's the air, food. See, that's
food.
scary because I've always wanted to go to India because I love Indian food.
Me too.
I think I would survive it. But if
you got a lot of confidence, I think your parents instilled that in you. I mean, a 5-second 40-yard dash with those flat guinea goo feet you got, and then, I mean, unbelievable.
But where I was going with that is if Shark is having problems as a descendant.
Yeah.
If he's having problems,
more American than you.
Exactly.
I guess. But if he's having problems, I'm going to have problems.
Yeah.
So I don't know if I can do it.
You just got to stay in those bougie 5-star, Michelin hotel, Condé Nast kind of thing, like the, prior administrations. You'll be.
My dad went there for school, for medical school, went for India. So he told us it was good, it was great. Right. So
is he better now? Has he recovered?
Yeah. He's better now.
Good. I just want him to recover. Right now, his father is so disappointed in him that he got sick. Yeah. So weak. What do you got for us, my man? You got 2 trades, I heard.
I got 2 trades.
Oh, man, you're an overperformer. God.
Oh, my God. So
Amazon.
Yeah. Short push trade.
I'm with it.
Yeah.
You have that on, right?
I like it. Yeah,
have it already?
We can add to it. We have a pretty small position.
Yeah, this is what I have right now, and it's pretty, decent.
Yeah, stock has had a little bit of a bounce from 200-ish, but it has not participated in the upside at all.
The upside, yeah.
We've all the stats around the last 4 or 5 year performance basically gone sideways the entire time.
Exactly,
so I think this is an interesting one.
So even the next one will be the same kind of Microsoft.
we're turning bullish. I love it. I love it. We got the scare out of the way.
Yeah, so this is Meta. So the Meta also, I'm doing the same.
Okay.
Yeah, so I'm doing also post spread 620, 630.
All right.
50 days out.
I like it.
The IVR is not great.
No, the IVR is 17, but you're kind of mitigating that IV rank by doing a vertical spread. I mean, I don't even know if you'd be able to get
the credit.
Like if you'd be able to go a strike further out of the money with high volatility, maybe extremely high volatility. To collect 1/3 the width of strikes, you'd probably be in the same place in Meta. And Meta hasn't cooperated, so with the market is what I'm saying. So if you're thinking the market's going to go sideways or a little bit lower and these Mag 7 are catch a little bit of a bid, I mean, it's a relatively cheap way of playing it. I think the defensive play on here, once you put this on, if it's going against you, you sell a $10 wide call spread.
Yeah.
You're not using any extra buying power, and you try to collect another $1.50, $2, and then you got a 50-50 shot.
Exactly.
The stock.
Also, you have enough from 50 days out. You have enough from.
Yeah, you have time.
Yeah.
Time to be right.
We'll look at one of these for Johnny trades.
Yes, yes. And managing it early might be another key too. I mean, you don't have to wait to 50% or even 30 some odd percent. You could take $1 out of this, 50 to $1 on this, 25 to 30 some odd percent.
I like it.
Good job, my man. Good job. And thank you for the update on Sahil. May he.
But Nick, you have to go there. It's a great country, so.
All right. I have it on my list.
Me too. I have it on my list. I will go there one time. So.
Us three, me, you, and Shark.
Yeah.
We'll have Shark will be our guide.
Yeah.
He'll help us.
Why not?
Yeah. Big Shark will.
He would go in a heartbeat. He'd drop everything and go with you. For sure. For sure. He's that kind of a man.
2 sharks for extended
the price of one.
Time.
Whoa.
Who's our next researcher?
Okay.
Yeah.
Fire me up, Kai. Fire me up.
How are you doing, sir?
It's even keel. He's even keel. I like it. Come
on. I'm charmed. I'm blessed. You kidding me? How am I doing? Everything's great, man. No complaints. You stay healthy.
Thank you.
When you're in your 60s, you stay healthy. That's the best thing you can look for.
Yeah. Are you fast? Are you a fast runner?
No, never.
That was a quick answer too.
You're not a fast runner?
I can see you being pretty quick.
I'm okay.
Yeah.
Well, now you're okay. What changed in the last 8 seconds?
Depends on who I compete against.
Yeah. Okay. Because we were having that debate this morning of just like 40-yard dash. Actually, now that we're thinking about it, the completion of the 40-yard dash would probably be the first hurdle of just like being able to do that, not to injure yourself on the way. But we were thinking about time. Like it could.
I'm going to take the sleeper, Kai.
I feel like he would. He's got some quickness.
I think he's so slow playing us. He likes to beat me for money occasionally, so I think he's just slow playing me.
Okay. All right.
All right, what do you got for us, Kai?
All right, so RKLB.
Who?
Rocket Lab.
RKLB.
Okay.
Earnings trade.
Okay.
Ooh. I took the idea from Nick.
Ooh, I like
Diagonal.
Yeah.
Okay, Rocket.
It does have earnings after the close. April. I'm looking at April markers. They're about 50 cents wide. But what are you doing here? You're going to do a one-day trade, right?
Yeah. Mm-hmm. And I use April. Okay. What do you normally use? You use it March or April?
It depends. Something like this, I'd probably go to April just because it's.
You want to roll, probably.
Yeah, if you want to roll something like that. Okay, what are you doing here?
Yeah, I'm actually
as opposed to doing the March Feb, which would be 21 days in between the two. You're going further out where you got basically 49 days.
Yeah.
So if you get into trouble, you can roll is what the point you're making here.
Yeah. So I'm choosing roughly 40 delta.
Okay.
For both calls.
Okay, so you're doing kind of like a delta neutral diagonal, but it's different strikes.
Different strikes, yeah.
Okay, this is an interesting one. It's kind of like it's almost like a calendar spread because you're delta neutral.
Yeah, but as long as the delta is not too bearish, I'm fine with this.
Yeah.
I'm just looking at the break-even point on both sides.
Yeah.
I think it's decent for the expect move. Was it expect move $6 or $7? I don't remember.
$7.
$7, right? Yeah.
200%, 230% implied volatility.
Yeah.
Yeah, it's big. I mean, the rest of the monthly implied volatility is wrapped around, I'll round down about 90, which is basically saying Rocket Labs is going to double or get close to zero in the next year.
Yeah.
So this is one with risk to it.
Yeah.
I like the defined risk nature of the overall trade.
I like this play. I checked the risk profile. I think it's pretty interesting.
Yeah.
I haven't played the diagonal for earnings for quite a while.
Yeah.
Destined to fail. Now that you said you like it, that's just the way. It's just the way it happens. It's just the way it happens.
Right. Yeah.
All right, good job of you. This is a stock that has sold off from around $100 to $70, lost about 30%.
Yeah.
It is off of its lows in December. What are you doing?
No, that was some
future scalp.
In December, it's probably a roll for me. In December, when it was around $40, so that's what I mean by being cut in half or doubling in a very short period.
A lot of stocks are cut in half.
The volatility is there for a reason.
Yeah.
All right, awesome, man. Good job out of you. Good job out of you.
One more.
One more. Yeah, one more.
Oh, you got two also?
Yeah.
Oh, I didn't know we were double fisted. Beautiful. Good job out of you.
See, we're all bullish in the Mac 7.
Yeah, this is going to be horrible for all of us. this is going to end horribly.
This one is sort of bullish. It looks like
This is the most underperformed in the Mac 7. Right?
Yeah, the wider put spread to tighter call spread. So you
$30 wide to
$15 on the call side. Yeah, slightly larger delta on the put side. So it's kind of a bullish, but it's delta is pretty small.
Yeah, it's like a dynamic iron condor where because you have upside skew, so your put spread is wider. You have more risk to the downside. You have downside skew, less.
You have downside risk more than the upside risk, obviously, just by the width of the spreads that you're doing here. It's still a high probability trade wrapped around 60 some odd percent. I kind of with a $400 stock.
Yeah.
I think going wider, we've done the research on it.
IRA account type trade.
Yeah.
If you worry the buying power is too high, you can narrow it down to $25 or $20 to the downside and $10 to the upside, right?
Yeah.
Yeah. I mean, well, your max loss is around what is it about
$2,400
power or so
for this one.
Yeah.
But if you want to play small, just make it a spread a little bit tighter.
Right. You'll collect a little bit less, but that's a decent credit. $600 on $24. Yeah. I mean, that's relatively high, actually. I mean, if you do a $10 wide and you collect $3 with a similar type
that's
buying power, you're almost there. You're in the same place.
This is like 25 buying power, right?
Yeah.
Slightly lower, but
slightly lower.
Yeah, considering the IVR.
But in the realm, you know what I mean? Like if you don't collect $3, you collect $280, you're there. I mean, you know what I mean?
Yeah.
Basically the same. Good job, Kai. Good job. All right, awesome. I like both sides too. Maybe even a complementary trade to what we have on. You're still putting on more risk to the downside, but you got a little bit of upside premium that you're selling.
Do you have Microsoft positions?
Oh, I'm long. Short put, call diagonal. I'm there. But,
okay.
Yeah.
And Microsoft up $1 this morning.
Woo! Needed that rally yesterday.
All right. Thank you, Kai. Thank you, Gad. Who's our next researcher? Finishing strong as we always do. Julia, what's up, Queen?
Oh, living the dream. How are you?
Living the dream too. Absolutely.
Always, every day is Christmas here.
Every day is Christmas.
Yeah.
It's Christmas is AMD being down $3. So that's what I'm looking at today, actually.
Okay. All right. You're buying dips here, I see. Oh, no. Iron Condor. Okay. Neutral.
No, I always, I don't know. I suck at making directional assumptions. So I just default to neutral for everything. It has actually been a volatile sideways over the last couple of months. Mm-hmm. So that's also kind of like playing a little bit of a factor here. If you look at the implied volatility for this one over the past more than the past couple of months at this point, it's been pretty flat, actually. So went to find risk on this one, just to be comfortable being in the trade for a good amount of time, expecting like time decay if the trend continues to probably result in more of the profit compared to an implied volatility decline. So decided to go with this one. It's down a couple bucks this morning, so this should be pretty neutral on the open. Around 20 delta is what I was aiming for. So I went the 175, 250 short strikes, and then $10 wide. The credit to BPR is like kind of beefed on this one. So that's kind of what I was thinking. And then the nice bit is that the correlation to Nvidia and then the sector as a whole is like not as high as you would expect. It's like around 0.6 for SMH and Nvidia. So you get a little bit of exposure to some of these other larger names in the space, but not a ton, not as much as you would, from trading SPY and the Qs, for example.
I like your background that you brought on. I'm going to give you a little bit more background too. I put on an AMD trade on 219 when the Ivy rank was around 36. It's 38 right now. I don't know where it's going to open this morning. I imagine it's going to open close to that. Yeah. It quickly sold off to 31 the next day on my strangle, and I was able to take about 80 cents on the strangle, collecting around $6 and change. You're collecting half of that on a iron condor. I'm just trying to put it all in perspective, just showing you that AMD volatility expands and contracts quite nicely. And I think with the way AMD has been moving, that an iron condor, decent position here, especially if Ivy rank hangs in there today. So I think it's a good find. Good job out of you, Julia. Thank you so much for coming on the show. We're going to take a quick 90-second break so we can catch the opening bell. We'll be back in 90 seconds. It's Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. We got about a minute and a half before the market opens here. Even the S&P's pretty tight range so far this morning, hanging out around up $8 when we first came on the show. They're up $2 right now. NASDAQ down 25, Russell up around 6, and the Dow up around $170. NASDAQ was leading the clubhouse yesterday. Russell's been the lead in the clubhouse the day before. It seems to rotate back and forth as we go sideways in a very kind of relatively big tight range. And I say big tight range because it's been violent to both sides, up and down. And here we are closer to our recent highs on the E-mini S&Ps, which are really over 7,000. We're 69.60 and change. So really we're over the mean of 950 here, right? Or the average of around 950. Got down to around 850 or so, but yes, we've been as low as 8. So a big range from 8 to 7 on the E-mini S&Ps, and we're sitting at 69.60. Volatility, on the other hand, has come in quite nicely here. 1933 on the volatility futures with $1,000 in roll brings us right back to that 18 area where we've been sitting for a long time. There's your opening bell. Oh, silver.
That was you.
That was me.
Did you do? You had the call ratio.
I had the call ratio spread on an SLV, put it on for around $2.45.
Look at you.
Just closed it for $1.45. Another option trade, today trade. SLV, a smaller product than any of the other futures or any other products. Decent, a great IV rank and everything like that. This was an April trade with 50 days to go. Sold it for $2.45. Probably paid too much right now. With silver down 2 and change, you could probably get a little bit better. You look at these markets, though, they trade by appointment. They are 15 cents wide, but they do seem to trade by appointment. You probably could get it a lot better than I had right now. Even the S&P's down 8. I got to be honest with you, that one got away from me. I didn't notice silver was down 6%.
Yeah, big.
It was down 4%. I figured I was in at 145.
Yeah, down another dollar from
from where I put that in. I didn't watch it, so I got. Probably cost myself 10 cents.
So I close out we did the 190, 200 crab trade in Nvidia. We actually put this one on the 19th. We did it at $5. So long the 190 in March, sold 2 of the 200s against it. We did it at 562. I just closed them at 890, $8.99, almost $9. So we took like $340 out of those.
Yeah, it's a
lot.
Yeah,
which was good. The one that we put on yesterday is about a scratch. So I'm long the 200, 215 call diagonal spread with the stock down $2. So we did that yesterday. I did that in April, March, that crab trade. It's marked at 583. So I'm actually up about 60 cents on that trade on a downside move.
Really didn't get the move right, but you got the move right in Nvidia. Nvidia down 2 and change right now.
And volatility. Too.
And volatility. It really is a volatility play on top of the directional bias for it, for sure.
Yeah.
Nice earnings trade there for you in Nvidia. Let's see what else do we have moving here. Let's go across the board and see what's bringing us to the downside here after we've been rallying the last couple of days. What is that?
Wow. That got filled way above where I put it in.
AXP here.
So I bought the dip there. Markets stink. But that I bought the dip in AXP and Visa when we had the whole Anthropic is going to take over payments as well. Visa hasn't moved as much, but AXP has bounced nicely, so it took a couple $100 out of that.
Yeah, you got filled at 1340.
I put it in at 13, which was about 40 cents off the.
Yeah, you can
40 or 50 cents off the mid.
Yeah, but you look at these options, $2 wide. That's why you can't get like a good mid price. Mid price just a moment ago was $1 lower at 1240. The stock really didn't move that much in there.
Yeah.
But yes, you are correct. You put it above the market and you got filled above that, right? Just because of the wide markets in there. So good. Let's take a look at what's moving across the board here to the downside. AVGO down $9 or so. It's got earnings later next week in the month, March 4th. Zoom down 9. BE, which has been having a rally last couple of days, selling off down around 8. Tesla down around 6. Always one of the top leaders in the clubhouse, even though the IV rank is almost 0. AMD, which Julie was just talking about a moment ago, down $5 and change. Baba down around $4, maybe with Baidu being a little bit lower too for earnings. Baidu down around 6. VST, which caught a bid yesterday, down around 5. Let's see what else we've got here. Snow up $6. Goldman Sachs up $14. SanDisk up $5. UNH, I haven't mentioned that in a while. JP Morgan both up 4. IBM catching a little bit of a bid up 3. There's Circle up $3 and change. That was a player yesterday. You got 2 indices down right now, E-mini S&P and NASDAQ. 2 indices up, Russell and the Dow. You're looking at a CRM trade that
I just did. I sold a call in CrowdStrike, which I have net long delta in because I have a call diagonal spread and I had the short put, the 350 short put that I sold into the huge down move. Stock had a nice little rally yesterday. It was rallying this morning, so I sold out a call against it, one standard deviation call on the upside at the what did I
in crowd?
Yeah, in crowd.
430.
Or 430. I sold it at $4.35. So I'm still long, but reducing a little bit of the delta there. And then CrowdStrike, we did a what's your assumption trade, small call diagonal spread. I took like $200 out of that one too, or some.
Very nice, very nice. Good job.
That was a nice little earnings move for us. We did something in Snowflake too.
We did. Snow is trading up.
I had a crab trade here.
Up by $7.
Yeah, so I'm going to take this money and run as well. I mean, these.
Look at you getting Vol Crush directionally right and Snow. You got both. Now it depends on the market.
Yeah, inside up. I mean, the inside up has been the move on a lot of these names.
Mm-hmm.
So that was a 1x2. So that was another crab trade. So I was long the 175 in April, short 2 of the 200s in the March monthly. We did that at 620. I just closed it at $10.
Very nice. Very nice.
What else we got here?
That's your Snow trade.
That was Snow. So we took a lot of risk off here.
Yeah. Well, it frees up buying power.
I mean, all of those positions were naked. We had the Nvidia, which CRM wasn't naked, but CrowdStrike was.
Mm-hmm.
So, what else we got?
Very good. And that CrowdStrike, that's just like if I extrapolate out a little bit and go back to the confirm and send on the 0-day trades. You held on to a position looking for a directional move, and now you did something against it. It's the same thing with the 0-day, where you put something on and it moves against you, and you do something else now because the landscape has changed and you're adding more risk. You added more risk by putting on that trade, but you reduced your delta. This one happened to be a positive one, or a positive offensive reduction in risk, but still, it's the same thing when you're trading 45 days or you're trading 0-day. It's just 0 days move a lot faster. Even the S&P is down 14, about as low as I've seen them all night. And you've got the Dow up 290 and change, the Russell up 10, and the NASDAQ down 150. Gold down $36, and silver back down only 4.5%. It was down around 5.5% just a moment ago. If you look at that 1x2, it's trading right around $140-ish back where I bought it. Now that silver's rallied a little bit. I didn't catch that dollar move lower. Just took the profits.
I put on the Rocket Labs diagonal into earnings.
Very nice.
For like $6. It's a $7 wide diagonal spread. And I just put on the Strangle and AMD, basically a 1 standard deviation. I did the 170, 250, and I've got the 180, 230 on as well. So my net position is like 175, 240, but that one is one that I've like rolled. It's basically a scratch.
Yep.
On that trade.
Beautiful. I mean, you already made 8 trades in 8 minutes.
Try and do a couple more here, maybe.
And we have Johnny trades coming up too, so you've got more to do here. Let's take a look at the rest of the market here. You got a tale of 2 tapes here, right? Even the S&Ps and NASDAQ down. Russell and the Dow higher. Who do you think wins?
For today?
Yeah, for today. Nvidia down $5, by the way, to 190. Cancel savior.
What is it? M2K. Want to short the Russell a little bit?
Sure, it's been moving around. I mean, the Russell with an $11 move is a fairly large move. I mean, it has a range sometimes of around $20-ish or so.
What about the Dow too? You think the Dow gets 50,000 today? I don't think so.
49.8 and change, up 300. It wouldn't be in the cards for 50,000, not yet, not today. Not with an IV rank of 22. I
got a little short Dow too. Dow and Russell.
Okay, so I guess you answered my question for me. If I said who's going to win, even the S&Ps or NASDAQ or the Dow and the Russell, you just got short both those. I was thinking
should I do a tiny bit long NASDAQ too? Doesn't matter what you think because I did it, but I want to know what you think now.
With Nvidia down $5, I think it's a good little scoop just to try. I think Nvidia is going to have a little bit more back and forth action. Maybe to get back to unchanged. Maybe that'll help the NASDAQ there. I like as a pairs trade. I like it just as a short term trade. So sure, sure, I would have no problem with that. If Nvidia was up, I would say, nah, don't look to buy the NASDAQ.
I think maybe should we add to Amazon too? I took off some long delta yesterday. I took off a diagonal spread.
In Amazon?
Yeah, I have a strangle that is 10 deltas long. Do I maybe add an extra put?
I mean, it's completely unchanged. Sure, you can do whatever you like at this point.
Like maybe the 190
managing
strike?
delta.
I mean, this will be like a different position. But yeah. Okay.
Beautiful.
I like that. What else?
What else you got over there?
What else do I have up my sleeve? That EWY is so wild.
EWY?
Yeah, South Korea.
It's a hard one to trade up $4 and change. We tried to get a little bit short there, right?
Skewed short with a strangle.
Yeah, markets. Yeah, you moved your. I remember that was a trade that viewer sent in for us, and you went even more aggressive because the stock was up $5. Now it's up another $4 from here. Even the S&P down 15, Nasdaq down 130, Russell up 9, the Dow up 250. Volatility up by 5 cents, 19.
Look at Netflix finally bailing me out here.
Netflix seems like they're coming for the pigs here, unchanged.
I just closed out a service now. I sold that put for like 330. I closed at like
230, 235. Yeah, great trade. I mean, 33% just on 33% possible.
Yeah,
profit on the trade.
Took some heat on it. It was not
a directional trade. You
scary. Those stocks looked like they were going to zero.
Yes, they did.
It wasn't a
lot of fun.
No.
Totally agree with you. You ready to take a quick break?
Sure.
All right, let's take a quick 90-second break. Bitcoin not moving too much. Oil down $1.25. Gold down 45. Silver down $4.34. Nat gas just a skosh off its lows, down 7 cents. We'll take a quick 90-second break. Nvidia, let's do that before we go. I'm so sorry, guys. Nvidia down 430 or so. We'll be back in 90 seconds. You listen to Tasty Live. We've got more with Johnny Trades. He's got a smaller size account. Talking about under $25,000. Look at the trades that use less buying power for you. Usually you do a bullish, a bearish, and a neutral trade. Maybe we'll even do an earnings trade. We'll see what comes up after this. We'll be back in 90 seconds.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means? Time for a little bit more Tasty Live. You mean the S&P's down 21, Nvidia down $6.50, Nasdaq down 150, Russell down 3. Good call there.
Yeah, we got the Dow. We sold at what 49.80 or 8.
Yeah. No, those were good. Usually, I mean, I like it.
Hasn't moved all that much.
What's that?
Nasdaq hasn't moved all that much.
No, it hasn't moved all that much. I mean, even the S&Ps and Nasdaq, usually are the leaders to me.
Yes.
In the market. So they're a little bit weaker right now with the Russell and the Dow. So I like your kind of trade that you put on there where you were just kind of fading that move. And I even like the little Nasdaq buy, which has a lot of I always say alpha, but that's not the right
beta.
Beta is the one that
moves bigger.
Yeah, moves usually bigger. So you get an opportunity to trade it.
Johnny trades.
Yes. I heard the music.
Yes.
Beautiful. I'm all pumped up. What are we looking at first?
Looking at some of the positions, we're pretty flat on the day. It's been a pretty decent one. We've got a couple positions that stand out to me. So we did this call diagonal spread in Reddit.
Yep.
It's marked up about 80 or 90 cents here, but you can see the bid-ask spread's really, really wide here. When we put this on, it was a tough fill. I'm going to try and take $100 out of this. I'm going to just put in a resting order at 805. It's about 20 cents above the mid price here.
Yep.
So I'm going to put that one in. I also have another question for you.
Go ahead.
Microsoft position. So we have the 400-410 put spread. Stock's up $3. We're just short the put spread. March. I got this question on Twitter because I tend to not go to the iron fly when I'm adjusting.
Yeah.
This trade, it's, we're out about $200, 180, 90.
Stinks. Yeah,
it stinks. We've had a really nice rally.
Yes.
Do you go and sell a call spread against it? My answer to them on Twitter was, if I'm going to an iron fly or making that adjustment like we did in Netflix last week, where I basically have the iron fly, it's actually inverted a little bit. My goal is to kind of just get out of the trade, scratch the trade. Do you make that adjustment here with this sort of put spread, or do you lean directional?
I mean, it's 6 of one, half dozen of another. You're not using any more buying power, right?
No, you do a $10 wide spread.
What's your thinking on the stock? That you think it's a mover or you think it's a sitter?
I have been trying to lean bullish, but it's done nothing but go down. So I feel like with 20 some odd days to go,
you could roll too.
You could roll. Let's look at the roll.
Let's take a look at that. That would be my first thing with 20 some odd days. Today's the day where you do look to roll, right?
Yeah. Do you try and go down and out?
I don't know if you'll be able to, but you can try.
You're short you could do the 400, 410.
Mm-hmm.
And you try and do this at like a 10-cent credit.
Sure. You can try.
All right, we'll leave that in for now.
Okay.
And let that work. Okay. Trade ideas. You want to look at a put spread in Amazon?
Sure.
Yeah, I was looking at that. I kind of like that.
Sure. Let's do it. Put spread in Amazon. AMZN.
Amazon trading at 208 here, down a little bit on the day. Obviously, has not participated in any sort of the upside here. Where in April it was at 190, 180.
Yep.
This kind of range. Want to just sell that 30 delta and go $10 wide?
Sure. Works.
We'll trade for around 1/3 the width of the strikes, a little bit less than that because you're only selling one side here. Picks up about 12 delta we got on the trade, 66% pop. That's right in line with what you should expect when you are selling a $10 wide spread for around 1/3 the width of strikes.
Very nice. Pretty standard mechanics there, right? Oh, there you go.
All right, so we're in 250.
If you push that, I'll send it.
I will, sir. I will. Okay, so we got our bullish trade. There's Reddit.
Oh, beautiful.
So we got filled for $100 on that Reddit trade.
Okay, nice. You waited for it, and you got a little bit of a directional move that you needed, and you got filled.
Oh, let's see if we can do
805 on Reddit.
I'm going to try and move this Microsoft to a nickel. I think that AMD trade is an interesting one for a neutral trade that Julia was looking at.
Yeah, I agree with you. I rank at 33 is in the middle of its most recent range, still at the high end of its range, from around 36 to 30, 33 and change right there.
Yeah, stock's been
down $5.
Yeah, pretty range bound here.
Pretty range bound.
You want to go somewhere around like the 25-ish delta for the shorts?
That's about 180 on the puts and about 240 on the calls.
Yeah. So I'm looking at the 240, 250, 180, 170. It's marked at 390. This mostly because you have that extra, when we look at our trades at 40 to 45 days, so this sort of setup is going to be around $3. You got an extra week there, so there's a little bit of extra premium baked into that. What do you think of that?
I like it. You could also consider going down another $5 and you'd get right around your $3. I don't know where you'd get filled.
Ish.
I mean, you can go a little bit further out, like 250, 60 and 175, 65. The biggest caution I have about this is you got $5 wide strikes on the downside and $10 wide strikes on the upside. When you're setting up your trade, don't make a mistake. I've done it numerous times in my lifetime and done it recently too, where you look at something where you go $10 by $5 and you say, man, I'm collecting so much here. It looks too good to be true. And then you send it and you realize you did $10 by $5.
Yeah, it looks like you're going wider than you actually are here just because of the strike availability. So I actually moved this to the 20 delta for the short options. So I sold the 175, 165. I did the 250, 260 right at $3.
Perfect. I think in a Johnny size account, going further out of the money, collecting a little bit less, is probably the prudent thing to do. Higher probability of success by collecting a little bit less. So you did an AMD trade, you did an Amazon trade.
We closed the Reddit trade. What do you think for a short delta trade? How do you feel here?
Sure. What are we looking at?
What do you think about? So we've traded. So I have neutral delta in the Qs right now, which is actually it's basically flat delta. I'm right in the middle here. What do you think about doing a diamond put diagonal as kind of a short delta play with the diamonds DIA, the Dow?
Yeah.
Up on the day.
Yeah.
It's been the strongest of the group. The components in there, you talk about like Goldman Sachs is, near highs. CAT is another one that has been just straight up parabolic to the upside. It's down small today. What do you think about getting a little bit of short delta in the diamonds as kind of our kind of market short delta play here?
Sure.
Cheap way to do it.
Sure. It's the Bucker today also, up 200 or 190 and change. Even the S&P's down, NASDAQ down.
So when I'm setting these up, we'll do like the 50 day, the April, and then we'll go to March for my shorter duration here.
The only thing is the markets are a little wider in the diamonds. That's the only caveat that kind of stinks.
So when I set these up, I like to go to about a 40 delta for the long option. That's a little further out in time. I sell the 20 delta against it in the shorter duration. So you net out about 10 to 20 short delta or long delta if you do this on the call side on this trade. You have a little bit of positive gamma. So as the market goes down, or if the market goes down, I should say, you'll actually pick up a little bit of short delta as you go down to the point where you get to like 480 if we're down, what is that, 5%-ish.
Yeah.
To the downside. That's when you stop getting that short delta and you kind of flatten out there. But you get the kind of benefit of a little bit of a short-term decay component because you're selling that almost $3 option and 22-day expiration. So if the market chops here or goes a little bit higher, you have that option that decays. It kind of buffers you, gives you that mulligan. And then you have the short delta where if the market does go down, you have short delta. Like you are going to benefit from that move. So the sideways chop / upward grind doesn't really hurt you here. Obviously, if you have kind of a crazy upside move, that's kind of your problem.
I like it.
All right. So you said markets are wide, and they certainly are. So I'm going to start this at $5. I put that working order in. You can actually cancel and replace here from the trade page.
Mm-hmm.
You don't even have to navigate to the activity page here. So we'll move this to 5. I imagine we're probably going to get filled above the mid price. Let's try 5. Oh, 5.10.
They got you because the Dow just rallied a little bit, but I think that's okay.
All right, perfect.
Just sold off. It just sold off. You probably couldn't get filled at the same.
Oh no, that was my Microsoft roll.
Oh!
I got filled on the Microsoft roll for a nickel.
Oh, I got you. Oh, good.
So it's basically a 50-50 shot because we're right at the money.
Mm-hmm.
It's got paid a little bit to roll it.
Yeah,
but it's really just to extend.
Tiny, and you got filled on the diamonds too, 5.10 or something like that.
With that Microsoft spread that's right at the money, the risk reward moving forward in terms of your roll. What's Microsoft up right now?
Microsoft
$5 and change. If Microsoft were to go down $5 tomorrow, that roll is going to cost you $1.
Yeah.
If Microsoft is up $5, it's probably going to cost you $1 in potential value that you're missing out on.
Right.
So the point being is like there's no it's glass half full.
Yes.
Thing.
Yes.
Like you're not bettering the situation, so to speak, in terms of you're giving yourself more time for the stock to rally.
That is
what
correct.
The positive is of rolling for a nickel. The roll for a nickel, if the stock is up $5 tomorrow, you're gonna be like, oh shoot, I should just sat. That's
correct.
Trade. The stock's down $5, then you're like, oh,
I got time to be right.
I did a good roll.
Right.
So it's it's a 50-50 shot, coin flip into tomorrow. There's no, one is not better than the other, so to speak.
That is correct.
Yeah.
Good job out of you. I think I think we kind of Johnny trades.
We get that question all the time. Like, should I just wait till tomorrow? Tomorrow's 21 days. It's Friday. Should I just wait? Flip the coin.
Flip the coin.
That's what it is.
Yes. That's where your opinion, your own opinion on the stock and your own market awareness happens on the stock. I look at it as like if I got the move that I needed to roll, I take it and run.
Here's another one before we go.
Sure.
So, Oracle.
Okay.
An absolute dog.
Yes.
We put on this spread, and we can. So I have the 135, 125 put spread, the 190, 200 call spread. I think volatility is coming in a little bit today because a $4 move, I probably shouldn't have a P&L of 75 cents coming in today.
That is correct.
The P&L day change, which is influenced by bid-ask spreads and all that stuff. So there's a little bit of subjectivity there to that. And I'm sure the bid-ask spreads, they're a little bit wide here. But it seems like, and I'm not long delta, you can see what this call spread is. The call spread's trading at like 50 cents, 60 cents. Getting a little bit of a bounce, a little bit of a vol contraction. You're still out of the money. You got 22 days to go till expiration. Do you take a 50, 60 cent profit on the trade? Do you hold the trade or do you roll the trade? This is a $1 million question.
Give me the choices you want to go with again.
They're all on the table. You can either take 50 cents, we'll call it 15% of the max profit.
I probably
do you roll it?
I ain't looking to roll it.
Or do you just sit with it? Because you got 20 some odd days to find risk.
I take the scratch, the green scratch, and
50 cents for a Johnny that's something.
I take it and run like a thief in the night.
We've had the trade on for about 2 weeks.
Ivy rank is 90, and I probably put on a different trade if I'm looking to do anything in Oracle in April. I'm not looking to roll it. I'm probably looking to just take the profit.
I'll give you some context. So we put the trade on. The stock was at 156. So it's only down about $5 at this point. But we got as low as what was the low? Can you pull up?
Oh my God. The low in Oracle was probably $15 low in this. So pretty close to it. Low is 138.
In the last 2 weeks. So you're basically
in the last 3 days.
The last 3 days. So you basically tested on the trade. You're probably out $150.
You're costing yourself money waiting.
So you've had a 2-day rally. Let's see where the Ivy rank was. So we did this when the Ivy rank was 100. So you've gotten about you've got a 10% fall.
Yeah, but this was all about price here.
Yeah.
And when Oracle goes lower, because Oracle's going to go lower, right? I mean, it's a pig that it is. I look to put on the trade again.
All right. I agree with you. I think this is one where, that's a decision you have to make. You have a trade that is a $200 loser. Now you're at a scratch, small win. Do you hold? Yep. Do you wait for more? Do you take the money and run? I think I agree with you here. So let's try this. So where do you put the order in here? So you got a bid-ask spreads at 235, 330. So you got we'll call it a dollar wide spread. You go 50 cents above the natural price, below the natural price.
Below, and then you walk it.
Natural bid, walk it. 275.
Yeah, and probably move it by nickels. What's the difference at this point? Right?
Yeah.
I mean, that's the way I look at it.
I usually like to get around like $50 out of it.
Mm-hmm.
They're going to torture me. You got the market selling off a little bit, and this is net long delta. You can see this transaction actually gets me short delta because I'm taking off the long delta. But the more this sells off, the harder this fill is going to be.
That is correct. That is correct.
Stop it. Man. See, now the question is, okay, do you leave this in at 40 cents? Try and get filled on an uptick?
I move it a nickel and then try to
35 cents?
Yeah, I don't. This stock's up 280 now.
Yeah.
I said to you, there you go.
All right, there you go.
What do you want? The nickel or the position? If it rallies 50 cents, you're going to maybe get the nickel.
All right, well, that nickel costs you lunch. So
even the S&P is down 32. Looking at the rest of the market, Nasdaq down 220 and change. Russell down 4, and the Dow down 100. Volatility up by 44 cents. 1990 approaching that 20 number that I've talked about so many times. But we'll see what's going on with the rest of the market when we have this market measure coming up at you. We're right near the lows. We just made new lows on the E-mini S&Ps. We're down around half a percentage point. Bitcoin down around $1,600. Oil only down 60 cents. That's rallied a little bit. Gold down 47. Silver down 4.5. Sitting tight on both of those. Your big movers to the downside are going to be your NASDAQ stocks like some of the leaders. AVGO down 16. AMET down 19. VRT down 14. TSM down 12. Always a big mover there, down 3%. Zoom Golly down $10. That's a 12% move. It's only a $74 stock. Let's see what the markets are like in Zoom in April. Man, not a lot of strikes left there, and kind of wide markets too.
$10? Damn.
That's a big move.
Big move.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. We've got the market measure coming. We'll be back in 90 seconds. Tasty Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live. That's right, with the Market Measure. But before we do,
let me get long a little bit more NASDAQ here.
Oh.
So I'm short Russell Dow, long NASDAQ here.
Correct. You sold the Russell higher than where it is right now.
Yeah, I've taken like 20 handles out of the Russell and like 100 out of the Dow.
You haven't taken anything. You have that right now, right?
No, I have it. Yes.
Right. You still have the position on.
Yeah, the trade itself is up small.
You're long NASDAQ now and short Russell, short Dow. Basically 1 to 1 to 1. Two.
1 1 1 1 1 1 1.
2 1 1 1. Oh no, you did. Oh no, 1 1 1. Yes, you did all four.
I'm heavier short Dow Russell, I guess. It's hard to say.
Yes.
It depends on your comment about beta and higher beta. So it's probably pretty close.
Right. But you're just playing the movement in each one of them, right? I mean, that's what you're trying to do here.
Yes.
On basically, I don't know, do you consider this an unchanged move with even the S&Ps at 69.30?
Yeah, I'm interested in volatility.
Volatility been creeping up. 1995 is the high. 1991, 90 is where it's trading right now. Bonds are up 10 ticks, finally catching a little bit of a bid there, 117.25. Bitcoin maybe catching a bid, middle of its range, up 9. It was down around 12 just a moment ago. Ethereum down 26, but over 2,000. Crowd, what are you doing there?
I did that. I mean, the stock is up 20. I don't know if there's some announcement there. But I had a diagonal spread. I bought the dip on the 23rd. We did it at $10.67. I just closed it at $15.80.
It's huge. Great trade. Great trade.
I mean,
now,
the stock's up 20.
Yeah, I mean, well, here, why don't you go back to
now
where
I'm flat delta in CrowdStrike here.
Right.
I'm short the 354.30 strangle.
When do you think you put that first trade on? Where do you think the stock was?
When I put the
350
on?
Yeah.
I can give you it here.
I mean, if you're buying the April.
You're talking about the diagonal spread?
Yeah.
So here, I can pull this up.
Yeah, show the audience.
So the diagonal spread, if you right click on the view market snapshots, and you can filter by open, closed position. So my position I have the 430 call that I sold this morning, that's moved about $3. And I have the 250 put. So this strangle, I'm out about $500, but I sold that 350 put at $8. So I'm still I needed this bounce.
Yeah, you need the bounce.
$20
right.
bounce.
This has been a gift.
When I was looking at this option yesterday, it was at like $18, $19.
Right.
So it has moved significantly.
It's got a good IB rank of 63. It's got earnings coming March 3rd, so it's probably going to stay bid.
Yeah, so if you right-click and you go view market snapshots here, the stock, when we did it, we did that diagonal spread at 355. Closed it, stock's now at 380. Your point. So you got $30 bounce there in 5 days or in 2 days.
Got to manage your delta. Delta's king.
Yes.
Because you were directionally wrong to begin with.
Not on the diagonal, but on
the diagonal, but on the rest.
On the put.
Yeah, on the put. Yep. Which becomes all part of the position, right? You can't break it out like that. It's all part of the position.
Yeah, but now so that adjustment takes off a bunch of long delta into this move. So now I'm flat.
Yep.
Short vol, flat delta.
Yep.
Slightly long.
Last night when I went to bed with Nvidia basically unchanged and maybe even going a little bit higher on the day, didn't think that we would see the E-mini S&Ps down 30. I thought we'd have more of a market like the Dow and the Russell, where it was a little bit of a mixed bag of tricks, basically wrapped around unchanged. I didn't think the NASDAQ would be down almost 1%. And I know you're leaning a little bit long NASDAQ and even the S&P, a little bit short Russell and Dow. I like the position. Volatility up 45 cents, 1990, now 1985. Maybe we're done for the day. You want to look at a 0-day trade? Is it too late? 9/11?
I'm selling a call against this DocuSign position. This is a gift from the gods. I hope this call is in the money. I'm never trading this stock again. What a dog.
DocuSign finally getting a little bit of a rally.
I sold the...
I mean, it's up 5%. It's only $2.45, but it is up 5%, 6% almost.
Yeah, but we did the 55.70 strangle in January for like $4 when the stock was trading
in between those two strikes.
58. It's at 48, and I'm out a couple $100 on that.
Without an
uptick. It hasn't had an uptick. Every day that trade is down 50 to $100. So I would love to see that call get tested, and then I can just be gone.
E-mini S&P. E-mini S&P.
I kind of need to go PP.
E-mini S&P expected move $32.
I'm a professional. Okay, I'm a professional. I'm gonna hold it.
You're a professional opium smoker. Up $32 expected move for E-mini S&Ps. Are down 31 right now.
Okay.
You ready over there?
Yeah, I was thinking, because I have these Robinhood puts, the 95 strikes in March.
Mm-hmm.
I think I want to just close these puts and buy stock.
Hood has just been hanging out here in the low 70s after being the darling of Wall Street, going from around here to around 150. It's cut in half. Catching a falling knife.
Oof. 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 Would have been if I asked you 4 months ago, would you buy Robinhood at 77?
I'm a little bit long personally, Robinhood.
What?
I'm a little bit long personally in Robinhood.
Yeah. You would probably say, I want as much as you can give me.
The S&P is down 40, volatility over 20, cancel rally.
So I closed out of the puts, the 95 strike puts, which are basically stock. 22 days to go till expiration. It's near 100 delta. So you got about 50 or 60 cents of extrinsic value. I would rather have the static delta of 100 shares of stock versus the short put at 95. If something crazy were to happen and Robinhood is up $10 or $15 in the next 2 days, you're going to miss out on a couple dollars. That's the only adjustment this is. The put in the money, deep in the money put with 20 days to go, that is stock. I would rather just bite the bullet, have the stock. I could sell cover calls into an up move. It's a little bit easier position to manage, in my opinion, than a deep in the money put. You're trying to add up credits, debits. It's not a good position.
Right. Totally agree.
I'm out money. But I want to see the stock higher.
Yep.
And I can do something.
Yep. Totally agree. Totally agree.
All right.
All right, my friend. Good job out of you. Let's see what's going on in the market. E-mini S&P down 43, down near lows. NASDAQ down 300. Russell down 5. Dow only bucker up 40-something. Volatility up by 60 cents, back over $20. Can't keep volatility depressed here at all. Let's get to this market measure. You want to?
Yeah, let's do it.
All right, let's go. I'm ready.
Strategy performance in different market sentiments.
Okay.
How do you think strangles do when markets are going down?
When markets are going down? Sponsored by the SIBO, by the way. Strangle performance is going to be horrible when the market goes down because you're going to lose both ways.
And because the down moves are so big. Are
Down-
usually bigger.
Usually bigger, usually quicker. Although we've been having quick up moves, but up moves volatility usually contracts. Look at what's going on today. You've got even the S&Ps and NASDAQ selling off. You got volatility up 4%. Big move in volatility. A bigger move than I think we had yesterday on an equal size move higher, relative speaking.
Yeah.
So you're going to pick up Delta and you're going to pick up
E-mini's down 50 now. They just got
big move in E-mini S&Ps. You're gonna basically pick up Delta and you're going to get the volatility expansion too.
Is Nvidia moving it? What's moving it?
Say again?
Oh yeah, Nvidia down to 8.
Yeah, Nvidia's no bueno.
Sick puppy.
Down 8.5.
So, you know what, that 1x2 crab trade, we were long the 200 in April. We sold 2 of the March 215s against it. We did it at $5, $5.20, marked at 487. On an $8 down move, that crab trade basically didn't move.
That's right. That's right.
Now do we get some long delta here? I think we do.
A lot of the trades that you put on, you did it at nice prices because you were just taking advantage of the movement in the stock. EMSP down 54.
190-200 diagonal spread, April, March.
190-200 for 748. That is correct. Debit. Yep. Very good.
Great roll in the Johnny Trader account for Microsoft.
Thank you. To his point.
In hindsight.
Hindsight trading is the best type of trading. I am an excel in hindsight.
Best.
Beautiful.
Okay.
Let's go.
All right. Yes. Strategy performance in different market sentiments. Let's do it.
I'm ready.
So various market sentiments influence the strategy's performance and profit potential uniquely. So the study that we're going to look at here, we're looking at strategies and adjustments within diverse market sentiments, focusing on both the strangles and iron condors. So we're going to look at the behavior of daily P&L and the associated CVAR, which is covariance of risk, within both strategies, and how that changes in quote unquote like bearish versus bullish markets. And we're quantifying that by just, big down moves versus, normal markets. We'll just say like a COVID time, we're calling a bearish market sentiment.
Okie dokie. I like it.
So the study that we are going to look at is in SPY. We're looking at 2004 to 2026. We're looking 45 days, managed at 21, 16 delta short strangle, and 16 delta for the iron condor at the short strikes with 10 delta wings. So relatively wide iron condors here. We're computing the daily P&L for each market sentiment within both strategies. So we're looking at like how well these perform in bullish versus bearish markets. We're looking at the overall risk here. Across both strategies, the percentage of pop, so we're talking about our probability of profit here, as well as the standard deviation of daily moves for each of these trades. So we're looking at like how volatile these trades are in each market, and then we're going to compare them against each other.
Okie dokie, let's do it.
So here we're looking at in quote unquote bullish markets. So this is all times other than like when the stuff is hitting the fan. Talk about like COVID time, tariff tantrum. Those are examples of quote unquote like bearish sentiment by our what we can actually pull. And so you can see here across the board, like these strategies are even though you're, a lot of times you get tested on the upside, when you have the grind in either direction, that's the optimal time to have neutral delta, which shouldn't shock you because that's what your position is. And so when you look at these trades, from October of 2022 to 2026, that was kind of the best time frame. And if you look at that on a chart,
that was the best of everything, wasn't it?
Yeah, it's mostly a grind higher throughout that entire duration. So across the board, bullish points in the market, even though you have risk on the upside, it's a much better trade to be neutral than when markets are going significantly lower. I've said bigger swings.
Yep.
See here.
Yep.
So some of the things that you're going to see here. So during these bullish market sentiments, with bull strategies, you have about equivalent pop. So it doesn't really matter whether you're doing, and that it makes sense because when you're buying a 10 delta wing, it's a pretty far out wing, especially in something like SPY. You're probably $20, $30 wide at least. And so your pop is relatively in line. During bullish market sentiments, the Iron Condor strategy mitigates approximately 68% of the risk. So this here's CVAR in comparison to the strangle. So, across the board, you're obviously there's going to be a drag in terms of the overall P&L because you're buying these wings. But defining risk, you're going to avoid those huge down moves or COVID type moves, which, there's a cost to that in the other couple years where we didn't have that sort of risk.
Very good.
So
whoa, we got a lot on this slide.
Yeah, there's a lot.
Let's take a look here what we have.
Yeah.
Even the S&P is down 72. Volatility up and up big, 2060. That's a full $1.15.
Yeah, what's our little pair chart looking like here? Flat.
Pretty much
up small.
Yeah.
Or down small.
Down.
Actually,
yeah. I mean, it depends on.
The Nasdaq's moved about 1%.
Nasdaq's down almost 2%, 1.75%.
Yeah. So you got. They're taking the Nasdaq out to the woodshed here.
They are taking the Nasdaq out to the woodshed here. Some of those stocks that are down, AMAT down 26, MU down 24. Ooh. I mean, these are 5%, 6, 7% moves. SanDisk down almost 4%, $23. AVGO down 6 or 7%. Tesla down $10, almost a 3% move. Apple, which has been one of the leaders in the clubhouse, down 240, which is almost a 1% move. Nvidia down $9.70, right on its lows.
Yeah, big move.
Mm-hmm. And the S&P's down 80.
So when we're looking at quote unquote bearish sentiments, and we quantify this by periods from January 07 to 09 to December of 09, I should say, you got COVID in there, and then the blip of time where we had from 2022 to September 2022.
Mm-hmm.
So across the board, your pop is not that bad unless you have the really outsized moves, and that's really the key here. During COVID, when you have this huge downside move, you're obviously not going to be profitable on your
right.
So a couple things that you'll notice here, both strategies have a relatively high profit potential, but the exceptional cases like the huge moves to the downside during COVID led to negative daily P&L across the board on these. Strangles, you obviously had more risk. In 2/3 of the bearish sentiment instances, only one had negative P&L, and that was really just the COVID situation. So across the board, if you know that it's going to be a bearish move, you should just define the risk or just not make the trade, which is, unless you have a crystal ball, you're not going to know that.
I wish I had a crystal ball sometimes, don't you?
Yes.
Most definitely.
On average, a couple takeaways here. On average, within bull markets, there's a 60% reduction in the standard deviation of daily price movements compared to the bearish markets. So you have tighter P&L ranges. However, bull strategies, they showed the same likelihood of making a profit. So, your win rate is going to stay the same. It's just that you have bigger tail risk is really and that's all I got for you.
Good job out of you. I don't know about a good job out of the market here. Even the S&Ps, let's talk about them real quickly here, are down 77 or so. Really haven't had an uptick for most of the morning. NASDAQ down 440. It's off of its lows by about $30. Russell down 17 off of its lows by about $3. Very small moves off of the lows. Dow down 200 and change. That's the strongest of the group. NASDAQ and even the S&Ps are the weakest. NASDAQ by far. Volatility 2050. After flirting with going down to 1930 on the lows there, it's 2055, a big 6% move in volatility. We are not out of the woodshed yet. Volatility got up to 2060 as even the S&Ps are down around 80 right now. Place your bets. Even the S&Ps back to 6880. When you look at this, it's amazing how in a day, a bigger move than yesterday's move in the overall market.
I actually, what did I?
What are you saying? Hello?
I'm thinking, dude. I'm looking at my.
You have to think out loud.
I was trying to think, but I have some puts I can sell in silver in SLV because I'm short silver.
Silver
Short
down
delta.
5.33% back near its lows. Gold down 53. I don't hate your idea.
So I'm pretty much straddled around 75. I'm net short. So this is an adjustment to my overall delta, and we've been trading silver. Silver has been
hard to follow along.
It's hard to follow. This isn't
an easy trade.
Is this different than the previous regime? I mean, I'm trading the freaking thing.
Yes, you are trading back and forth. You are correct.
So we're net short here on SLV. So we're adding some.
We're adding long delta.
We're 2 to 3. We're 2 to 3 puts to calls as well.
You're trying to trade the range as volatility continues to.
But we've been selling like upside calls at like the 100 strike and scalping out of those into these up moves because you get this explosion in volatility. You put on a little bit of short delta, you get this $2 down move, and those options move 40%. You know, like they go from $3 to $1.60, $1.70. We've done that a handful of times. So that's kind of how we're trading it here. Oil rallying a little bit too. Don't like that. Trying to close that position.
Okie dokie.
All right.
Are you ready to take a quick 90-second break?
Yes.
All right. Let's take a quick 90-second break and come back. We got more Tasty Live after this. We've got, Q. Ooh, he's been coming in every day. I mean, still special.
He's not a sweet treat like the other guy.
Sweet treat?
A sweet treat, you know, like a dessert.
You really have changed. Mr. Frank Caberna is who we're talking about. We'll be back in 90 seconds with Francis. Let's Tasty Live. EMSP down 78.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with our friends from Tasty Trade. But before we do, let's take a quick look at the market. Even the S&P's down 77. NASDAQ down 460. Russell down 15. The Dow down 180 and change. Volatility up by $1. I'm going to say the lows are in for the day.
Ooh, I like that.
Yeah.
Like that. Should we add another NASDAQ then? Put in our NASDAQ.
Sure.
I'll put one in.
Sure.
Actually, I think I'm going to sell.
Nvidia is all about the NASDAQ, is Nvidia. Nvidia down $9.70. That's about as low as it's been. 185.58. It's 185.71 right now.
All right, I got long another NASDAQ. I also sold puts against the
Gold?
GLD. I have the 490 calls.
Mm-hmm.
A little bit of vol coming in, but you get a little bit of a pullback there. It's the same thing, same adjustment I did with silver, where I'm net short vol, short delta.
Mm-hmm.
Move is helping, selling some puts, trying to trade it.
I like it. As the market goes down to 81, that means nothing to me because I've got this, man. Oh, Q, how are you, brother?
Fellas, I'm doing well. How are you?
Good. Good to see you again. Everything well?
Yeah, everything's well with me.
How's the trade desk today? We had big earnings.
Lots of Nvidia coming through, I'm sure.
What's that?
Lots of Nvidia.
Yeah, I would think
Lots
so.
of Nvidia coming through, yeah.
It's always on the list. It's always
on the list, yeah.
Right.
So today, like right now, there's not many calls because it's like when there's that initial move, it's a lot of reaction, not a lot of time to really call in.
Sure.
It's then like after the move, that's when we see it like pick up busier on the trade desk.
That completely makes sense to me too. That that's the way it would be. What's been the has it been earnings related or has it been more market related? Here we are back up near the highs. Now we've sold off by 1% or so. I mean, we're no longer by the highs, but
It hasn't been as much earnings related as it typically is because like with the way the market's been trading, it's been pretty choppy recently.
Yeah, there's been opportunity on both sides of the board here.
Yes,
bulls and bears.
exactly. Yeah. A lot of two-sided action, a lot more symbols that are in play that are like a lot of the time, certain things are just grinding up. But now it's like because there's a lot more two-sided action, there's a lot more volatility, a lot more symbols to sell some premium in, which is what most of our customers do.
Sure. Totally makes sense. You said yesterday your dad might have been disappointed in you.
Was he?
Was he listening, or did you abstain from letting him know? We were talking about movies and some New York movies that you had not seen, and you're originally from New York. To put those people, give them some context who haven't watched the show, maybe.
Yesterday. Yeah. So I called
the S&P's made a new low, and that got it completely wrong. But
my long NASDAQ not feeling good today.
No.
So I called him after work on my way back.
You never out yourself.
Well, no. So I called him, but I just kept it, just away from that topic. I didn't bring it up, and I was like, if he brings it up, that's fine. But I didn't bring it up. I'll tell you that. Just talking about other stuff.
Good for you. Yeah. You did good. You did real good.
Yeah, it's like when you did something wrong as a kid, you just don't bring it up. Like if your parent asks you about it, then you might.
It's not
exactly.
It's not illegal.
It's only
Sort of oh my God, you sound like your younger brother.
Yeah.
And I thought you had more sense being twice his age almost.
You only do something wrong like if you get caught.
Yeah.
So you just try not to get caught. You don't bring it up.
Innocent until proven guilty.
Exactly.
Come on, it's the law of the land.
So disappointed in the youth of America here.
Don't tell me.
The middle age. Well, he's middle aged.
Don't tell me you wouldn't do the same thing, Tony. Don't
do as I do. Do as I say.
I'm still the Utes for sure. I would say I'm still the Utes. But Nikki's getting up there. I'm still. The Utes.
Whoa, hey, easy, brother. All right.
Hey, now you have a profit from where I made the call. Maybe not in your NASDAQ, but everywhere else. So you can scratch them. I don't can take any of your. Your problems.
We're okay.
All right. Well, you guys are doing that.
Outperformer.
Yes.
Well, you guys are looking at the market. You got top 20 symbols.
Let's do it.
Going through the system. At number 1, surprisingly, Tesla at a 3. Microsoft 33. Amazon 28. Nvidia falling down to number 4 with a 24. SLV 68. Micron 83. GLD 58. IBIT 53. Netflix 40, Google 24, TQQQ 33, TLT 8, AMD 48, Palantir 22, Meta 20, DDOG 54, Spotify 26, SNDK 70, Oracle 95, and SoFi 18. I'm surprised Nvidia isn't number 1 on that list.
I'm a little surprised by that too.
You know what?
And Tesla remains in the top, even though
Tesla remains in the top. Well, you're getting plenty of movement in there, and I think people trade a lot more directional than selling premium there. Although the monthly implied volatility is pretty good.
But what's Tesla? I mean, a $10 move is nothing in Tesla.
Well, I think that's what people are gravitating towards. I think that's what they.
Oh, you think it's selling premium, not buying?
No, I think they're playing the moves in it, and you've got a good monthly implied volatility. I get the Ivy rank is low, but when you've got a 45, 50% monthly implied volatility, a one-day expected move is $7, $8. It's moved $10 today. I mean, if you're looking for something that moves with the market, that's moved more than the market, it becomes a play.
That's one of those like high beta underlying.
Yeah, high beta stocks. Yep. I always say alpha. I've been corrected twice today, but. Good job out of you.
Well, alpha is not the right word. It's beta.
But it's my word.
We're just trying to correct you.
Alpha is what I'm trying to create.
Yes.
Beta is the movement.
Yes. I closed out those Roblox puts from yesterday. What's your assumption? Somebody sent those in. So shout out to whoever sent in the Roblox laddered puts. Took a couple bucks out of that.
Yes.
Stock is up on a day where market looked no bueno. No trailing right now.
RBLX, you did those at 840, closed them at 690 or so $1.50 in a day. Good trade. Even the S&P is down 67 as
volatility coming in a tiny.
It took $5 worth of heat, $20 worth of upside on the call that the low was in.
Yeah.
I don't know.
You want me to give you a "How does Daddy do it"? Were you itching for that?
No, we don't have the time. We don't have the time. We don't have the time for that. We don't have the time for that because I gotta let my man go and bring in special guest.
Oh, can we
this
get like
man?
That sort of thing for this guy.
Fan favorite, back from his whirlwind tour. Mr. Frank Caberna, how are you, sir?
You're good. Hey, I know you've been out of the game for a while. Go adjust.
You're right there. You're beautiful.
Look at you.
All right.
We got the best team in the world.
What's up, boys?
Nothing. How are you?
I'm good. I'm glad to be back.
So people haven't seen you in a while.
Yeah.
Where you've been hiding? Where you've been hanging your hat?
He did what I should have done. Moved up the ladder, and then you get your little Johnny Glenn to come on and do the show.
Oh, so he's he's like intern Glenn. It was what we got, even though he's not an intern, but
Glenn's the man.
Glenn is an upgrade, I've been told.
From you?
Yeah, physically, all of it. Have you noticed all the new people they bring in, taller? Me not being on the show.
It's not hard, Francis.
I'm 5'7".
I appreciate you, Frank, but I think that's more perspective. So like they're all like around my height, so I don't really notice it. I think,
dude, they're tall. That new lady, Shelby, she's very tall.
We've got some tall
new
people,
lady,
but I don't want to.
I'm just saying, short guys like me,
short kings,
are being put aside.
Yes,
but no, I'm glad to be back. Glenn's been doing obviously a great job. I think. I don't know. How has he been doing?
I've been doing good. He's been doing
really?
good, man.
Is he better than Quentin?
No. We don't play favorites here.
Yeah, we don't play favorites. We don't play favorites.
Okay, got it. He's better than I was, for sure.
We don't play favorites.
He's a little taller.
We don't play favorites. We don't play favorites.
Well, I'm glad to be here. What do you guys want to talk about? I mean, the markets.
I have one quick question for you because I've been asking everybody today.
Yeah.
What do you think about a 40-yard dash? Are you sort of quick? Are you
honestly
NFL average 477.
Okay.
Faster.
I didn't want to tell
I think it's going to be over that.
Well, I got to give him context. He's a friend of ours. We can't sell him short.
Yeah.
Fastest NFL.
Don't tell him the.
No. Average fastest is around 4.2 for NFL. Now we're not NFL athletes, but I'm just giving you that.
Yeah.
Okay.
What do you think a reasonably fit average male 40-yard dash is, and what is your 40-yard dash? You're reasonably fit. I think you fit into that category.
Okay, so you're saying like the average American man.
Yeah.
Near you, off the street.
Okay, they're running the 40-yard dash.
Mm-hmm.
I'm going to say 8.5 seconds.
No.
What?
It's
too
like
high?
Twice as much as the average of the NFL?
The average dude on the street?
Reasonably fit. And I mean,
Reasonably
that's like...
fit. So it's lower.
That's like saying you're reasonably tall.
Yeah.
I mean, I would expect it to be pretty high. Do you have hard data on this?
Vanetta gave us 5.5 to 6. Was I
5.5 to 6.5?
Okay, that's way better.
Well, I was gonna say, what's your? You gave me now. What was your 40?
I would have put myself in that like 6-ish range.
Okay, so you're pretty quick.
I was just talking to Glenn about this because while he is physically superior to me in many ways, I do go to.
He better perform soon.
Have you ever been to this Barry's boot camp? Have you ever been to this thing?
I have not.
Do you know what it is?
Yes, I know.
Do you know what it is?
Yes,
okay.
yes.
And there's a treadmill element to it. It's half treadmill, half free weights.
Sure.
I've been doing that a few times a week, and my treadmill thing is getting up to like my sprints are at like the 12 plus on the treadmill.
Oh, that's nice.
Which I don't know what that. I don't know what. Sold?
Oh!
You got to come to Barry's with me.
And how long do you maintain this 12?
Yeah.
The sprints are 30 seconds.
Okay.
So like it's not.
Still, that's a long time, 30-second sprint.
So yeah, I would put myself probably around that average, but that's way better than I expected.
Beth, can you get the research team, the math nerds out there, compute that to a 40-yard dash for us? So he's doing 30 seconds at 12 miles an hour. I need that computed to a 40-yard dash.
Yeah, so I would expect I could do like a little better than that on the 40-yard dash, obviously shorter time frame.
But that's what I'm thinking. That'll give us like a gauge. That'll give us
yeah, I wonder why are we because Vanetta brought this up?
Yeah. I I was a little overzealous. I thought I could do like around 5.
Dude, your confidence is amazing.
I just figure 40 yards.
Flat feet, old vaping man that he is over there.
Well, that's what, when you say like average guy on the street, like I'm putting you and me like probably slightly above average.
That's what I'm saying. Is
Dude,
like, if the average is at 5'5", I think I'm a little bit above the average. Like 5'2", something like that.
I'm still selling the 6.
You're hedging a little bit.
The 6 second average for Americans.
I'm up closer to average here. I'm a little older, a little,
Well, yeah, I don't know. We should do it. We should.
Vanetta is actually making a track for us. We're gonna have representatives from each side of the business.
I don't know. Actually, now I don't know. This is.
I mean, you excelled back in the day at eating. What was it? Eating
Wow Bows.
Wow Bows, which you surprised the hell out of us.
Different
competition. I mean, I smoked Mikey Butler. I was double.
He
Mikey
did.
Butler.
He did.
Yeah, I felt sick for like 3 days. I was not in good shape after that, and that was when I was 25. If I did that now, I would probably.
Wow.
That would take some. You know Wow Bows.
Yeah, of course.
This big and they're
of course I know.
Doughy. They're delightful. They're delicious.
Beautiful.
They're not delightful when you eat 8 of them in 2 minutes.
Yeah.
Dunking them in water.
Remember,
I was competing. I was like, I'm not losing this.
We did the donuts. We did the donuts thing like way back in the day.
Yeah.
And Molmac got super competitive about it. And he was like, no, I can eat a bunch of donuts. And he like tried to scarf down like 3 do-right donuts. And he like looked like he was going to throw up all over.
Oh.
It was, it's never as fun as you think. But I'm in for the running thing. Or we could just.
I got some people calling. They're selling the 12.
They're selling the 12. Dude.
I'm just telling you.
Buy them up and come to me. I'll be Barry's tomorrow, Wicker Park, 6 a.m. show up at the Barry's.
Beth is usually a lover, not a hater when it comes to everybody here. She's a protector.
Yeah.
And she came out with a sold so quick. I wasn't even comprehending what she was talking
What's your number?
The market wasn't ready.
What's your number, Beth?
I've done that class. That's fast. That's really fast.
Hell yeah, it is.
All right.
That's right.
I'm proud of you, Frank.
Thank you. Thank you very much. I'm saying I'm getting there the last like month or so. It's not a regular thing. But anyways, what do we talk about on this show? We talk about
we talk about FX. You bring us your FX.
Yeah.
You bring us your humble masses. You bring us everything.
Yes.
Great. I think I have a graphic for you.
You do.
Cool.
Awesome. Client sentiment. What a beautiful thing. Glenn, even though he's on vacation, updated this.
Where is he? He goes on bougie. He French Alps.
Dude, can you believe that? Could you imagine having a friend like that?
Like Glenn, or does Glenn have a friend that takes?
No, he's got rich friend, pays. It's not even like, oh, like you guys cover the flights and like we'll cover the dinners and whatever.
Oh.
All included.
Oh, I got it.
Like,
man, you just outed Glenn.
Damn.
This is
that a bad? I was wondering because I was like,
this is so
French
bad.
Alps. Ooh, what are they? TCFX over there.
Absolutely, it's not like that at all. Yeah, it's like everything covered.
Outed him.
But he's a great guy. He's in New York this weekend. I don't know what he's doing there. Your old stomping grounds.
Yeah.
Everybody hangs around Brooklyn now.
I couldn't wait to get out. I mean, I really couldn't wait to get out, and it was. I mean, Brooklyn in the '80s was pretty cool. I mean, but it's jumped the shark now.
It seems insane.
I think it just has to do. It really is. I mean, in all fairness, I thought I would work in Chicago for a couple of years, like 5 or 6 years, because it took me 3 years to start trading. I figured I'd make enough money in 6 years to take that pile and just move back to Brooklyn and get a regular job and have a nice little nest egg. That was my thinking. And I did it. It worked out well. But once you moved out of Brooklyn and you saw the rest of the world, how much there was to offer you, there was no going back for me.
Nice. Yeah.
I was asked. Speaking of,
are you scalping your Nasdaq for almost 100 handle that I got you into?
Nice trade.
How does Daddy do it? How's
Daddy do it?
Did it that time? That one time. It was amazing. It was amazing. I was prompted to ask you. You're on a sabbatical next week, I believe. You have something.
Wow. Now he's outing you as Glenn
Next
is
week?
his friend.
Yeah.
I don't have anything. Who said that?
Oh,
You getting bad info?
Bad info.
Bad info. I'm not going anywhere.
No.
I'm here every day.
Okay.
But also to Glenn's credit, he's checking it. He shouldn't even be here, and he did this slide. But I do have to ask you. Speaking of, did you watch? You watched the Scorsese doc? You had to.
The documentary
about Scorsese.
No, I think you're the second or third person.
You haven't watched it.
No, you're the second or third person. Now I feel like, have you watched Pope of Greenwich Village?
No, what's that?
Okay, all right. So now we're equal. So you got to watch the Pope of Greenwich Village. It's a story about New York, Manhattan. The Pope of Greenwich Village.
Yeah.
Yeah, you got to watch it.
Okay, I'll check that out. But yeah, the Scorsese, the first whole part, like it's all, he's like a little kid in Brooklyn, and there's like all this stuff all over the streets and everything.
I've written it down twice, stuck it in my pocket. I still have a piece.
But he's got to be like 10, 20 years older than you. Like it's got to be a different time.
Oh yeah, I would think so.
Yeah. So maybe there's not so much crossover, but I'm sure you would like it. But
I'm sure I would.
Anyways,
let's see his age. Yeah, he's 83. He's 20 years older than me.
Yeah. So a little different, but same probably trends over time.
Yeah.
Anyways, let's go over this thing.
Yes, let's go over the sentiment. What does this? So what do I take about before you go over each one? What do I take away from this client sentiment?
So this is just where like our retail traders are positioned.
I also hear you're a big Boogie Nights guy.
Wow,
that's good data. That's good data.
I'm just getting inside info. There's
Also,
a lot of people that are chiming in today.
We have to be clear. There's two ways it can go when you're a big Boogie Nights guy.
Yeah.
And there's one way where it's like,
it's questionable.
The other way is like you love American filmmaking, which is the way that I go.
Yes.
Okay. And I just love. I mean, what gets me about this is like Pete and some of the other olds around the office, and Scott. Scott used to like give me stuff about this as well. Of
this
just
is
like
my old.
Boogie Nights. Like this is this crazy movie. It's about porn. Like what do you like? Love porn? You're addicted to porn or something? And I'm like, no. Like it's a great movie. And then the movie that's going to win the Oscar this year that everybody loves, One Battle After Another, where it's like, oh, it's all about immigration and all this different stuff. It's the same director. It's the same guy. He's a great director. There Will Be Blood. I'm sure you saw that when it came out.
Yeah, I did.
Unbelievable movie.
You really liked it that much? I mean, I enjoyed it.
There Will Be Blood.
There Will Be Blood? Or
yeah.
That's
It's with what's his face who does all
Daniel
the 25-year-olds.
So good. Wait, what?
No,
the new one is Leo.
Leo, yeah.
Yeah, Leo.
No, it's
The new one, I'm like, I watched it in the theater. I was like, oh, it's good. The car chase scene in the theater was like, what the heck? This is crazy. I felt like I was like, my chair was like flipping back. I rewatched it over like Christmas, and I was like,
come on.
It's just there's just a car chase. It just looks really cool. But you didn't like the new one that much.
Yeah, it was entertaining.
It was I would. Say
I don't think it's like it was entertaining. It was good. It was entertaining.
It feels like a classic, like There Will Be Blood was the best movie he made.
Yeah.
And he didn't win the Oscar. And now it's like, oh, like we'll give a best picture for this one.
Yeah,
it is kind of a make.
The same with like, when Leo won for like The Revenant. And it's like, this is the best Leo movie? Like, it's a sick movie.
Yeah.
But Boogie Nights also.
But it's so subjective. I mean, one person's loves another person's, well, as you kids would say, me.
Or mid.
Mid.
Yeah. This one to me, was probably kind of mid. A real hipster take now is if you like his Phantom Thread. That was also with Daniel Day-Lewis. His movie Phantom Thread is like the hipster.
Is it a new one or an old one? I don't know.
It's like it's an in-betweener. In between There Will Be Blood and this one is like a Phantom Thread.
Great actor, great method actor. I mean,
unreal.
I mean, was it Mentalist? Didn't he do that?
I don't know if I've seen that one, but he's big method guy, and now he's like retired. He's just like, I'm done.
Yeah.
Which, if you can do it, good for you. Anyways.
All right, so what do I take? Let's go switch gears here back to FX. What do I take from this as a retail investor?
Okay, this is where the people are positioned.
This is public knowledge, right?
Yeah. Okay. It's on the platform.
Mm-hmm.
You can see that Eurodollar people are pretty even-sided. That makes sense. It's been kind of range-bound the last really several months, which is infuriating. Right there in the middle of the range. But people are.
Yeah, you guys don't like the like range-bound stuff. You're playing for 1 minute.
Because our guys have to get so directional with this type of market that like the range-boundedness they can't just like print theta, every day, which is a little bit frustrating. But you've seen a little bit erring on the dollar long side, and you can really see that on the right side here with that short Aussie pair in there, and then the really overwhelmingly long USD and the Swiss franc part of the equation, which that one has been a tough, just like pig of a trade as dollar just continues to get crushed relative to Swiss franc. My most interesting thing, and unfortunately with all the vol that we saw come in this morning, it's already flipped a little bit. But what's really nice about this, you look at that dollar yen, people on the short side of the dollar there as the yen continues to be pretty undervalued in that pair in particular. And then you look at people are on the long side of USD and that Aussie pair telling you that, thinking that the Aussie is a little overvalued. You could pair those two things together, take the USD out of it. That Aussie versus the yen is at, I believe, highs the last several years. Like I say, turning over a little bit the last couple of hours, but that's a super interesting one to me there.
Yeah, this is one that has stair-stepped higher. I mean, the Aussie dollar has been so strong.
So strong, yeah.
Is that like metals related, some of it?
Dude, I would love to, it'd be easy for me to tell you. It'd be easy for me to tell you it's all metals, but like the Aussie didn't pick up when gold and silver were rallying end of the year, start of this year. It's really, Aussie inflation's been hotter than expected. And the Aussie central bank actually hiked rates and is expected to hike again. And so they're getting kind of hawkish where everybody else has been dovish to, middle of the road. And so you're seeing that Australian dollar strength from there. Also China and Chinese equities. When equities are settling in, ticking higher, Aussie tends to perform well. You got to think of that Aussie versus the yen can really be like the polar opposite spectrums of like Aussie is more risk on currency, yen is more risk off currency. So all of those things coming into play to kind of push that Aussie up towards its highs, and the yen, though they should be hiking as well. You got the new leader over there who is kind of Trump-esque, doesn't want higher rates. So trying to suppress that yen value. But it's a multi-year extreme. And that's a market, you show that chart, it looks almost like a broken currency type. Like it looks like Turkish lira almost,
where
the way it's just stair-step. These are two of the most liquid non-dollar currencies that we have on the board. So it's a super liquid pair. It's a super popular one. No USD.
I'm sold. I sold.
Cool. Nice. Wonderful. Hope it works out for you.
I'm short the Aussie, Japanese yen. Two currencies that I have made $0 trading.
It's been a tough
Those
one.
two have my number.
Yeah. This is the time. This is your due.
I'm due.
This is the time. This is the time we take a break. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live after this. Thank you so much for coming back, Frank. It's good to see you. I never get to see you anymore now that you're on the other side of the glass wall there. If you ever need anything in FX, hit my man Frank up. He's always a plethora of information. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
Peace. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tilted sideways, grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself.
everybody, and welcome to the Thursday edition of the Liz and Jenny Show. My name is Jenny Andrews. That beautiful blonde is Liz Deerking. Happy Red Shirt Thursday, everybody.
Happy Red Shirt Thursday to you too, Jenny Andrews. It's a red day in the market too. So red shirt, red day. We should have worn green today.
Is this surprising? Is the SPOOs down 50 surprising to you?
Well, it was surprising when you told me it because I was doing something else. And you said, SPOOs are down 80. I said,
70, 80. They were, actually, it was a little surprising. But I think with Nvidia earnings coming out and Nvidia barely going up, you knew if Nvidia was going to turn around, it was going to take down the market.
Yeah, it's true.
I don't know.
Well, and it did. But Nvidia was an interesting egg last night because it was up a little bit unchanged. It didn't move too much. And to your point, if it was going to shoot out of the gates, it probably would have shot out of the gates last night.
So let's think about this. Anyone who was long Nvidia hoping for a big move, and earnings came out and earnings were great and the stock barely moved, those people might think, you know what, I'm holding this. There's risk in holding this. It's barely moving on great earnings. Maybe I'm getting out. And maybe that's what we're seeing with it down. Let's pop in the platform. Let's pop into the platform and take a look at where it is right now. Down 4% now. So it's rallied a little. We saw it down as much as $10 10 minutes ago.
Yeah. So can you see where the open was? Because I think it opened up.
It opened up.
Yeah. So did the SPOOs, by the way. The SPOOs opened up barely as well.
So open 194.21.
Yeah.
So 4, 5, 6, 7.
No,
it didn't open up.
No, 194. That's what I was going to say. I think it closed at 195 yesterday. I don't think it opened up.
Yeah, it didn't open.
It opened unchanged.
I mean, we saw it up in extended hours, and we saw it up, pre-market before the open. But it didn't open up. So
you know what was kind of crazy is yesterday. So once again, when the news comes out, the market does digest it the next morning. CRM was down big after it, and it opened almost unchanged, or it's almost unchanged right now. So that was another one. We did not place a trade in CRM, but it was something we were looking at. So last night, that's what I'm saying. When you look at it, it doesn't take into account the overnight move. If you can put your cursor over.
Last night I saw it as low as in the low 180s.
Yeah, I did too. Low 180s. And here we go. Now it's up 3%. So it's kind of, you don't know.
Right. It was almost up to 200. It's crazy because I really thought, geez, because yesterday I thought, the people who make money in Nvidia on the up move or premium selling move, they might lose that in Salesforce and the down move in Salesforce. But today's a different story.
Yeah, it's Tale of Two Cities. It really is. Can we take a look at snow?
Oh my goodness, snow. Snow up 567. But the crazy thing is, and again, our trades are not trade recommendations. This is what Liz is trading and I'm trading. It's what we're trading. They're not trade recommendations. But we sold this obscure, 323-day put yesterday, and over 1,000 of them traded.
Yeah. So can you please go to the trade page?
Yes.
Hit the trade page. Go to our option.
Mm-hmm.
Okay, and then change it to, there's the 100. Look, there's 31 that have traded today. But yesterday when we traded it, we placed the trade and there was a 2 lot. And the volume, the open interest was 1.38K. So 999 of our friends followed us.
Then maybe
1.38K. Yeah, it was 1,000.
All right. Well, so we have these puts. Let's talk about these puts. We sold these puts thinking we're going to get $700. We're only using $800 to do it. It's almost 100% return on capital in a year's time because they were a year out. Now, I put them on for that return on capital. For me personally, I'm keeping mine on. But in this show account, to take $95 overnight, maybe we take it off.
Can you do me a favor? Go back to the chart. I want to see as high as snow got, because I think I got a really lucky fill.
No, it was higher today. And I do think, so open was 178. We're only trading 174. And it got as high as 184.
It got as high as 184, right? I got a really lucky fill to get out of this. I agree. We should close this for $100. It's still a decent return on capital. This was an earnings trade. Worked out well.
31 people got out of it today. It will be 32. to take $95, fine. What was our trade price? We sold it at $720. Let's buy it back for $625. That's $95. We're getting $1,000 in buying power back. Because this show account is for demonstrational purposes only. And
hey, that's a great trade though. We took $100 out of an earnings trade. It's an overnight move.
Yeah, we're really active. We place so many trades a day. We could use that $1,000. I don't want to tie that $1,000 up in this account for a year.
For a year.
I mean, to use 1,000 and make 700 in a year is a wonderful return on capital. But for us, I don't want to tie $1,000 up for a year.
But don't you think, and I hesitate to say this, I think it's a wonderful way. So if I was going to take somebody like my father-in-law, right? My father-in-law is trading and he is pretty active in nearer term, but that's something that is more, in my opinion, that's smart investing. So I don't look at that as active trading. If you're putting this, I look at it as smart investing. If I was going to be talking to him about something like that. How much? How much is that in margin account to put one of those in? Go back to snow. It's his birthday on Friday, and I have convinced my husband. I hope he's not watching. My father-in-law, I hope he's not watching. Because it's his birthday on Friday, and I have convinced my husband that for his birthday, I'm going to place a trade in his account.
Okay, and if he has portfolio margin, so this 100...
He doesn't have portfolio margin.
Oh, he doesn't. I was going to say, this 100 put in regular margin is using $1,000. In portfolio margin, I bet you that's using like $100.
Yeah, I'm sure it is.
So, if you're going to place a trade in Larry's account, you'd probably...
I'm not giving him $1,000. How about that?
Here, if you want to spend $200 on Larry's birthday, I say you just buy him...
No. Number one, I'm going to spend more than that. Number two, I want it to be defined risk. So do you see what I'm saying? I'm not going to be selling puts in it just in case. So you too could lose more than I gave you.
Let me see what would look good for Larry's birthday. Is Fig still on the run? Look at Fig. It doesn't look like much, but went from 21 to 32.
No, but I might buy I'm not using Fig, but open up.
Look at this 30 put in Fig.
No, I'm not selling puts because it's a gift and I don't want him to lose money on a gift, right? I've done that. I've tried to take you can lose what I give you, but not anything additional. So I'm going to probably either place a zebra in his account for a certain amount or buy a call.
Okay.
And I think I'm going to use IBIT. I don't think he has any crypto.
Oh, he doesn't have any crypto?
I don't think so.
Yeah, so just buy him. But there's a lot of premium. That's the problem with if you buy. There's a lot of extrinsic value here.
No, but how much is a zebra? Go to ETHA. ETHA is actually cheaper. How much is a zebra in ETHA?
ETHA. You could do ETHA. That's going to be cheap.
Yeah, go to April.
Okay.
And sell a zebra. Set up a zebra. Sell one, buy two. Sell 150 delta. Sell one, just got the money. Don't even worry about the deltas. Watch extrinsic value.
Sell 150, buy 270, $350.
Yep. Then he's got unlimited profit potential in Ethereum.
Happy birthday, Larry. You've got synthetic 100 shares of Ethereum.
It's pretty good.
Hey, no, it's not bad.
I mean, I'd rather that for my birthday than any gift.
Oh, heck yeah. What did I give JD for his birthday this year? Every year he gets a stock for his birthday.
You gave him Figma, FIG.
No. I think I gave him Arrow, AIRO.
Oh, AIRO, yeah.
Or Fly or something like that. I don't. Maybe.
And I gave Jack Zillowitz Snap because it was the only thing I could think of that he would know. He's a brand new trader.
Yeah.
And he did. So I did the same thing I do to Logan. I was like, send me a picture of because I do this to Logan. I was like, send me a picture of your confirmation that you actually did what I said to do. So Jack sent me the confirmation.
He probably bought whatever you told him to, but now, Logan goes through so many phases of his life where looks at his P&L and he's like, close all, I need that money.
Yeah.
Well, the nuttiest thing is this generation, it's totally different than the previous generation. They're all getting engaged. Now, Logan has 3 friends engaged. It's insane.
He does?
Yeah. Yeah, another one got engaged. So, some of the kids from his fraternity who graduated last year, so they've been out working for a year, they're engaged. This group of these new 22, 23-year-olds, they're getting engaged at 23 years old. It's crazy. Which is how we live. That's how our generation was. But then you have the generation in between us where they're all getting married later. Now these
millennials got married in their 30s and had kids in their late 30s. That's what the millennials did.
Yeah. So now, engaged. Do you know how many friends I have whose kids are Logan's age or 22, 23? Engaged. It's
wow.
And so when Logan sees his account and thinks he's going to need to buy a ring, he's like, close all. And I say, you just have to wait and figure your life out. You don't want to like settle down at 23, but we both got engaged at 23 or 24.
I got married at 24. You got married at 24.
Right. We were both engaged at 23.
Yeah.
So anyway, he sold the stock that you gave him because in his mind, he's trying to save money.
Well, he didn't send me the confirmation. He does send me the confirmation when he buys it.
All right. I have a surprise for you, Liz. I have a surprise for you. Brace yourself. It's not going to look like much, but you scale it up and it would. Hold. Where is it? IGV.
Okay.
IGV is
our pairs trade.
And SMH is up.
Ba, 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 ba.
Now, it doesn't look like much because we did this on a baby scale. This is the stock pairs trade, which would normally be done on a much larger scale, but this account is limited, so we just did it on the smallest scale we could possibly do it, 5x1. So if it's up $7, $8, $9, if we did 10 times, this would be up $100. But I think for this pairs trade, let's look at the chart and see how this IGV SMH has come in.
I mean, it's not going to look crazy because it's not going to. 5 to 1.
5 to 1.
Wait, and you have to flip it, right? Did we sell IGV?
I just wanted to look at the chart. So we were saying this chart was really getting to an extreme, and we're playing for a move back up. We could leave this. For a little bit longer. We could. But I think this was more for a demonstration of this is a pair. This is how you put on the pairs trade. We did this baby scale. But you look at the bounce up this pair is having today.
Okay, I agree. Can you put it in for a different price?
What do you mean? Oh, okay. So we would flip it. We'd be, because right now we're long IGV, short SMH.
Open the positions page to make sure that we're doing appropriately.
Yeah.
I like to confirm. So you're going to want to flip that. Yeah, you're selling IGV.
So we're long IGV, short SMH. So we'd flip it. We'd be selling 5 IGV, buying 1 SMH.
Have it triggered at 5. Do you see where it is right now? It's 4.0. Like if you look on the chart, it says 4.3, whatever. See if you can put it at 5.
I'm going to move this bar down so we can see. So here it's like negative 3.6. So we would want it
negative 5. I want negative 5.
Well, maybe
5.0.
Look, if I won't go here, it takes it to negative 23.
Yeah, but we can also cancel replace it. No. Look at that. So you can see it on that side. It says negative 3.2, and then there's a negative 5, right?
Yeah, but at that point it says, 4.9. Right.
Yeah. So do negative 5 and hit review and send. You could probably just type it. Just type it.
3.4.
Just negative 5.00. You can see it on the chart.
Okay, so I'm put in 5.00. If I hit review and send, then it says, it doesn't say how much we made.
It doesn't.
No, I wanted it. I wanted it to say, this is how much you'll make. But I'm just going to send it and hope for the best.
Look at us. And if it is gone, it's going to be a great day. It's a great day to be alive.
You know what? Sometimes I'm going to take a look at our Tasty FX because if there's those are gone, we know we took a win because we just have like working orders to close winners. Whatever's left is our losers. You're going to be surprised when I take a look at Tasty FX positions.
They're still going to be there, all 3 of them. Yeah, all 3 of them.
Oh, here.
Although, take that off.
Yeah, Great British Pound, USD. Sure. 1 click close. Watch how easy.
Did you like my sound effects? Did you like my sound effects?
Yes. And then profit loss up $28. You know what sound effects I missed because you used to do it every day before our Mexico trip?
I did.
Percolator.
Oh, yeah. Bop, boop, beep, boop, bop, boop, beep, boop.
All right, so our IGV SMH is working, and I hope by the time I come back from Florida, I hope when I'm 50 years old, this trade is gone.
Oh, God, that sounds like it's so long from now, but it's not. It sounds like it's an eternity from now, but it's not.
Oh my
Tuesday,
goodness.
Jenny. By the time the next time you have Friday's show, tomorrow's show is your last day in your last show in your 40s.
I know.
It's crazy.
I know. Then I hope I'm not fired. Because I think we were.
Oh yeah, we only had until we were 50.
I want to say I've outlived my what would you call it? My expectation. How old were we when? It was probably.
Let me tell you this: we were 30. We were 35 when we started on Tasty, and we were probably 36 or 37 when we heard Tom say we only had 7 years left. So 45. We're 5 years past.
We started in 2011, and I want to say we were on an airplane. We're on an airplane in 2015. It was like 2015 when we were flying with Tom, and some lady said, "Oh, you guys are all on TV, or you're all on a financial network." And Tom said, "Yeah, those two girls have got about 7 years left." And
no. Let me finish it. He goes, "Yeah." It was something to the effect of they are still young and cute enough where people like to look at them, but old enough where people take them seriously. They've got about 7 years left.
And that was in, I think, 2015.
And I was like, we can hear you from behind him.
That would have ended us in 2022. It's 2026 and we're still here.
We're still standing. Every day.
Okay. So I know there was something else to close. Uber.
Oh, you know what? Our SPX got closed too.
Okay, I'm going to flip this so we have the end of the alphabet at the top here. Uber and SPX. SPX. Where is it? Oh, here. Our SPX, we had an Iron Condor, we had a GTC in for that hit. Wonderful. Uber, we sold the 70 put 22 days ago. Now,
that's the long game. Well, look at it. We made $59 back today.
I know. Yeah, this thing just came in. So we're up almost 40%. I think we closed that.
Yeah.
Okay. Filled. Now that we've done some cleanup,
SPOOs are fighting their way back, Jenny Andrews.
I know. So an SPX put spread recap, Florida 7, if you're listening. Liz, you sold some on the open, but then when SPOOs were down 80, closed them and sold new ones. So that should kind of cover your losses.
Yeah, doubling up to catch up. But yes.
Not a trade recommendation. I waited on the open because honestly, I sometimes I can see the future. In my mind, I thought Nvidia was going to turn red on the day and that the market might fall. So I didn't do it because I was actually nervous about Nvidia. I thought, well, this doesn't look good. So with the great earnings, I thought either it was going to be sky high or it was going to take a hit. So I waited and then just sold them. I sold them when you sold your additional 2. So that's all we've got going on today.
Only because I just did glance up. I'm sorry, I'm not cherry picking, but somebody in the chat, Ranch, I hear you, says IONQ, carry me to glory. How much is IONQ up? They had.
Oh, I know. Those quantum. IONQ, isn't this one of the quantum stocks?
It's one of the quantums, yeah.
Up $6.
20%.
Yeah.
That's a lot.
Hold on, let me see. Notification. Oh man, and I have this. Peppy is a top mover on Coinbase right now. We can trade Peppy right here.
We can.
I just got that notification. I'm going, okay, crypto, Peppy. I want to see it. I'm not going to believe it till I see it.
It's up, down 5%. It's down 5%. When they say top mover, they mean to the downside.
No, they meant yesterday. You see that green bar yesterday. This is old news. So
why are they giving you yesterday's news today?
It just came in. The notification just came in.
I know. That's what I said. I said, why are they giving you yesterday's news today?
Yeah. So here, trade with zero hash right on our Tasty platform. We're not giving you old news. It's not up. It's not the biggest mover today. It's down today. But yesterday, it had that brief shining moment.
One moment in time, just like it had its Whitney Houston moment, but it's not even up that much.
Okay, so and this is just this chart. I want a bigger chart. On a bigger chart because I don't know where I bought Peppy, but like if Peppy
you probably bought it at 0.00000.
Hey Liz, you know how you had that dream that you made $22 million this year?
Yeah.
Peppy is how we could do it. Peppy goes from 0.0000387 to like $1.
It was so funny. So we have a Pepe in between the two of us, a Pepe restaurant. I've never been to it, but my little kids were so cute because when they were little and we'd drive by it, I would drive by it every day going to your house because they got babysat by your neighbor. And JD one day was like, "How come you never take us to Pee-Pee's?" And I was like, "Oh, he's so cute." So we're not going to Pee-Pee's ever.
Well, I only bought this because I liked the little frog guy.
All right, let's pop in. We've got lots to do today, Jenny Andrews.
We do.
I know we've got earnings today. We want to take a look at CoreWeave.
So IONQ, that must have had earnings maybe. And what else are all of it? What is the other?
BRKB, something like that, like BRKB maybe?
No.
Berkshire Hathaway.
No, the other
from our train conductor.
Yeah, QBTS. D-Wave Quantum.
I mean, it's up slightly.
They have earnings. They had earnings this morning.
Yeah.
Just up $1, QBTS. Does that, let's take a look. Does it say here how their earnings were? Did they?
No, it'll never tell you what their earnings were.
What do you mean? I mean, here you see earnings per share, but I think that's probably the last one. I don't think it's updated yet, but
it says negative $1.35.
Yeah, I just want to see the news. Q4 revenue misses estimates.
So take a look at this. Just go to the top one. Wave Q4 revenue misses estimates. There's no context here. It's up 6%.
Yeah. Does this make you want to get into QBTS with some short puts?
I'm in QBTS.
You are?
I never got rid of them. I have IONQ and QBTS.
I told you, my son warned me to not get into these quantum stocks, and so I didn't. But these puts
they haven't been bad.
No. Look at this.
Oh, wait, hold on. I'm hit review and send real quick. I mean, maybe up the price. Just hit review and send real quick. I think you can't do it. Hit review and send. It doesn't matter. Oh no, it's fine. Okay, some of these used to be closing only.
Okay, so for the 19 put, I can get $1.15 and use $235 in buying power. Maybe this is what you should put in Larry's account.
I'm not selling puts. I don't want to, especially if I was like, Logan hates quantum computing. You too can lose.
No, he doesn't.
You too can lose $1,700.
He doesn't hate quantum computing. He just said it's like so far into the future. It's so far. We're still so far away.
So if I'm gifting something, it'll never be a short put. It's supposed to be complete and total positive upward potential.
All right. Well, I understand. I'm going to sell this put. I'm going to put in $1.15 offer for this QBTS 19 put. I'm going to put in an order for that. See if we get filled. And we're filled. And now let's quickly tell the story. I know you don't want to give naked options for a gift, but on the road, we used to do road tours. And I don't want to say used to do, but we do road tours. We go out and do road shows. And we always have giveaways, and we've given away gold bars, we've given away cold hard cash. But one road show, and I believe this was in Omaha. Do you remember what we wanted to give away in Omaha?
Oh, XRT strangles. Can you see this?
You've got to back it up. You got to back it up.
I don't think it'll work if I back it up.
Yeah, no. There you go.
There we go.
Right. I think you just have. There you go. That looks good. So, he said, she said tour. We wanted to give away to everyone.
No, it was a joke. All of us were laughing our tails off. We were going to give away XRT strangles. And it's you get an XRT strangle, and you get an XRT strangle, and you get an XRT strangle. And I don't think I've ever laughed so hard in my entire life with Tom and Tony. Those were fun times.
They were fun times. And I like the idea of giving away XRT strangles.
I think it was your idea. Because and that was well before, if we did that was well before the meme stock craze. People could have lost thousands of dollars being short calls in XRT.
Oh, you worry too much, Liz. You worry too much.
It was one of your biggest losers on the year was a short call on XRT.
When we were in Omaha, no, wait. No, my XRT, it came back. You know what XRT, I had a short call on XRT during the GameStop meme phase, and I turned it into just like long puts to the downside, and it all came down, it all came back, it all worked out in the wash. But when we were in Omaha, it was not during the GME meme phase. And we would have given away
no, it wasn't. But I'm saying if you give a strangle away, you can't take people out. That's why you can't gift
a strangle.
You can't gift short premium. We do have a lot of tweets coming in.
All right.
So do you want to get in? So we have Bob on Fire. I mean, we have Blue Wackadoo who starts it. Frank Walsh who comes in.
I'll just go top down.
Yeah, there you go.
This is coming in from our YouTube chat. If you're on the YouTube chat, Frank shares it with us on Twitter. This is coming from Jared Kramer. Check on your Oklo position too, gals. My leaps are big green today compared to yesterday. So we took off our Oklo position, Jared.
Yesterday.
Yeah, we took off our Oklo position yesterday, and I wanted to up $3 today. I wanted to get back into some kind of nuclear today. My brother is running but he's part of a nuclear conference down in Phoenix next week. And the nuclear business, Liz, I mean, he's been in this as long as we've been trading. He started in the 90s in this nuclear magazine. They couldn't get people to come.
He wasn't wrong. He was just early.
Yeah, they couldn't get people to come. They would run these conventions, and they'd be lucky to get 20 people there.
Yeah.
They couldn't sell out a floor of the hotel. The aisles of the convention would barely have anyone walking by. Now he says every hotel in Phoenix for this convention is sold out. They can't even fit any more people in. They have more people calling him wanting to come than they could even manage. It's bonkers how busy this nuclear industry has gotten.
That's good though.
Yeah. So Oklo's up. That's great. It's like a small blip, but we took ours off for a profit yesterday. Another one that is up very small and it's really taken a hit is SMR. Maybe we get into that since we took off our Oklo.
And that's pretty cheap. It's $13.
$13. Maybe you want to buy that for Larry.
So yeah, I mean, I agree with the chat. Gifts should not have theta decay. Stocks make great gifts. I agree.
Oh, look, I didn't even know they have earnings after the bell today.
SMR? Oh, wow. Okay. Let's get into it.
Okay, so I was just going to go. I wasn't going in this for an earnings trade, and the earnings expected move is small. I was just going to go to April and sell a put in April, like looking for $100.
That's not bad. I don't mind it.
No. So that's
a great return on capital. So, and if SMR moves, it's expected to move overnight. We'll probably take, I don't know, $40 out of this. It will. I mean, we don't have to close it, but it'll be worth probably $40.
If it goes up, if it goes down, we've got room. It's trading 13.30, and if it goes down, we've got room. We've got the 11 put.
Yeah.
$99. Here's my 99 offer.
Come on, somebody take it.
On SMR. I'll compare. I'll look at the Feb. Or March, the March 11, 54. So it's 54 in the 22-day or 99 in the 50-day. I think that's fine.
Yeah.
Okay, so back to Twitter. Patty Handy popping in to wish Jenny happy birthday. It gets better from here. Thanks, Patty.
Yeah, I mean, it does. I think it gets better after 50 from what I've been told.
Everyone said, I mean, what are the golden years? Like your 60s, right?
Do you know that the Golden Girls, speaking of golden years, the Golden Girls were your age?
I know. I remember hearing that. I brought something in to show you. No, I don't have it. Sorry for the... I brought... Yesterday in the mail, I got an ARP letter.
The AARP?
Yeah.
You made it, Jenny. You made it.
So before I would get mad at a drive-through if they would say like, oh, do you qualify for the senior discount? But now, maybe I do.
Now I'm going to have to go with you, Vic, and she's with me. Give me the discount.
Give me the discount.
That's funny.
Okay. Thank you, Patty. Thank you. Okay, Bob, on what do we have going on here? Bob, what does Tom know? You're both beautiful. He's not improved. Thanks, Bob.
Thank you, Bob. Bob on Fire is the best.
Yeah. Florida 7, my generation, if you were not married by 20, you were considered a lifelong bachelor.
That's scary to me because my son is going to be 20 in November. He's only 19 now. And wow, like like I said, their frontal cortex is really not developed until they're at least 23 or 24. And then Don Duke comes in. PayPal is crashing. Let's take a look at that. That was 20 minutes ago. Let's see if it's still crashing.
Okay, PYPL. Down 3%.
Was it down bigger? I mean, it might have been.
So it got as low as 44.93. And I mean, look, it was 47.50. So that's a big range for PayPal. Did they have earnings today?
No. They had that news the other day, I think, didn't they?
Okay, so on this down move, would we want to do something like? No, you're not.
Yes, Stripe is considering acquisition of all parts of PayPal, and that was the big move up. So Stripe was considering acquisition of all parts of PayPal. Yeah,
that was the big move down. So now it's kind of
no, that was the big move up.
Right, that was a big move up, and now it's kind of coming back down. I mean, so you see this giant move up and coming back down. Look at AMD. That looked ugly. That had that big move up, and ever since then, down.
Wow.
Are our puts at the money yet in AMD? 165. No. Oh, no, they're so far.
Oh, we're in great shape with that.
You could give those puts to Larry and sleep like a baby at night. All right. Thanks, Don Duke. Do we want to make a trade in PayPal? I don't know. When it's in the news like that, I'm not sure.
So it's got a 43 rank. It's only a $45 product. It's not bad. I think. So remember how we talk about certain products just like PayPal? You say PayPal and it gives me a bad taste in my mouth.
You've always said that.
Always. And I don't know. It hasn't really done anything to me. I just don't like it.
But aren't they with Venmo? Aren't they the same company? Or I don't know.
I don't know. I mean, Venmo doesn't give me that much of a response, but PayPal does. I'm not a fan of PayPal.
What was that?
Build an SMR.
Build an SMR. Okay. PayPal crashing. We looked at that. Red shirt, red market, surprising given Nvidia.
I know. It was surprising.
And then,
okay, here we go. CoreWeave. I do want to look at this. Rocket Lab. I want to look at this. And then you. I
want to talk about me.
I want to talk about
I want to talk about
number one. What I think. What I like. Yes. You has earnings. And that's been one of my darlings this year, by the way.
Yeah. You has been a darling.
It's been one of my darlings.
It's an energy fuels.
Correct. So, it is a ratchet candidate for me. It has been ratcheted since the low single digits.
So now with earnings. Okay, look at this. Only $1.63 expected move in the 1 day. Then you go to $3.90 in the 22-day and $6 in April. Sometimes you look at these and it's like $1.63, $1.83, $2.20. But
do you think that April could be wide markets? This isn't exactly. No, it's not.
It's not. Like I'd rather almost do a jade lizard in April.
Look at the buying power. You're using when you add on that. Take off the call spread. I mean, you can put it right back on. But I want to show the just put.
I feel like this is.
Look at it. You're getting 91 cents for using 170. That's pretty good.
Yeah. But there is risk. The risk is getting long. If I sell this put for about $1, the 17 point, the risk is getting long. 100 shares of you at you at $16. Now,
I'm cool with that. But I like you. It's so hard. Why did they put a fourth U on there? No. It is just so hard to say 4 U's. You.
What do you think? I like the getting out of the way, because if we go into this weekly, we're right there.
Yeah, I agree. What if I don't think this is going to work. I know it's not going to work, but go pretty far out in time. Go to like Dees. I want to see how much premium they have in those. But just like we did with snow.
Oh,
I know they don't work.
There's no Dees, but we've got to go to Jan.
Go to Jan.
The good old long-termer. That's what is that? We need a name for this.
The good old long-termer. I mean, you can go to the 10 for $1.
Yeah, you can go to the 10 for $1.
Using 135.
When we find these Jans and they set up, they're 100% return on capital.
Yeah.
I mean, but now I would never recommend putting all 100% of your buying power into all these.
Because she would never recommend anything. But yes.
I don't recommend anything. But when you pull these up, they're mostly 100% return on capital, close to 90% return on capital. These Jan trades.
Yeah. I mean, so take a look. If you go back to the chart and take a look at 10, it's been a while.
But I don't want to get $100 in 323 days. Let's try to get.
But for the return on capital, when you think about it, so snow, we put it on. Snow didn't move and went barely up, and I got out for about 20%. So then, from that perspective, if you're getting $1 and it goes up, you're going to get out for $20. So you have to kind of put a spade. That we're in one lots in this, so it's hard for us to sell it for $100, knowing that it's going to be $20 overnight.
Right. And so here, let's say we get in with 17 put and for 50 days, and then we can sell another put for $1 and another put for $1 and another put for $1. And we could rack up at least like $400 or $500 over the year versus, and if it goes down, let's say you goes down and we get long at
it's a Wheel of Fortune candidate.
Yeah. Then we can sell calls for $1 and sell calls for $1 and sell calls for $1. I think we can make more money that way in than going out and sitting on that put for $1. Although I didn't mind it, and we did it in snow, but snow we were getting $700 for $900.
It's the same thing, but we're in one lots here, so you're not going to go. Yeah. That's 9 of them. You're not going to do 9 of them.
And how much you would I want? I don't know.
I prefer. I know you were looking at $6 versus the March. I prefer the nearer term, but that's just because I'm in it, and it's a Wheel of Fortune candidate cycle for me to begin with.
But what are we gonna do?
Even the 23-day.
But what are we gonna get?
Get $1 wherever you get $1.
The 19. Yeah.
Sure. Because to me, if it goes down, great. It just click on the 19 or click on something for $1. You go to 19.
Here, 82 cents.
Okay, and then go to the 1-day expected cycle. I want to see how far out of the expected move it is. So if you take a look at this, so the implied volatility is expecting a $1.68 move. By doing that, this gets your break even all the way down to 19. Can it go there or to 18.25? Can it go there? Sure.
Yeah. But yeah, we're going to get 80. So what's mid-market here? 85 cents and the 19 and the 22-day.
So what's interesting about this, Jenny, and I hesitate to say this because I really don't know anything about products, but with Oklo, so this seems to move with
the energy, like it's in
Bloom Energy, Oklo, they all kind of move in conjunction, in lockstep a little bit with one another.
And Bloom Energy is down a lot today, right?
Oh, it's been up so much recently, though. It's got to give a little bit back.
So, yeah,
go to the chart.
Go to the chart
today. And Bloom Energy. That thing is, so you'll see it's got to give back occasionally.
Right.
Bloom Energy has been skyrocketing.
And it's funny, like and we've talked about this before, if you're an active trader and you're watching all of these every day, you're going to see you're going to see the day-to-day moves. You're going to see the up 10, down 10, up 5, up 4, up 3, down 10. You're going to see that because you're watching every day. Or if you're like sitting by the sidelines, just a passive investor, you get a quarterly statement and you're not seeing those daily moves.
Well, and Jenny, I'm glad you brought that up too. And I'm not saying you did anything wrong, but you were just like, Bloom Energy is down big. And I was like, whoa, there's no number. I didn't even look at Bloom Energy, but I was like, there's no number that you can tell me that Bloom Energy is down big.
Because it's been up, it's gone from 133 to 178 in the last 2 weeks.
Correct.
So down $10 isn't that big of a deal.
So if you're a newscaster and you look at this and be like, Bloom Energy's on the move, it's down a ton today. Is it? Like, do you know what I mean?
Right. But I heard it in the news.
Correct. I know. That's what I'm saying. I'm not knocking what you're saying but I'm in Bloom Energy. So that's the way that you know the way that it's moving is because I look at it every day in my portfolio.
Right. Okay. So we got into you.
I do want to get into CRWV.
And let's go get into CRWV.
I don't know why this reminds me. I was never a cheerleader, but I know you were. But I don't know if you had this here, but that's the way you spell rowdy. ROWDY. Did you do that cheer?
Yes. I thought you were going to say UGLY.
Oh, that is my favorite cheer. But that's why every time we go CRWV, that's the way you spell rowdy. It just
Is there a ROW stack?
ROWD.
No.
Go ROWD.
No, there's not.
Oh, I know if we ever make an ETF.
Okay. CRWV. Okay, CRWV 9760. This is a product that we have. If I go to our history, I'm just curious.
We've traded this pretty well, I think.
Well, let's go to the order change and take it to the tape.
Take it to the tape.
Oh yeah, look at that.
Take it to the tape, sister.
Take it to the tape. And really, I know
this is the one. So I know they're not the same, but Circle and CoreWeave came out about the same time. Circle is crazy as far as buying power. CoreWeave is not.
CoreWeave is not. And I was going to scroll. It's mostly buying put. And you know what we did a lot of in here? The buffer, I think.
I think you're right.
A lot of buffer.
I love the buffer in there because it helps, because you can sell an in the money put. It doesn't hold up that much capital.
Okay, so let's compare. Let's compare a naked short put to the buffer.
Well, okay. Before we even get into it, there's way more profit potential in a buffer than there is the naked short put.
No, I know, but let's just
sometimes the simplest is the best, right? Sometimes that naked put is the best. Go with naked put first, because
so 20 delta at the expected move, $2 getting $204 as long as CoreWeave stays above 85.
Look at that return on capital. You're getting $2+ for $8 or $200 for $800 overnight instant gratification.
The risk is getting long 100 shares of CoreWeave at 83. Okay.
Yep. Facts.
Okay. Now the buffer. So our break even on that is 83. That's all we're going to compare. The buffer 98, 85. 450. Okay, that gets our break even to 85, which that to me is close enough.
Close enough. I agree. We're buying the put we would have been selling, so we're giving up that extrinsic value.
And I think we could sell the 102. So we have $440 in profit potential. $440 in profit potential
versus 200, which isn't that much more.
Well, it's double.
No, I know, but it's not like glaringly obvious for me here, because if it goes down, you don't make anything. You just don't lose. But in the put scenario, you're making $200 even if it goes down. That's what I watched in CRM yesterday. When CRM was going down, it went down to 180, and I didn't sweat it because I had the 170 put. Do you know what I mean?
So here you've got this room to 85. You can make 438, but to your point, only if it goes up.
Only if it goes up.
Now, if I wanted $400, I could sell two puts for $400, and it could go down, and I could still make that $400.
Yes, I agree. So in this situation, I think I would rather 2 puts.
Yeah, like sometimes we look at the buffer and we have a lot of profit potential, but here it's not a ton. Now it could be more if you move this put up. Then you could move this put up. Like, there you go. Now we've got almost $600 in profit potential, but our risk is at 87.
Yeah, there's the gimmies and the gotchas on everything. I kind of like the 83 for $200.
I'll take the 83, Chuck. Is that Chuck Woolery, or is that a different show? I'll take the 83 for $400. Or who's the Jeopardy guy?
No, it's Alex Trebek.
Okay. Oh, it's not the 83. 83 is the break even. It's the 85 for $200.
Yeah. Now, honestly, just do me a favor. Just put in 2, because I'm not saying put in 2, but it's that same thing. If you wanted to do 85, 83, I know that's going to be 2 of the hit. There you go. So we were close. Like if you were trying to make $600, we were using about $1,500.
Yeah.
Sometimes it makes sense and sometimes it doesn't. What I do love the buffer trade for, Jenny, is after earnings trades.
if something's up after earnings, now it wouldn't have worked in Nvidia, but like if something's up after earnings and you think there's going to be some momentum and you want to catch that momentum, that's when we might throw in a quick buffer for the week.
Or the day, like yesterday.
Well, yeah, I mean, a lot of these stocks don't have dailies.
True.
That's why I had to say the week. But I know today's a Thursday, so it is just a day.
Yeah.
All right, 208 credit, mid-market 208 credit. Here we go. It's popping up. Our 208 offer. There it is. There it is.
We'll get filled on that. SPOOs are they're not fighting back anymore. They're slip sliding away. They're down almost 60 again.
Got it. Sorry.
Now, do you?
There we go. We're filled. 208.
Perfect. If you want to go back to Twitter, Jack Tucker is coming in with 4 minutes ago with his SPX update.
Okay, we didn't quite get to Blue Wackadoo. Blue Wackadoo re-entered Nvidia RSB this morning, probably too early, but you could see he had room. He had room.
Yeah, I think he got out of it and then got into it again, where he says he re-entered it.
Right, ratio Super Bowl. Okay, so then coming in, Jack, 2 double tranches, collected 21,000 or 20,000 to 823 after fees. Nice, Jack.
I like it, Jack Tucker. And we'll keep an eye on your strikes. Take a look at Bob on Fire 11 minutes ago. SMR based on so he's got the Bob on Fire trade. Look at that. All the way down to the 7 puts. This is not bad.
Oh, that's good. That's good, Bob.
So look at his profit potential. He's got $1,075 in max profit. Now that's pretty good.
No, that is good. $15,000 to $25,000 in profit potential, selling 2 7 puts, getting long at 7, and honestly, like getting long SMR at 7, the wheels have to fall off for it to get back to 7, right? I don't. Now, before the nuclear boom, it was there.
Oh yeah, for sure.
Like, so when the nuclear boom started, and I guess I hesitate to say like nuclear boom, but when the rage of the nuclear stocks,
you feel like that was better articulation.
When everyone started, so this is before everyone started, like the nuclear stocks started getting hot. This is before when my brother couldn't sell out his convention and he was the only one walking the hallways. Now he said he got calls yesterday and these people are paying astronomical prices to stay at hotels that aren't even close just to come to the nuclear convention.
Oh, can you get us a closer hotel? Let's go to the nuclear convention.
So the funny thing is, he said, don't you remember it was this nuclear convention in Phoenix that
he came with us.
He came to our show. We were doing a show in Phoenix the same time as this nuclear convention, and him and a couple of people from the nuclear convention came to our show.
I remember, because that was the show my son and my husband came to. That's why I didn't go to dinner with you guys.
And it was like St. Patrick's Day because we were all in green.
Yeah, it was St. Patrick's Day weekend.
Yeah.
I do remember that.
So, Bob, I like it. Yeah.
Pretty good. Jack Tucker, Mr. Market. Here we go. 13 minutes ago.
Okay, good. I mean, we've had great tweets.
Wait, can you go back? Can you go back down to just slide under Bob, because I think that Jack Tucker. So that 13 minutes ago, Mr. Market closes SPX. I think this must have been
yesterday's. These give back 14,530, leaving a daily profit of 18,000.
So he didn't get full premium. He only got 55.73% of the premium.
Jack, all I know is every day when Liz and I are on our way home from work, when we're standing on the platform of the train, pretty much when we're leaving the SIBO pit and we're standing on the platform of the trade, every day we both say, one day we want to be Jack Tucker.
We want to be Jack Tucker. It is true. It's a train platform that triggers us saying we want to be Jack Tucker.
It's every time we're standing on the train platform waiting for the train. Every time, Liz, without fail. We want to be Jack Tucker.
We want to be Jack Tucker. Yeah. Well, half the people on the floor want to be Jack Tucker, if it makes you feel any better, Jack.
Yeah, the traders in the SPX pit want to be Jack Tucker.
True. Okay, we don't have a lot of time. We've got about 2 minutes left, Jenny Andrews. Do you want to go through what we've done today?
Sure.
And I've got you for one last show in your 40s tomorrow, which will be very exciting. So we can clean up and do things in the account before I've got TP on for 2 days.
Okay, SPX, our GTC hit on our Iron Condor, which today I had sometimes I get these premonitions or visions. Do you remember when Robin came on? Robin was on Rising Stars, and she made like all of her money that year selling 45 days, selling durational SPX iron condors. In my mind, I thought this is going to be a year for the SPX iron condors.
Because those work until they don't.
Yeah, right. But if we're in a year where we're just kind of chopping around, those will be great. So I think this was one of those durational SPX iron condor. I might go back to those.
And take a look at this. We had a limit in of 240, and we got price improved too. And it's a GTC that hit, so we know it's the price that we wanted.
Well, yeah, right at 830.
Yeah.
Okay, so we closed our snow puts. We closed our Uber puts. We sold some QBTS puts, the 19 put in QBTS. That's a quantum stock. We sold SMR puts, but maybe we've been better off with the Bob on Fire trade. And in UUUU, we sold the March 22-day 19 puts for earnings and the CRWV 85 puts for earnings.
Yeah. All in all, a good day.
Busy.
It was a busy day. They're all busy days, though. So, okay, I like the prediction markets that Jenny and I are going to put out this. Can we take a look at where VIX is right now?
Up $1.88. That's a big move.
VIX is up 10%. That is a big move. Still
oh
under
my gosh.
20. Still under 20 though.
Do you remember what was that strike that someone bought? Do you remember that strike so far? Someone bought the VIX calls.
It was June. It was June, and it was
like 95,000 or something. It was so high up.
No, it wasn't so high up. It wasn't so high up. I can't remember the strike. We're really good at this.
No, I remember saying like, it's so far. It's so far. And then then we said, but if you buy 90,000 of them and you make 10 cents, you make $95,000.
Yeah, they're probably out of them.
You think it was June?
I think it was 110. I thought it was June 17th. Wait, go down a little bit more. Go down a little bit more. No.
Because if they're out of them, we'd see it.
Yeah, no, go towards the strike, towards where it's trading. Yeah, it's right there. It's the 47 and a half. It's 164,000 of them.
And okay, so let's see. So they're $1.05. You can go to like last night's, right? Like, let's see. You can go to last night's closing price, I think.
I don't know how to do that.
Change the net change for the day. No.
So there's that thing that says
price. No. I thought there was a way to see the I don't know.
But nonetheless,
there is a way to see it. It's like you toggle over it. There's a trick to it.
Okay, well, I don't know how to do that. That's a trick that's beyond my
Here's the option. So
yesterday they were, I don't know. I have no idea.
I don't know. We stink. Sorry. But with the VIX up $1.90,
yeah,
to get out of them, and I'm not quite sure if that was exactly it, but I do think it was something very cheap. They bought them for a very cheap price. Or I think we're thinking of the 4,000 puts in SPX. Remember, someone bought the 4,000 puts in.
No, whatever it was definitely the VIX.
Well, even those, and we're out of time. We're running into the next show. All right, Liz, have a wonderful Red Shirt Thursday. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow,
everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And we are live from the SIBO floor. It's an electric day. We got in today, markets were kind of just flat, and then right when Jamal got in, market's selling off.
That's right.
Amazing.
That's right. It's amazing how that happens.
We had to hit our quota.
Well, I would love to take credit for it, but we all know it's due to Nvidia. Big earnings last night.
Yep.
I mean, they hit on every single measure, but it's and the stock was up in the after hours. Went to 203. I don't know exactly where it closed. 190 something. Stock's been creeping up all week.
Yeah.
So there was that. There was clearly buyers heading into the event. It was almost like a buy the rumors, sell the news situation, and that's exactly what we've seen. Markets obviously started taking on the chin. We talked about this. Like, we've been doing the show now. God, I guess it's like 3 months. We've been doing from the floor.
Yeah.
And I think it was the third show that we did was an earnings day, which was a crazy day. Huge move. Huge. What's the word I'm looking for? Range. Huge trading range that day, for what I remember. I think we were up pretty big, and then we ended up going down pretty big. This is not quite that, but still, there's no doubt that this stock moves the market, and there's so many things that are connected to it, and it's still the center of the AI trade. I heard somebody say this week that it is not a transformative name anymore, and I'm like, well, I don't know about that. That's kind of silly. When you look at a day like today and you see how many things it affects, I think that's still the case.
Yeah, we saw it reach a high of 203-ish in the after hours yesterday, and then tried to open flat today, ultimately did, but then sold off immediately on the open. And you can see that if you look at the 1 minute chart from this morning. We were hovering around 195, and that's where we closed yesterday. And then right when the bell hit, we just sold all the way down to 185-ish, and that's kind of where we are right now. And with that, we saw the E-minis sell off, the NASDAQ sell off, Bitcoin sell off. One thing that was interesting, we talked about the possibility of this too, is that Microsoft ultimately was flat on the open, and when we had the sell-off start in Nvidia, it was down like 3-4 points. Microsoft was up 3-4 points. So we knew that Nvidia would likely report good earnings. They did. They were, crushing these record revenue numbers and whatnot. But that doesn't always mean that the market's going to send that stock higher. And you're seeing that today. We've seen that before with a handful of other big name tech stocks. But I think it will be interesting to see what happens with something like Microsoft that's been absolutely beaten down. It's been on the wrong side of the software narrative, but catching a bid here, finding a bottom around 400, and if Nvidia continues to liquidate, maybe you see some of that go into Microsoft or some of these other tech stocks that have taken it on the chin recently.
Well, some of these software names that we've talked so much about are actually up today. I thought Intuit, is that positive right now? Thought I saw that was positive. Yeah, that's positive at the moment. Although it's towards the bottom of the range right now, but I've seen some of them be positive today. CRM had earnings as well, not to be forgotten about. Was higher as well. I think they actually had good numbers. So I think that's part of the reason why this software space is moving. IGV is probably positive today based on a couple of those names we just mentioned. Microsoft was positive earlier, slightly positive. So, but it's fading some, and again, that's some of that is market. I think some of that is still sentiment around this stuff. Yeah. We've had, for the whole month of February, I feel like this has been the story. Software stuff, AI stuff. Is AI eating XYZ's lunch? This has definitely been the story for the whole month of February.
Yeah, it's been wild to see this chop, and neither side between the bulls and the bears have really caught hold here. I mean, we've chopped around this 200-point range in the E-minis SPX for 4 months pretty much, and we've yet to see any kind of substantial sell-off or substantial rally. Jamal brought up a good point. If you look at SPX, we haven't gone above 7,000 since January 28th. Yeah. And we've just been chopping in this range. We also haven't gone below 67.75 in that same time frame. So really narrow range. And even though we're selling off today, same story. It's like a broken record. Volatility not really reacting. Yes, we're in the 20s, 21, 22 as you go further out in time, but still in contango. And until that changes, like, I would not be surprised to see this dip be bought. You can see it's kind of happening already from the lows. We were down 80, 90 earlier today. Now we're down 60. Trying to make a leg lower here, but
I don't know, man.
We'll see.
I don't know. I'm just looking now, like at a monthly, and the S&P 500 closed last month at 69.39 SPX. As of today, I mean, right here, we'd be down on the month, which we haven't seen since what was that? Was that November? Yeah, November is the last month that we were negative. So, yeah, it's not looking good. It's not looking good so far. And again, I shouldn't say that. I mean, we could probably use a month.
Not looking good. We're like,
I know. If that, we could probably use a month where we chop around, right? I mean, we've had. I mean, you've seen so many different months where we're just positive and it's like big bars, and I think we've kind of come accustomed to that. It probably doesn't hurt to have a month where we've kind of just chopped around.
Yeah, I think
which is great for options, by the way.
Yeah, for sure. Lots of opportunity if we continue to sell off here and just chop. With some bigger intraday ranges, but same story applies. You have the market selling off, but I think volatility futures markets are waiting for follow through. I think we need to see like 100-point sell off after today. If we see a big sell off tomorrow, or maybe we see chop on Friday and then we see a big sell off over the weekend into Monday, that's when you're going to get the volatility reaction. And until that happens, I think you'll still just see the VIX stay bid at 20 or around 20. We'll still stay in contango, which just tells us that we'll still see some more intraday volatility, but nothing too crazy because there's no follow through. We need to see follow through in this market before you see a big reaction in volatility futures. Looking at the futures market here, to the upside, crude up 1.5%. Looking at wheat, catching a bid here, up just under 1%. Everything else within that 1% range, and then to the downside, silver selling off quite a bit, down 4%. Bitcoin down 3%. ETH down 3%, almost 4%. Nasdaq down 1.5%, as you might imagine, with Nvidia selling off, and E-minis down almost 1%. So.
Bitcoin, that's unfortunate. I mean, it had such a nice day yesterday. It looked like it was maybe trying to eradicate some of the stuff that's been happening recently. Alas, falls down.
Yeah.
Not terrible yet. It's not like it erased all of yesterday's move, but still.
Yeah, same with ETH. Big move yesterday, erasing some of that today. But silver, very interesting to see. Silver, still in this little range here, but did catch a bid from 70 to 90 and then sold off a little bit today. But I think this just continues the story here in silver and precious metals in general, that we should still expect to see some volatility here.
Well, especially after yesterday.
Yeah.
I mean, let's address the elephant in the room. I don't know what the heck happened, but paused for an hour and a half yesterday is definitely pretty peculiar, and as soon as it opened, it faded. So I'm glad that things are normal today for the most part. But when it faded on that reopened yesterday, I was kind of worried, like, what's going to happen here?
Yeah.
Still no real reasoning behind it, but that's kind of wild to see.
Yeah, for sure. And silver and platinum leading the way to the downside, both down around 3-4%. But we'll see what happens going forward. Still nice to see that there's this tradable market, though. We've been trading SLV, we've been trading GLD.
I love that trade, by the way.
SLV?
Oh, hell yeah.
Yeah. It's been great. It's been really, really good. I mean, we've had some real whippy volatility, but it's kind of wild to see, like, when I entered this trade, I'm not even kidding you, it was the day before this drop happened. It was when we were up here. I sold like the 87-200 strangle, rolled it down. I still have the 87 put, but picked up plenty of premium when you look at this here. So we've got $1,700 in premium. We're out in April, the 87-100 strangle, and we're just down a little bit, even though this product has dropped. What,
I'm telling you,
40%?
this is the perfect example of selling a strangle
Yeah.
Because that volatility was so ridiculously high. I mean, this is the perfect example of when you'd like to sell a strangle. When you see volatility easily twice times normal, you just don't get that. And so I think I got in it maybe the day before you. I was like, this is ridiculous. This is 100 vol. This thing is normally in the 30s, maybe 40s. And you could, I think at the time, I looked at the 7100 strangle, which ironically is what I worked myself into April now. But initially I had the 7100 strangle in March. And I was like, this is absolutely ridiculous. I think I was getting, I don't remember what I got for it. I'm sure I could look it up. But it was insane. And that's why even though you have like the 87 that's in the month, it's still crazy high volatility.
Yeah.
I mean, this trade's been great.
Yeah, and all this premium, really all of the roll premium was from rolling this 210 call down. Started with the 87 210, rolled it down from the 210 to the 150 in the same cycle for $1.40, rolled it down from the 150 to the 87 straddle for $1.40, and then once we got closer to March expiration, bought back the straddle, rolled it out to a strangle, kept the short put there so I can pick up some more premium, but got $3.60 in that roll. So we're at $15 and change here in total credit received, which means our expiration break even is well within where we're trading right now. And you can see that here. We're down below 70 in terms of break even at expiration. We're sitting right at 80. We're looking good here. If we chop around here, if we rally, we'll be golden on this trade. But still tradable nonetheless, even if you got in now, like 80% IV in SLV at a $78 price point, you can do a lot in there. You can literally do whatever you want in here.
Yeah.
It's kind of crazy to see some of these premiums relative to notional risk.
Yeah, love it.
Real quick before we get to some trade ideas, wanted to highlight some of the activity. We've both been very active today. This is just from today.
Yeah.
You want to walk us through some of the adjustments you made?
Absolutely. Heading into today, I had, we talked from yesterday, I had Nvidia calendar calls for earnings. Also put on some for CoreWeave, expecting a sort of run-on move with whatever direction that Nvidia did. And again, I was mostly based on upside for Nvidia. For CoreWeave, I did sort of a double-sided call and put calendars. And as a result, not only that, but of course I have the year-long strangle in MNQ. So I decided to sell a future against that, which worked out okay. Nice. I mean, I did it 25,330 yesterday. Was able to take it off for 100 points, which gives $200 in MNQs. Probably could have held on longer, but it was fine. I mean, I actually I didn't mind it. CRM had double calendars in there. Was able to close that out. Slight gain. And again, I had them on a multiple strike, so I had, I think, the 210, 215, and then to the downside, I had, what did I have, the 180 and 175, I believe. And total package, I think I put it on for like $363, and I was able to take it off for like $20, so slight gain, almost a scratch.
Yeah.
But it was early in the morning, and it was still kind of bid, actually, and hadn't really moved much, and I wasn't really sure what kind of day it was going to be, and it was moving slightly up. And so I just decided to take it off it and move on to the next thing. I was looking for a bigger move, honestly. And, usually when you have these, and then it's earnings, the move either happens and then there's a call, maybe later, all the news is already out. And so it's not like I was waiting on a call or to see what they were going to say on it. All of that news was essentially out. So I decided to just close it and move on. SPX we'll get to in a second. Snow, also earnings, just decided to close those out. I think a slight loss on that, or did I get a slight gain? I don't even remember. What did I say? I don't even remember. Moving so fast. I think with that, I think I had a slight gain on those, I believe. And then actually I only closed the put calendar side, so I also did put calendars and call calendars. I closed the call calendar side, leaving the puts on. This area obviously has been weak, and so I got some downside for next week just in case something goes on here. And then Netflix, I think you closed this. I also closed it as well. 55% gain. That idea came from somebody mentioning something in the chat, and I think you're the one who said, was like, this is a good idea to put on a calendar here. It's like, yeah, you know what, this is actually a good idea, and it worked out well. So closing and moving on.
Yeah, I think someone brought it to our attention that it was at multi-year lows, and then we looked at the chart, said yes, can confirm multi-year lows, and at this lower price point after the split and relatively low implied volatility, we looked at a longer-term diagonal spread, and that's what we got into, and then we got out of it into this nice rally. So yeah, we had the 80-90 diagonal spread, long May, short April, so a longer term one. We both bought it for around $4. So 10-point wide diagonal for $4. You're always going to have a nice reward on that type of spread because you're paying way under the max intrinsic value of your 10-point wide spread. If you're paying $5 or $4, like, you have the world of opportunity if you get that rally, and we did get that rally. And even with so much time left to expiration on the shorts options, 50 days to go, we were able to close it for 50% gain on that debit paid. So $200 winners for both of us. Love to see it. And then this Nvidia trade. So I had a 20-point wide diagonal spread, long April, short March. This morning, when we were selling off, I bought back the 210 and I rolled it down to the 200. So I knew I had this in my back pocket if we got a slight sell-off or even a neutral move, just because it was a 20-point wide diagonal spread that I bought for $11. Very similar to the Netflix trade where it was a 10-point wide that we bought for $4. The Nvidia trade, 20 points wide for $11. I knew I'd be able to roll that down to a 10-point wide, and as long as I picked up $2 or more, I would then get into a 10-point wide diagonal spread for a cost basis that's under $10, and that's exactly what happened. So my new cost basis is $8.95. I have a 10-point wide diagonal spread, still in the long April, short March structure, and now as long as Nvidia recovers a little bit, if we get to 200, I'll have a winning trade, a net winning trade, and even if we don't, I'll still have a little bit of wiggle room, but plenty of time left on that trade to work out. So we'll see what happens there. And then I doubled down into Nvidia.
Double down.
Yeah, we talked about that this morning on Trade It or Fade It, which you'll see shortly. But yeah, I just thought this was a little too cheap here. Long April, short March. So the same strike that I'm already short, the 200 strike in March. Long this calendar spread, buying April, short March at the 200 was only $300. So it's just a really cheap way to play for a reversal here. If you get a 5-point reversal tomorrow, this will be a $100 winner. Yeah. So big reward relative to monetary risk, especially with the long-term nature of this trade. So loved the way that that's set up, loved how cheap it was, so I got into that. And then, yeah, SPX trade we will talk about right now. Let's dive into a few trade ideas for you.
Hey-o.
Find February 26th. If you want to join us in the YouTube chat while we walk through some of these trades, head over to the tastylive YouTube channel. You can find this video streaming live. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them shortly. What do you got for us?
So look, we're not trying to reinvent the wheel here. For the better part of a couple of weeks now, we have been noting how we are in a very tight trading range, at least tight for S&P 500, 6,800 to 7,000. We have not budged much off of that. And when you really widen it out, it's really about 3 months now. So honestly, there's not much that inspires me to make directional trades unless we get closer to 6,800, which, again, we're right in the middle of this channel today, 6,900 essentially. Unless we get closer to 6,800, 6,780 or something like that, or we're closer to 7,000, which again, we haven't been in multiple, a month now for SPX. So for that reason, I'm just going to keep doing iron condors until, you know, something breaks. And this is just another one. 67, 66.75, 66.65, 71.10, 71.20, 50% pop. It is what it is. The real interesting part here is if we can go to the next slide. You guys understand, this is straightforward. But on the next slide, I'm starting to build a position kind of like you, right? And I just moved it to March 20. I do have a couple of things in the March 27, Friday, tomorrow expiration. I do have a couple of things there. I have a super bear that I literally just put on yesterday in case, well, we had a scenario like we did today. And then I do have, if you guys remember, I had a broken heart butterfly that I recently was able to just turn into just a regular butterfly for $1.40 credit. So I do have those on for tomorrow. I'm going to try and take the super bear off at some point today. minus that, I don't have anything until March expiration, and that's what all of this stuff is. And so I realize a lot of my downside lies, risk to the downside lies once we get below 6,600. To the upside, it's essentially around 70, 90. I start to lose money. Both max losses are around $1,700. Outside of that, somewhere in between, I mean, we're sitting pretty, especially if we get to 6,700. And that's really what I think about day in and day out. So, you know, the moves that we're having right now, perfect. If we're going to sit in this area, this is where I'm just going to make my bed. I'm going to make it real nicely every single morning. and I'm going to get in at night and nice tight sheets, and we're going to be good. And so 6,800 to 7,000 until we break out of that. And truth be told, I am already just trying to figure out. I would love for us to go lower, closer to 6,850 today. I am definitely going to put on a super bull for probably next Friday. We have jobs report, and that's kind of what I would love to do if we get lower today. So I am rooting for lower for today so that I can put on a bullish trade. Again, I don't feel the need to put on bullish trades in SPX until we get below or close to 6,850, realistically 6,800, but you can't time bottoms. You just got to try to find a way to put those things on and find the right expirations to do it in.
Yeah, I like it. And yeah, building that portfolio, we've talked about this too. Like if you're placing a trade every week like we are in SPX, as you go on, you have to start accounting for your other positions. And then once you do, you can start to see that you build this nice canvas of opportunity regardless of where the market goes. And both of our overall SPX charts look like this, where we have this nice wide neutral range of profitability, and then we have our spikes, you know, here and there. And both of us actually have nice spikes to the downside if we do end up selling off continuously. So I'm looking at just taking a little bite here with a unique trade. So I have a bunch of positions on an SPX. I've got iron condors, I've got a Super Bowl, I've got a downside butterfly, I've got an upside calendar. So like I feel like I'm tapped out in terms of larger positions that are more long term. So I wanted to try out a shorter term position here into this sell-off. So I ended up going with the 69.50 call calendar spread. But as you can see, this is a really narrow time difference between the two options. So I'm long the March 3rd expiration, 5 days to go, at the 69.50 strike, paid $2,100 for that. And then I'm short the 69.50, 4 days to go, and this is going to be the Monday expiration here, 4 days out. So the reason why I went with these expiration cycles, I actually tried going with long Monday, short Friday, and then I tried looking at short Monday, long Friday, next Friday, but the trades were just a little too expensive. I wasn't collecting enough on the short option relative to the long, and we know how these things move. Like really, all you need here is any kind of move to the upside. And this risk graph, it's a theoretical risk graph that's analyzing tomorrow's expiration with no changes in implied volatility. So just looking at, you know, estimating the value that we'll get out of this 4-day cycle and then how much we'll maintain in this 5 days. So Tuesday is obviously going to have more value than Monday. What I'm playing for here is a reversal tomorrow or a reversal on Monday. Best case scenario is we get a 40-50 point reversal on Monday where I get a ton of this value out of the short option. My long option on Tuesday maintains value. Only paid $530 for this thing, so similar to the butterfly, when you pay a debit that's well under the raw value of these options, it's not going to move too much against you until you get that move in your favor, or unless you get, you know, big sell-off, big continuation to the downside, and these options start to lose value quickly. So all that said, $300 profit potential if we just get a rally to 69.50. And that would be a 50-point reversal of today. So if we go from down 50, 60 to closer to flat today, this could be a nice winner, and I'll just look to take it off. But if that happens tomorrow, or if that happens Monday, that's going to look even better for this position, just because this short option will lose all extrinsic value by Monday, and this one will not. So seeing what happens here, but just wanted to add this kind of in between everything else that I've got. And as you can see, plenty of positions here. This theoretical graph is what's filled in. This is a Feb 27 Theo, so for tomorrow. But as you can see, similar to Jamal, I've got this big spike in profitability. This line is the expiration risk graph, so big spike in profitability because of this 100-point wide butterfly if we end up moving down there. But I've got neutral ranges here, and we'll see what happens. But yeah, just throwing on something real small into this move today and seeing if we get a reversal tomorrow.
I love that trade, man. I'm inspired by it, and I just put one on, but I went March 6th to March 9th. And I went 7,000. I went further up, right? I just said we haven't been to 7,000 in a while. I do think it's going to take at least a catalyst to get us there. Maybe it's job report. Maybe we get there by Friday. I don't know. We'll see. Or maybe we get close by that Friday. Maybe we get clips it by Monday. Yeah. So I just did that, and I did it for 360.
Yeah. So yeah, if we look at this one, this is. Let's look at this today. Let's look at this Monday. Let's see. And I lied. This is not, the ones I'm short and long are not Monday, it's Wednesday, Thursday.
Wednesday, Thursday.
So the 4th and the 5th. So this one, let's just look at Monday, Tuesday, Wednesday. So if this is Wednesday, you're paying $300. Yeah, Wednesday, because you're short this March 6th and you're long the March 9th, you're inventorying Delta for the weekend, the following weekend, and selling this Friday option against it. And you can see you're reducing cost basis a ton, only paying $3 for this long option that's currently worth $1,600. So if you get the timing right and you get the reversal, this can be a really nice win on debit paid. But again, even if you don't, the theoretical P&L isn't going to change too much. Even if you get a 200-point sell-off from here, like this will still hold on to $1 of value or something like that. I like it.
We'll see.
SPX, baby.
Yeah.
Gotta do it. But yeah, these positions are getting pretty wild here. As you can see, it takes up the full screen if you zoom out. But when you do this kind of stuff, like if you're layering on positions, I think it's always good to just make sure you're not overlapping a different one and completely eliminating the profitability on the other one, because then at that point you might as well just close it.
Yeah.
So all of these have the possibility of working out within this range, which is why you're seeing a positive P&L open even with all these positions on, regardless of what happens really. Sweet. A couple of trade ideas for you. Why don't we pop over to the YouTube chat, see what the people are saying.
See what the people are saying. What's going on, everybody in the chat? How you guys doing? What do we got here? Let's see. Oh, PD. People are still talking about PD. People are still talking about PD. Jamal, did you get paid for your SPX Super Bear trade? I am. I'm currently getting paid for it. I am, I like to dance with the devil a little bit, okay? I just do. I do. Right now, again, the Super Bear trade sold the 69.50, 69.60 call spread to finance buying the 6,900, 68.85. We are right there, baby. Right now, I'm up $700 on the trade. I should close it. I should. But this day feels weak. I mean,
I should. But
this day feels weak. And I just put on the 7,000 calendar, right? So I feel, it's one way of starting to work my way out of the trade. I will likely close this thing. I will likely close this thing maybe by the end of the show or something like that. I'll see. I'm getting paid for it, though. It is working out. Yes. I know. I'm being greedy. I should close it here soon.
I mean,
we'll see.
I think there's still value in holding this, because you can obviously make, this is a 15-point wide spread. So you can still make another $900 just today if you stay below this point. So yeah, I actually like.
And the end of the month is coming, and things are just ending ugly. It's not looking good.
Yeah. So I mean, yes, it's a $600 winner, beautiful trade right now, but you can make a lot more. And to your point, let's say this goes away, you can offset a lot of that with your calendar spread you just put on.
Yes.
Because if this market reverses, your calendar spread's going to explode in value and offset this.
Well, that ain't all. I mean, all these other bullish trades that I have on. How about the MNQ trade that I have on? I mean, I got so many other bullish things that if the market were to be more like yesterday, it would work out well. So this is actually my one thing that works for me if we keep going lower. That's one of the main reasons why I haven't taken it off. That is the main reason I haven't taken it off.
Yeah, I like it.
Yeah.
But yeah, plenty of reason. And this is like, we get this question all the time, should I hold it or should I close it? The only time we will push on the hold button is when you've got 1 day to go or 0 days to go and you have hundreds of dollars to make left, as long as it just stays below the current strike.
If this were tomorrow and we were right here, I would take it off, because again, fortunes can change so fast within 20 minutes on a Friday, right? Versus like right now, I'm just like, okay.
Yeah. But it's also like, if we were here and you only had $200 left to make or $300 left to make, that's a different story.
It would have been gone.
It's an instant close because it's just not as much. But here, decent amount if you get that continuation of the downside.
That was Jared Kramer who gave us that, at least made us think about Netflix and pointed it out. So appreciate you, Jared.
Nice.
Thanks a lot, man.
Yeah, it's been beautiful. Caught the rally right at the right time.
Let's see. Jamal Nvidia calendar. So I bought back my 1 day short calls on Nvidia calendar for the couple bucks to hold my 4 day call. I love that too. That's another thing. I closed it all together. I got so many different things right now that I just wanted it off the sheets, and that's why I did it. But I totally get you keeping it on. Makes sense. Donald, what's going on, man? Rocket Lab earnings. It does have earnings. Broken wing butterfly, 75, 80, 85. That's not broken wing. That's just a regular one, guy. My guy. It's regular one.
For the 1 day?
He didn't say, but let's investigate all of them. 75, 80, 85. Butterfly.
Just a straight up butterfly, 50 cents. Yeah, I don't mind these. I mean,
where's the stock, Ben? Is this lower than highs? Okay.
Yeah, right there.
What does this thing do again? Is this a like space competitor, or what's the deal? Rocket Lab? Let me see. I'll look it up.
Yeah, they all just blend together for me.
I know, it does.
But either way, 75, 80, 85, 55 cents, you're risking 1/10 of your max profit here.
Yeah, aerospace defense company.
There you go. So yeah.
Makes sense.
I think if you're doing a butterfly like this, I like the idea of going to the 1 day, because if you get it right and you get the rally above 75, you're going to be able to realize very close to your max profit. And we can see this here, like if we go curve analysis and we go today, you can see you're not going to get anywhere close if you just get the move today, because it's going to hold on to so much value. If we push this to tomorrow, you're getting much closer to that max profit here. And then, of course, if you get the full expiration, you're going to get the full value. The difference is, if you were to do this trade 1 week out, let's say, there's going to be a huge difference in the value you can get tomorrow. And you're really probably going to pay a similar amount. You're paying actually more for more time. So if you did this in the 8 day, and then you go to curve analysis, you can see if we evaluate today, no change. If we evaluate tomorrow and we crush implied volatility a little bit here, that's going to help you. But even if you go to Monday, you're still looking at not that much P&L, because these options are going to hold on to a lot of value because it's a high heavy stock. So I think the only way to play this, if you're doing a narrow 5-point wide butterfly, is to just do the 1 day and try and pin this area. I would also explore something like this, like a 70, 75, 80. It's going to be a little bit more expensive, but it gives you a higher probability of realizing this max profit if you get an expected move. On your position, you really need a move well above expected to get that max profit.
The one thing they do have going for them on that initial trade is open interest. Maybe, right around expiration, the open interest is pretty high on that 80 strike. Maybe, if you, first of all, you need to get the move, but if you do get the move, you got a good chance of maybe settling in there, right? If it doesn't get towards that area, that could be a magnet. But the main thing I like about either one of them, it's risk defined. And personally, I like trading risk defined stuff when it comes to earnings.
Yeah, 50 cents, easy to digest for sure.
Yeah. What is the Super Bull trade? We talk about this quite often. It's essentially selling, honestly, there's a multitude of ways you could do a Super Bull. Obviously, you could sell a put, you can buy a call. Long deltas both ways, right? And it's very bullish. We usually do it risk-defined, selling a put spread to finance, buying call spread. We usually try to collect a credit when we do it, which is the key to the whole trade, honestly. And so you got to play around with strikes at times, being able to find out what works. Not only playing with strikes to be able to collect that credit, but also what's in the realm of possibility, truthfully. I mean, that's really what it boils down to. Like yesterday when I did the super bear trade, I sold that 69.50 area. We haven't been beyond that area too often recently, and so that's why I sold that. And I knew 6,900 was a lightning rod as well, right? Getting around there, which is essentially what we're hanging at right now, around just below that. But I knew that was a lightning rod. We literally just came back close to it, and then we just fell again, and that's the area that we've been hanging in. So that's why I chose the strikes that I did. And so I think that's a large part of it. Being able to collect the credit, but also choosing the strikes, I think helps out a lot.
Yeah. Collecting a credit, so again, just selling a wider put spread, or selling a put spread in general to finance a call spread. These are actually symmetrical, 10-point wide to buy a 10-point wide, so we're basically collecting the same amount that we're paying for the call spread. Instead of just selling the put spread, where you have a slightly higher probability trade because you're picking up more premium, you're ultimately shifting where your profitability comes into play. So these trades can and normally will have a higher max profit than just selling the put spread, because you're giving up that premium, this neutral premium. Yes, you'll still be profitable. In this example, you'd make 20 cents, but you now have $1,000 of upside profit potential if you do get that continuation here. And you still have this neutral credit premium, which still keeps you above that 50% pop. If you wanted to pick up more premium, you could just make this more narrow. So this is kind of our traditional setup, selling a 10-point wide to buy a 5-point wide, picking up $1.50, giving up a lot of that upside prop potential, but making it more feasible with more narrow spreads. So we do this a lot in SPX just because it's always interesting to have more dynamic delta in higher price stock. And selling 5-point wide spreads or 10-point wide spreads in SPX, they're just going to be really slow moving trades. But when you create more dynamic nature to those trades, you have a lot more profit potential if you get that directional move right.
You know what? It's pretty quiet in here right now. I think we're going lower. I do.
It is pretty quiet.
I think what I'm going to do is try and find a way to, instead of taking off that super bear, I'm going to try and find a way to get into some type of super bull now. Maybe now that I've made my bet on March 9th, I might have to do it on March 9th if I can. That way I can hold on to this super bear for longer. But I'm going to try and work my way into one of those in a little bit here. We'll see. I don't know how it's going to work, though. Obviously, like, the further out you go, you got to, like, almost go in the money, and I don't really want to do that, but I don't know.
Yeah,
we'll see.
I mean, you can do a number of different things. So, yeah, March 9th, if you were to do that right now,
oh, my God, that food smells so good.
I was going to say, it is also quiet in here because I hear the beeper of the microwave going off. People are getting some lunch,
Just getting some lunch.
But yeah, an example of a Super Bowl in SPX March 9th might be something like this, going to the expected move, 67.50, 67.40, picking up $2, and then finding strikes at or within the expected move. Yeah. Probably have to go 10 points wide, 5 points wide, but this is the idea. Basically, okay, look at that.
Yeah.
That's so funny. Basically, just giving up that premium again. Like, if you just sold this put spread, you'd pick up almost $200, and you'd have $200 of flat premium above the strikes here. But you're giving up half that to double your max profit if you get the rally to 70.25. So this is the dynamic nature of a super bull. A super bear is the same thing. You're just selling a call spread to buy a put spread. But yeah, 90 cents, 80 cents of middling premium here if everything expires worthless. But if you get that rally, as you can see by this theoretical P&L, you start to ramp up that P&L and you cap out at your $500 of intrinsic value up here. But the nice thing about this trade too is on the way up, if it happens, not only does your call spread appreciate, but your put spread depreciates as well. So that's how you get this nice swift increase in profitability. And we actually have one on in Microsoft. So Jamal put this on. I followed him in. It's up $200 right now. But this is a good example of one that's working out, and this is our expiration graph. So this was a 10-point wide to finance a 15-point wide call spread, but still routed for a credit. So love to see that. And this is, of course, going to work out very well if we continue higher in Microsoft.
Somebody's asking about your MES trade. You want to give an update on that thing?
Yeah, I mean, I guess today's the day to roll it, huh? We were waiting for a sell-off. We were waiting for a spike in implied volatility. We're getting that today. If we look at the VIX, we're getting a nice 10% bump in the VIX, which ultimately translates to the micro E-minis implied volatility as well, even though the VIX is specifically for SPX. So yeah, why don't we make an adjustment here? Let's roll this thing and pick up some more premium. So first things first, we're going to have to buy back this March cycle, and this is the last expiration, options expiration that settles to the H contract. So we're going to have to roll to the M contract right now. I'm most likely just going to go straight to the April 30th, end of month, 60 days out, and just go longer term. One thing you have to account for is the current contract we're in is trading at 68.85. The next contract is trading at 69.40. So we're going to have to move these strikes up 50 to 60 points to keep the deltas the exact same, because we're now dealing with a contract that's 50 points higher, 40 points higher than the one we're dealing with. So if we were to buy back the 6650, 7200, that means we're going to have to go to the 6700, 7250 to keep it symmetrical to what we have now, which is what I really want, because I want to lean a little bit long here into this sell-off. So if we go to the 63-day end of month April, markets are decently liquid here with some bid-ask spreads that are relatively the same. Let's look at the 6700 and 7250. So we're going to pick up $500 of raw value on this adjustment, and we're going to pick up 100 points of wiggle room in this trade. So $500 is nice. We're already sitting at $900, so we're going to have $1,500 in premium collected, and that translates to what? If we look at this now, I have 200 points already. The average trade price is reflective of the points away from the strike. So if I pick up another 100 points, I'm ultimately going to be rolling into a 6700, 7250 with 300 points of wiggle room beyond the strikes. So we're getting into that nice territory already. Feels a lot like IBIT last year, where we're picking up so much premium and we have so much wiggle room beyond the strikes that we'll be able to accept 1,000 points in either direction and still be good on this trade, almost. Yeah, so let's route it. Let's see if we can get filled here. I'll just leave it at 102.50, and we'll see if we get filled. But I'll get this filled today, and we'll make that adjustment.
Yeah, it's probably a good idea to do it today more than any other day. Might as well.
Yeah. And we'll see if this market sells off. We'll be in the April cycle. You can go to the April monthly or the sooner April expiration, but end of month is typically what I'm working with here.
Yeah, some of these strikes are weird. I mean, they really are. It's just the weirdness of this. It's not super liquid. Again, I mean, only when you look at these, only a couple of contracts trade per day, but I still like it as a vehicle to do this trade, man. I really do.
Yeah. So yeah, we'll see if we get filled there. We'll let it simmer. I would imagine if we continue to sell off here, I'll get filled on this trade, but we'll see.
Yeah, same. Actually, I'm gonna go a little higher just in case. See if I can get filled on there. 460, just a little bit away. I imagine we'll get hit. Yeah, I think that's what's gonna happen. We're gonna go lower. We're gonna get hit. Ding, fill.
There you go.
Oh, let's see. What do we got? Did I play? I did not, Donald. I did not play the Ion Q. I had so many other things. I had CRM. I had Nvidia. I put the the core weave on for tonight, but looks like it worked out well for you, my guy, I think. I mean, looks
20%?
like it. Yeah, 20%.
Yeah.
Can't beat that.
That'll
and
work.
it only originally opened up at like 36s, I think, so nice work. Nice work. What's the difference between MES and ES? Well, the micros are 1/10 the size of the big ES contract, and if you try to queue up just about any trade, you'll see that in whatever buying power that you get, right? 2,500 there in that situation. You can expect that to be 25K in the ES contract. So that's the big difference there. One is way bigger than the other. That's why they created these micros. They're a lot more feasible for us retail traders to trade.
Yeah.
Actually, double that.
Yeah. Yeah, it's a big difference, but this is the hack that I use. Like, I don't know, even as much as I trade and the things that, you know, the futures that I know exist, I'm not taking the time to walk through the tick size, notional, blah blah blah. Like, that's the nice thing about the Tasty platform is you can get a lot of information. You can see what the max profit is. It automatically adjusts your tick size and notional to actual dollar values. So if I sold this put in the E-minis, it's trading for 10 points, but that really translates to $500. And you can see max loss 340K, buying power 40K. So MES, same story. If you're ever wondering what the notional is or how the tick sizes work in a product, just if they have an options market, that's really going to help you out. You can just go to a near-term cycle, sell a put, see what the max loss is, and you'll see what your max profit is relative to the tick size and what the buying power is. So you can do that for anything. You can do that for silver. Mm-hmm. You look at silver, like, well, what is the notional in silver? Oh, it's $400,000, even though it's an 87 price point. So, like, this is good to know if you're selling premium in silver. Natty Gas is another one. They call this the Widowmaker for a reason, a specific spread, but 2.8 price point, you go to sell a put and you realize it's actually 26K in max loss for this one contract. So if you're ever wondering what the notional is or what the difference is, you can do that. As long as they have an options market, it's going to really help you out.
Yeah, and also just Google the products too. You know, micro ES futures, and you'll get those CME specs on it. Go to the specs and you can see the multiples. Like if you do ES right now, you'll see that it's basically 5 times, or I should say micro ES or ES is 50 times the S&P 500 index, whereas micro ES is 5 times that. So that's why I said it's 1/10 the size. Yep.
And then SPX you can see is twice as much as E-minis. So SPX is the big contract.
Oh, let's see. The Adobe Iron Condor has been coming in nice, and that target short call ratio. You got a target short call ratio? Okay. Target short call ratio has been working apparently. Just calling out trades that are working. I see you. Look at that target. That's Target's chart, right?
Yeah.
I mean, this is so weird to me. Yeah, I know. Remember we were looking at it? Yeah, in November. Look at that. Yeah. Wow. You got Target down there.
And I guarantee you, when it came down here, we were saying, could you see Target recovering?
Yeah.
But I mean, look at all of them. Target, Costco, Walmart.
I still got that Costco calendar. I got the April-March calendar. I think it has earnings at some point, but Costco, I got the 1100 calendar. Same. I know I said that like when I was on the live show a couple of Tuesday mornings. It was a Tuesday morning coming out of President's Day, and Tony was like, "That's ambitious," and I'm like, "It's only 10% if it's at 1,000. What's crazy about that?"
Yeah.
You seen the way this stock's been moving, Tony?
Yeah. But yeah, that's the nuance of these markets. Like, yes, we'll see sell-offs. Yes, we'll see sector rotations. But at the end of the day, if you have a household name that's at multi-year lows, we're going to take stabs at that for sure. And we just had a nice winner in Netflix. Hopefully we see a nice winner in Microsoft. I mean, we already are. Microsoft's recovering nicely. The Super Bowl's paying nicely. And that will only increase if this thing continues.
I think it's most interesting when everybody is just like completely hating on the stock and don't like it.
Yeah.
I think those are good times to dip your toe in.
Yeah.
Just to try and see what's what, you know?
Yeah, and that's the beauty of options. You can adjust your risk however you want. as long as you're familiar with the strategies.
And I think it's good in bigger names more than anything. I don't necessarily love it in smaller names. I like it in bigger names, the Targets, the Microsofts of the world.
Yeah.
You know, Costco when it was down there. It's like, and it's got to be honestly, it's got to be multi-weeks, multi-month situation. Et cetera. Anyway, we only got like a couple of minutes left. You want to take a look at some earnings for tomorrow? I don't know if there's any I love to put on. I already put my CoreWeave on.
Yeah,
there's
so
Rocket Lab. There's Dell. You go through.
So yeah, this range here at the top, we've got Intuit, we've got Square.
Oh, I missed that.
Our block, I guess, is now XYZ. They totally just took over that. I don't know what they did with their name there, but Autodesk.
Intuit has earnings.
Dell.
That's an interesting one just from the standpoint of software, right?
Yeah.
CRM worked out. We'll see what Intuit does.
Yeah, I think Intuit could be interesting. Like, are the markets okay here?
Probably not.
No.
Probably not.
Yeah, markets aren't great. I mean, I was initially going to say, why don't we check out like a short-term calendar spread?
Yeah, it's expensive, bro.
415, but yeah, these markets are not good.
I'm just going to watch from the sidelines on this one.
Yeah. Too much width. But yeah, other than Intuit, we've got Block, $50 price point. This one's interesting, $5 expected move on a $50 stock. How about something like this? Can we do a short-term diagonal spread here? If we assume we're going to place this to the upside, it's not bad. $2 and change for a 5-point wide diagonal.
No, it's not.
If you're long March, short Feb. But yeah, nothing really stands out too crazy to me.
No, we're at the bottom of the barrel. We're scraping the bottom of the barrel for sure. I think a lot of these are just more about the story. Dell has earnings. Mara has earnings. Again, crypto's been struggling. SLUN, one of those AI-related type names, has earnings. You know, these are all smaller names that love. Not really in love with any of these. Zscaler, ZS. I'm not sure if that's a software name as well. I can't remember. By the looks of it,
yeah, it's a security system.
Security system.
Yeah.
So another just interesting story and what they're going to say on earnings and what they're going to say reflective of the stock price.
Yeah.
I think those make it interesting. Duolingo has earnings. I was looking at this one, but the markets suck to trade.
I feel like they have this guy.
Yeah, I know, right? I mean, I feel like that's kind of the story here on a lot of these names. The markets suck to trade on most of them, so
this thing's
I will be watching.
500 to 100.
Yeah,
that's crazy.
Right? Yeah,
nobody wants to learn anymore.
I know. And you know what? They say people learn the best. Like, you learn languages the best with Duolingo. I used to mess around with it a couple years ago.
Yeah.
My wife's messing around with a lot with it now, doing Spanish.
I was on this to learn a little Japanese before I went on my trip.
It's so good.
Yeah, Mara's going to be interesting. I think Ryan has brought up a couple of names in Iron and TeraWolf.
Yep.
Both of these products kind of shifted into more like AI data warehousing, where Mara is still your traditional, like, well-known crypto miner. So I think that might be interesting, is like if you listen to this conference call from Mara, like maybe they start to say things that aren't directly related to Bitcoin. Maybe they start to get more into, we've got all this technology, we have the ability to create and warehouse data. Like maybe that's it. But
quite possible. Quite possible.
But yeah, that's it for us. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B there. Jamal is at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Let us know in the YouTube chat whether you think the E-minis will be down further today. Maybe we'll see a bid. Hopefully for Jamal's position, we see a continuation, or we just chop around here. That would be very nice. But yeah, it's the same story here. We want to see continuation to the downside if we're expected to see volatility pop in any meaningful way. Until that happens, if we are up 50 tomorrow, it's just going to be the same story. Groundhog's Day every day. But yeah, we'll be online tomorrow. We'll field your questions and do a full Q&A session. So if you want to join us then, head over to Tasty Live at 11 a.m. Central tomorrow for that. But yeah, have a great rest of your trading day. We'll see you tomorrow. Peace.
Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
All day, all night, we just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda
You gotta level up. Just look at me. You gotta level up. But they kinda like it when You gotta level up, 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 up. Just look at me. You gotta level up, 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 up. They kinda like it when you gotta level up. Just look at me. You gotta level up.
What is going on, everybody, and welcome back to Risk and Reward. Today is Thursday. We got one more day left into the trading week. We had quite a sell-off today, a little bit of a vol expansion. We'll get into all of that. Let us know what you're trading. Let us know what you're looking at. But before we do all of that, my brother Gus, how we doing today?
Doing good. Strange day where we do have a broader sell-off. Broader markets down a little bit, but somehow with all the long delta in my portfolio, there's more things green than red.
There we go. I love that.
I've chosen my individual names very well in accordance with today's action. But yeah, feeling pretty good. Paramount making a little bit of a move to the upside. Netflix logging another good day. So I'm a happy camper.
Nice. I hear you. I would say anything standing out on my end, nothing as exciting probably on yours. I'm glad that the semiconductor ETFs, some of the semiconductor underlyings are finally pulling back a little bit. Those ones were on like can't speak. I was going to say I can't even speak, an inevitable melt up to the upside. That's what it's felt like. So we finally got a little bit of a pullback there. But yeah, guys, let us know what you're trading. Let us know what you're looking at. And I guess we can just jump right into the Tasty Trade platform. Check out some of these underlyings.
Yeah. We have Nvidia just moving right back down off the good earnings yesterday. We were just slightly up post market. It seemed like we were going to get an up inside move and just dumping straight off today. Other semi names sliding along with them, as you mentioned. I was going to say Netflix. Nvidia, obviously the market maker in the semiconductor space. Neither of us can speak very well today.
I see Netflix in the chat, though. What's going on over there?
Yes, Netflix just continuing the run up here.
That's a beauty.
Finally catching a nice bounce here. You still long Netflix?
I'm not long Netflix. No position there. I'm flat.
Yes. Well, I chose a good time to add the third leg to my ladder yesterday. Everything coming together quite nicely, albeit that third leg still red at this juncture. But green on the position as a whole today, and yeah, happy to see it finally catching some steam. I was worried that it might be a little bit of a fake out yesterday with that big move, but even today, against the broader market drawdown, we're just logging another almost 3% to the upside. So very pleased with that. Paramount moving along with it. I'm not sure. Did something happen in like the broader streaming space? It's very strange for both of these companies, which are very much competitors right now for this Warner Brothers deal, to both be having these aggressive upside moves. I haven't seen anything, but Paramount up 10%. So
I don't know.
Always taking.
Seems like the entire sector is catching a little bit of a bid. I don't know. That's nice though.
Yeah,
it's been some dark times over the last 3 months for these names.
What about like a Roku? Yeah, they're up a little
popping a little bit.
I had a real good day yesterday, so yeah, not sure what's going on, what's brewing in the streaming space, but it seems like things are bubbling up a little bit.
Okay.
Outside of that, some other movers in the portfolio. Zillow, this thing is freaking dead.
What's going on in Zillow?
It's just so beaten
just
down.
Wait.
Bad time to get long. I believe I got long right here on this rundown, and then obviously we've made lower lows there. I have no confidence in this position. This is one where it's just so beaten down. It's like, why sell it?
How much time do we have on that?
78 days. So
I don't know. That's pretty good though.
It's within the realm, but I mean it's a 65-70. So I mean 70 level is all the way back up here. You need some pretty serious momentum. But the whole reason I'm still holding is just because I think I'll be able to get a less losing exit, which sometimes can feel like a win in itself.
I know as of recently some data came out that interest rates are sliding back near 6%, if I'm not mistaken. Anybody can correct me if I'm wrong. So I don't know. Maybe if interest rates keep sliding, maybe we get a nice headline in Zillow. It'd be nice to see a pop in some of those names too. So I mean, 78 days. Hopefully, it'll rock back into the favor.
Yeah, or if Google says they're deprioritizing the home buying searches or whatever else,
true.
There's certainly still routes here. I can't imagine that's super high priority. Good Southern boys. that we are some Southern boys, I suppose. We've never been referred to that way, but I suppose that is the truth. We are cold here in Chicago.
It's a bit nippy out here.
I'm seeing ASML mentioned. ASML.
1350 by tomorrow, ASML?
Yeah, 1350 is this level here. That does seem within the realm of possibility given this sell-off. We've obviously seen it, make these aggressive multi-$100 downside moves in the past. So that could happen, but we would need to log another super red day here. I wish that I had traded on my contrarian convictions with Nvidia. I was feeling like it was a little too overhyped, and it's just. You start to get to that point where it's like they would have to really, really, really beat in order to actually make higher highs here. I wasn't convicted enough in that thesis to trade, but I did think that everybody was getting a little too excited, and that sentiment seems to have panned out here. So, sometimes you miss them out, but nobody ever went broke sitting on their hands.
There we go.
And then, Starbucks moving for me again. Pleased with that. Rivian has been an interesting one.
Mm-hmm.
This is Live Nation. Hello.
Live Nation. Rock Nation.
Put it in. Rivian doing Rivian stuff. This is the typical Rivian pattern. So hopefully we
by their fruits you shall know them.
Hopefully we fly back up and retest this 20 level, but it's always just these legs, and then eventually something happens in it and it flies through to higher highs. So not feeling too bad about that position yet, despite being a little red there.
Nice.
Like I said, pretty much long all these individual names that you're seeing here, and the majority of the positions in the portfolio were green on a red day. So I can't complain.
Cool. I love it. Not as exciting on my end. I mean, anything else maybe that's sticking out before we shift gears here in the high options? But let's take a quick look at Nvidia. I know it's probably had a pretty big reversal since last night, since it's tanking the entire market with it.
How do you mean?
Just
at the options
chain. Yeah. What's going on with Nvidia over there? Lastly.
Yeah. Let's we can look at like 30.
It's kind of
Yeah, I mean, a lot of liquidity. Yeah. I don't know. This is fairly typical for kind of what I would expect out of Nvidia. These are big gaps on these $5 wides though. Oh yeah, and I'll throw out Broadcom. This is one. I'm looking to get long here, Broadcom. I don't know if I want to do it into this downside move. I might just let it settle and look to get long tomorrow. But I was shopping all kinds of angles on Broadcom and just can't really find one that I like. These are really, really expensive. Obviously want to go defined risk. I certainly don't have 3,200 notional to throw at a call here.
Yeah.
But I was looking at like these 330, 340s. 340 feels like a relatively attainable level here. That's this level here on the chart. So we have plenty of history over those levels. 78 days feels like long enough for that kind of recovery to come into play. But you're talking about 355 buying power for 645. This is actually better than it was an hour ago when I was looking at this.
Yeah.
But I just don't want to get too much more aggressive than that. I don't know. Screw it, man. I'll do it.
There we go. It's defined risk.
Yeah, let's see if we can get a fill here. I'm willing to get slipped a few dollars.
Take a fill, Phil.
I don't want to be too far off here. I'd like to stay. There we go. I'd like to stay as close as we can to that asymmetric 2-to-1 risk profile there. So
nice.
Yeah, some Broadcom has entered the account. Hopefully we'll get a recovery out of that. Still a top 10 largest company in the world. They're higher market cap than Tesla. Broadcom.
You're lying. There's no way. I've never heard of this company. Come on, There's no way, man.
The sleeping giant in the top 10 companies for sure.
There we go.
And plenty of fundamental backing. We've gotten the fill on this gap back here, so I'm not worried about that from a technical perspective. And pretty solid historical support and resistance alike at this 300 to 315 range. So looking for a bounce there. 78 DTE gives us plenty of time, and 340 feels like a very attainable level, especially with the way this thing moves. I mean, this is a $20 downside move today.
Oh yeah, it's a big one. No, anything else on your end before we jump to the TradingView platform?
No, I think that's all I got. We can hop over and look at your stuff.
Yeah, we can jump over to the TradingView platform. I know we have a little bit of talks of gold and silver in here today. Yeah, I'm hoping that the rug will eventually get pulled on silver here as well. My position on silver is down a little bit. I had bought the 70 puts on there that expire March 20th. We got that cooking. And then we also have the out-of-the-money call spread that expires in about 22 days. That QQQ position was red the entire time and came back into the profit today. And we need to manage that one by tomorrow. So I call that a step back, a little buzzer beater, whenever it gets back into your range before you're looking to manage it. But I don't know if this downside is going to hold, and I don't want to overstay my welcome either. So I might even manage this one a little bit earlier. In terms of QQQ. But anyways, we'll circle back around to gold and silver. We took a few trades today. A lot more executions than we typically do. We were looking to get this short before we sold off in the pre-market, and it was a really tough trade. It was one of those where it was tough to hold on. Let's zoom in a little bit more. So over here in the pre-market, we were looking to get short around this value area high, and not one to really place trades in the pre-market unless it's showing an opportunity that you believe we might not get once the market opens up. Sometimes it'll do that, but at the same time, don't really want to force anything in the pre-market. We had a couple scalps over here. We can turn on the executions later, but pretty much what we got from all these executions here, got stopped here, was looking to scale out here, scaled out the last position here. This one's attached to this trade. So I know things get a little crazy over here, right? But this was 3 individual trades. We were able to walk out with like $50, right, on that. So we really didn't catch much. I mean, percent-wise, I guess that's a lot percent-wise, but we weren't really trying to overstay the welcome. Really, the whole idea here was just to get short, right? Our bias was short off that value area high to see if we could catch something lower, and if we weren't in the pre-market, we probably would have held this trade a little bit longer. But it's nice to have a little bit of cushion before the market opens up at least. So that's kind of how the cookie crumbled, right in the pre-market. And then market opens up, we sell right off. We get down to this value area low here. And I mean, this one's a tough pill to swallow right here because we didn't really get to catch the meat of the move. But we did get to catch some of the move to the downside. And over here, you can see we're getting chopped up a little bit over here, initially getting long a couple times. And then we flipped short. I believe this top tick stopped me out over here. And then we're just looking to get short again while managing the risk on this trade. So sometimes you might see 3 executions, 4 executions, 5 executions, but really all it is just trying to wiggle your way into getting that risk to reward that's favorable if the trade does play out. And then the market was just nonstop to the downside. This was one of the most difficult markets to trade. We started to sell off down here. We covered our position over here at the bottom. I mean, but a choppy market, but directional. What a difficult market to trade. I mean, good Lord, like this thing was choppy directionally. That's a tough market to trade. So if you were able to sit in those shorts from all morning all the way to midday, congratulations. But we were able to catch a 198. We were still able to catch almost a 70-something point move. Volatility's definitely expanded. That's something I've noticed at the same time. But
yeah, it's one of these days that really validates the stop loss haters.
Oh yeah, true.
If you're an anti stop loss person, this is the type of day that you like to validate that thesis because the directional chop is just so hard. It's just fake out after fake out, and we're outside VWAP the entire time as well. So it's like we're trading below that range. You would expect us to work back up into there sometime, but we've just been using the bottom line as resistance, which is not typically how the resource is supposed to work.
It was. And I mean, and this is how the market can like start weighing in on your mental. Because I mean, in hindsight, when we zoom out, this wasn't the most difficult trade, but what made it even more difficult was the fact that we just got stopped out 3 or 4 times prior to that. That's what makes this early cover such an early cover, because you just got chopped up in the blender 3-4 times. And if it wasn't for that, it would have been easier to let the trade play through. So, leading up to that trade too, it could just be difficult. And that's it's kind of what happened today. So it's an opportunity we got. We sold off a little bit further than expected to at the same time. We got another trade down here. This is what recouped all of those paper cuts that we took. Look, if we make a new low, we didn't end up bottom ticking this, but we bottom ticked this long. I almost forgot about that. This helped some of these choppy markets up here. But all we were looking for right here was just getting long around this point of control. And then if we started seeing a little bit more volume kicking into the market, we felt comfortable in doing so. Feels like a little bit of an early sell. It's like you could have held this a little bit longer near that value area high. But again, whenever the market gives you that short-term momentum, certain pullbacks are inevitable, and it feels better to get out here on the momentum rather than sitting in these choppy conditions. I mean, if you're a scalper, typically you're not going to be sitting in consolidation for the most part. And if you are, then maybe the timing of the trade was off. And maybe I'm just speaking from my own personal experience, but it's something I found as well. But those were the trades on the day. If we get down near the point of control again, we'll keep an eye on it. I know we have a few hours left till market close. We'll just pay attention to this 24,737 area if the market wants to make a new low for the day. But wow, I wonder where VIX is going to be sitting at if we do make a new low.
Yeah, already hanging over 20 right now.
Is it hanging over 20 right now?
Yeah. So we'll
let's get in there.
See what happens with that for sure. But
it's creeping.
Yeah, let's pop over and take a look at some of these metals and crypto as well. We can make our usual rounds. Silver pulling back a little bit today. Just a little bit.
Just a wee bit.
Yeah, I mean, 2%, I guess, is rather substantial in broader strokes, but like with the movement that we've seen out of silver, 2% is like whatever.
I mean, a 2% short on one silver contract would be pretty fire. So.
Yeah, that's true. That's true. Nice. But conversely, gold is actually up a little bit today. So the lack of correlation that we alluded to yesterday continues into today. Gold up about 0.4% at this juncture. So starting to see a little bit of separation between these two assets, which is not really what you would expect. Obviously, zooming out, they look very similar still. But yeah, interesting spot for gold and silver.
Yeah, I need to learn how to clear these drawings off without.
I thought you figured it out.
So I know we could do this, right, where we hit the back button and it just reverses what you just did, the undo button. But I mean, we could hit this, but it'll take everything off the screen, clean it up a little bit.
Man, it reminds me of like in school with the smart boards when you could like you draw a circle around it and then click it and it would like delete everything in the circle.
That's so funny.
We need that functionality.
You need that.
Yeah,
you might be cooking with that one actually.
I remember when those were like a new cool thing.
Yeah, bro. I was raising my hand. I'm trying to go right on the smart board.
For real.
Arrow, I feel you on this one. Being hard to stay in, being short way too many times, drop 200 points, and it flies right back to green, especially in MNQ. Yeah, no, 100%. It was a difficult one. It was one where it felt like if you didn't take your convicted position early on and stay with it, it was likely to kind of make you feel uncertain on both sides. It was really one where you had to stay convicted from the morning time. And then it was also one of those positions where once it started going, if you didn't already have a position, you were almost essentially chasing the move, right? I mean, granted, we didn't expect it to fall another 100, 150, 200 points to the downside. But after the first spill, anything after that would have kind of been, chasing the move, if you will. So it was some difficult markets this morning, no doubt.
Sergio says you click on the bin and then remove the drawings.
Click on the bin. There we go. Oh, I see the trash can down here at the bottom. Let's do this together.
Oh, yeah.
Shout out, Sergio.
Let's try this.
So we're going to click on this bin. Boom.
Oh.
Remove 20 drawings.
Yeah. Is that?
Always removed lock. Oh, that's cool. So we can lock some of the drawings. And
sure.
Okay. Oh, beautiful. All right.
How about that?
Took the volume profile off, too.
Sergio, can I get a round of applause, sound effect for Sergio?
That's amazing.
Thank you.
Sometimes I'll get overwhelmed with some of the things on the screen, like the volume profile. I'll be writing over here, writing over there. And sometimes it's the same thing I'll do with my computer tabs on the computer. I have like 20 tabs open. And instead of figuring out which ones I need, I'll just shut the whole thing down. Like, I'm starting from scratch.
Yeah.
Same thing with
That's the best way to do it.
I was like, I'm just starting from scratch.
Ranch said, I sold a call spread in GLD and then corrected, no, wait, that was a put spread in GLD. We changed directions between those two chat messages there. Ranch, I hope you know, as I went to open GLD, I typed ranch into my ticker box over here. So if you ever go public, let me know. I'll be buying the IPO. Nothing popped up when actually TRC ticker popped up. Tehran Ranch Company. So there you go. That's what happens if you type in ranch on Tasty Trade. They're having a good little run, though. TRC is. Good 2026 so far. There we go. Anybody's heard of that company before in their life? But yeah, metals moving separately a little bit. And then Bitcoin is the other one I wanted to pop over and take a look at as the doldrums continue. We did get the test of 70 yesterday that we were talking about. It may come in the chat. We got all the way up to 69, 930, 940. And then just... We tested it. It was tested. It just failed. So we've come right back down out of this 66, 67 sort of range here. So yeah, I mean, it's just the drought continues. The drought continues for Bitcoin.
It does indeed.
Yeah, I mean, I wonder. I would imagine that this has to be one of the worst starts to a year, like a calendar year, that Bitcoin has ever had, if not the very worst. It's had some red years before, but like in terms of coming out the gate and selling off the way that it has, January 1st, we were at.
I'm curious.
What, 87, 88 on January 1st? Not exactly sure where we opened there, but yeah, we're down. What's that? I mean, 20K, so like close to 25% since the beginning of the year on Bitcoin. That's rather substantial.
That is rather substantial. And that's interesting. We could measure this another time. This looks awfully similar to, what year was this? 21? This was 21? This was 2021? Yeah, it was. It most definitely was. I remember, it made the new high and then it got everybody. I remember that. It looks like Bitcoin's doing the same thing as it literally did to everybody 4 or 5 years ago.
Yeah, I mean, maybe that's.
If you're in pain right now, I don't mean to laugh, but it's looking like the same thing.
I'm in pain right now. It's okay.
Yeah,
you're allowed to laugh.
I don't know.
This is yeah. What are you supposed to do but laugh?
Let's see. So the beginning of 2021. Let's see where January is. January is going to be over here. So around 30,000, I think, January. And then we pulled all the way back to 17,000. So we almost got cut almost in half. So it was like a 40% cut Bitcoins at the beginning of this year in 2021, 2022. Here, it's looking like it might be something similar. If anything, if Bitcoin takes another similar percentage move that it did in 2021, 2022, we still have some further downside. So take that with a grain of salt.
2022, we opened 47, and then by the end of June, we were at 18.
So that's more than 50, 60 to 70?
Yeah, close to 60%.
So, I mean, if we want to replicate those numbers a little bit, I mean, we're not even...
Yeah, we're not.
Anyways.
We're like a third of the way there.
Anyways. How about that cobalt? How about
some platinum
How about some
futures?
platinum, actually? Yeah, what's platinum been up to?
How are soybeans doing today?
Pull up platinum, we got the emoji. That's hilarious. No, but the volatility's still there in the platinum. I mean, gold and silver is still there, but platinum's still riding the wave a little bit.
Yeah. Platinum always tends to be forgotten. What about copper? What about some HG?
Let's see. Some copper. You said it. Let's see, HD's been a little bit more quiet. It's definitely been a little quiet over here. It doesn't look like the I don't know. I feel like you're probably in your 70s if you're trading copper. Honestly, I don't know. It doesn't seem like the best vehicle to trade, or not the most liquid asset.
Who just asked that? Big Deal says, what's the different colors on the volume profile? And now there's a argument brewing about the colors.
Oh yeah, fight.
We fire a volume profile on here real quick.
Yeah,
I want to give my input on what these colors are.
As we speak, it's looking like we're pulling back down to this point of control. We'll see if there's any juice left in the tank. I'm definitely not going to take another long off of there. But let's pull up this volume profile for the day. Let's see where most of the trading activity was for the day.
I feel that I'm team pink and blue, but I want to. Yeah, pink and blue. That's my take.
There we go.
If you want to get precise, we're looking at something of a magenta and perhaps something of a cyan.
I actually don't like the two colors.
You want to change them?
Yeah, I hate the double colored volume profiles. I think.
What do they mean though? What is the pink and blue? Like, what's the difference between them?
I don't know what the difference is on the trading view over here. Let's see what they're correlated with. I know
developing is blue. Is that what it said at the bottom?
Is that the case?
Developing VA.
Oh, value. That's the value.
Oh, value area. But yeah, that's actually a whole different blue.
Yeah, so I know sometimes they'll incorporate like the TPO and volume profile in the same one, and sometimes they'll try to show the shade of two different colors. But I don't know what the trading view one is showing over here. But if you notice, the volume nodes relative are the same exact size to their brother and sister volume nodes.
Interesting.
There we go.
Well, yeah. I know that puts us pretty close to our time.
Yep, it is about that time.
Got anything on your mind? My Broadcom's already green. Don't miss the boat on the 9th largest company in the world, soon to be the 7th largest company in the world. I was going to use a curse word. Screw Saudi Aramco. All my friends hate Saudi Aramco. Pass them. They don't need that spot.
They don't need it. No, we'll see what we get here for the rest of the day. I'm not going to lie, though. I think we probably get another opportunity the way things are cooking right now. We probably get one more. We'll circle back around here tomorrow. That's going to be it from me. Anything else on your end?
Yeah, man, in this market, you just never know. We could get a tweet and just go red to green. I mean, these things happen all the time. But yeah, happy to see a little bit of an increase in vol. I was asking for it yesterday. And yeah, just going to be riding this out, looking to buy some dips. If anybody wants to get involved with Nvidia off the dip, do remember that if you so choose, and if you do choose to do it this way, do so conservatively, but there are leveraged NVIDIA ETFs now. NVDL is the 2x leverage long NVIDIA ETF, if anybody wants to choose to attack it that way. But is it really a true dip? I don't know. I mean, we've been as low as, I was about to start giving incorrect prices. We've been as low as, 170 on NVIDIA this year. So 185, not actually that crazy. And there doesn't really seem to be any great technical support in this area. But if you want to take advantage of the discount, NVDL is a way to do it. If you think that things are going to get worse, there is what is it? Oh, there's actually NVDU as well. If you prefer to go that direction, where's the NVDD and NVD? NVD is 2x leverage short NVIDIA. If that's that's your forte, feel free to attack.
2x leverage short. All the Nvidia haters are piling on that one.
We have no shortage of
what's hilarious?
Nvidia side product.
I genuinely think it's hilarious when wealthy people have beef with each other and they just like short the mess out of each other's stocks. Or like when rappers have beef, they just buy out the first 2 rows of their concert. It's just funny when people with a lot of money.
That's a good equivalency to draw.
Yeah. No, anyways, that's going to do it for today. JT knows, big deal. E-Media, Jets, everybody else, thanks for taking the time to hang out with us today. We always appreciate it. Be sure to stay tuned for more segments coming on next. We'll see you guys next time. Peace.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Y contigo me voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito. No me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma. Tú eres una malvada. pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá.
We are back. It's still Wednesday. No, it's Thursday. So I guess we're not that back. It's still Thursday, February 26, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, save the intro here. Say something snappy.
You know, I thought it was Wednesday too this morning. I don't know if that's snappy, but when I looked at my phone and saw that it's Thursday, that's always a nice surprise. You know, you're a day ahead.
Day ahead's good. Tomorrow's Friday. Maybe this market needs to close for a few days and think about what it's doing with itself after Nvidia earnings, which, forget buy the rumor, sell the news. Nvidia did pop up into new highs after hours yesterday, but down 5% here today now. Market digesting all the concerns around guidance, what have you, although the guidance numbers look great. So, Thomas, the stock dispersion continues. There is a noticeable divergence today. As Josh, we can head right to the charts immediately. When we take a look at our screens here about what's performing well versus what's not performing well, I see, quite frankly, a story about big cap versus the smaller guys playing out. Thomas, there's a lot of red here on the chart. This is a thematic heat map that I pulled from FinViz. You have AI down, you have the semiconductors down, hardware down, but it's not red everywhere. And I only want to stay briefly on this because it's really better to show than tell and just go directly over to the market itself. The equal weighted S&P 500, for example, is up by 0.14% right now on a day where the NASDAQ is down 1.7%. The Dow Jones is only down by 0.25% to that end. So this is very tech specific today. If you're in the NASDAQ, you're not having fun. But if you're in something that's a little less tech heavy, it's not that rough of a session. So let's just begin there. What do you make of this market's churn and rotation on the other side of Nvidia earnings?
Yeah, I mean, rotation's something we've kind of been seeing work its way through the market for a couple weeks now. I think it's encouraging because, of course, a broader liquidation event would be very bearish, a lot of fear in the market. This is more specific to, you know, the AI narrative. And you're right, the guidance was good. This is a market that is really, you have a high bar to clear. You know, from what I saw, the sell-off, the after-hours sell-off, you know, started during sometime in the conference call. So I think it's something that was said, an analyst question that was answered in a way that, you know, didn't inspire too much confidence. But, you know, they beat, the guidance is good. It's just, you know, this is concerning. It shows that there's some exhaustion in, you know, the enthusiasm that we've had for the past 2 years in the AI trade. And I think it's a further sign that, you know, it's topped for now. Because if good numbers and good guidance can't get us there, you know, what is it going to take for this market to push higher with tech? I don't know if it's going to happen. So I think you need to trade accordingly. And, you know, for Nvidia, I don't think that's bullish for me. I'm not trading it to the long side.
No, and it's certainly, semis had been a leader in this market. They were closed up at an all-time high yesterday. And today's price action, obviously a little deleterious, but bouncing off the 1 month moving average, which has been support for effectively the entire move since mid-December. I don't know if there's much more of a breakdown to be said there. Ever so briefly, before we turn our attention back to stocks, there is a headline out that's throwing oil prices around. Oman said that the U.S.-Iran talks today concluded on a positive note. So oil prices were up near 66 and a quarter when we started the show. We're now down to 65.50. We should be paying a little bit more attention to that later on during Futures Power Hour. But for now, Thomas, we'll turn our attention back to what's happening in the broader stock market, where even with this headline we're seeing come out of the Middle East, you are getting a little bit of relief here in equities. The S&P 500 is back to 6,900. It's still down around 58 points or so for today. Thomas, do we see anything else other than a chart here, which if we take a step back to a 4-hour time frame, it's still consolidating in the midst of a triangle? What's changed over the course of this week?
Yeah, I mean, still consolidation. That's the way I'm playing it. My long, calls are on the side for software stocks, so I'm kind of bottom fishing what's been being down. I think we still got more consolidation ahead of us, right? The Fed rate cut bets, 3 looks like they're kind of off the table, back to 2 cuts for this year. So really, it's about and even past the State of the Union, it couldn't really do much for us. Trump calling for renewed tax cuts or corporate tax cuts and personal tax cuts as well, but really no focused legislative agenda came out of it from what I saw. It's back to looking at economic data points, over the next couple of weeks, seeing where we're going with the economy, with inflation. Got PPI coming up. And, I'm really not seeing a catalyst that's going to throw us back into a big bull run. And conversely, I'm not seeing anything that's really going to beat us down a lot either. So, being neutral, taking advantage of high volatility where you can find it, I think is what you have to do.
Well, you mentioned can't really beat us down more. I suppose it's a good time to take a quick check at sentiment, which we did have an update to the AAII sentiment survey here this week. And the bulls, they are in retreat from 34.5 down to 33.2. The bears, they are advancing from 36.9 up to 39.8. The neutral folks, they are decidedly less neutral from 28.5 to 27. So the bulls and neutral people shifting more into the bearish camp. Why does that matter? We've talked previously about how when you think about a net 3-month shift in this kind of spread, you start to look at something in the neighborhood of what does a 15, a 20-point net swing look like over 3 months? Because historically speaking, when you get into the neighborhood, when people become too bared up too quickly, it often coincides with a low being found in the market over the coming weeks. This was very much the case in research that we showed back in September 2023. And incidentally enough, within a month, the market found a durable bottom that it has not seen since then. At that point in time, we were looking at a 16.5% net change over the preceding 3 months in the AAII bull bear spread. And Thomas, we're back through that threshold now. If we go back to, 3 months, you're looking now at a spread that has moved net 18 points. So we are looking at a washout here. I think we're in the process of putting all the bricks in the wall of worry, as is fairly typical in the second half of February. But the chart still gives you a triangle, and you're sitting in the midst of that triangle. So on one hand, for me, MES not looking great today. On the other hand, the short iron condor position, that's doing fine because the range is holding and the consolidation remains. So there are 2 different ways to play this market. I think a range at highs is something you want to have skin in the game on the long side. But until it breaks out, playing the ping pong is not the worst idea.
Yeah, I agree. And today, if we look at something like IGV, there's parts of the market, the being down parts aren't selling off. I think that's encouraging a bit if you're trying to find parts of the market where you can express more confidence in a long view. Because if the S&P 500, if it does just keep going sideways, you get those being down parts of the market where they're probably going to be dragged up just by, the impetus of us, trading sideways. So I like the market there, and I'm going to sit out for the rest of it and kind of wait to see what develops. Maybe next week will give us some direction. I really don't think we get much. We got a little bounce on some positive Iran headlines, so if they do make some kind of deal, maybe that gives us a little lift up, but it doesn't really change the long-term story for where corporate margins are going, for where the economy is going, right? It's more a story that's going to affect oil.
The S&P 500 found itself yesterday trading through its 1 week, 1 month, 50-day moving averages. Today's close could determine whether or not we stay above there. Thomas, in terms of this being a directionless market, I think the spread between the moving averages tells you everything you need to know. The 1 week is 69.09. The 1 month is 69.15. The 50-day is 69.12. So there's not a lot of agreement there. It's not like they're in sequential order where short-term moving averages are higher than the longer-term ones in a bull market, or conversely in a bear market, the 5 would be below the monthly, which would be below the 50. It's just a lot of chop right now. There is a little acceleration here in MACD, but stochastics are wrapped around 50. I mean, until we get a sense that this thing is going to give us a breakout, which yesterday it looked like it might, being directionally neutral, having one of those trades in your pocket, I think is going to be the best bet for right now. We survive the next week, though. We start to get into March, and the seasonal period of weakness comes to an end. That may unshackle this thing.
There we go. Yeah, I mean, yesterday I think it was kind of like short covering ahead of Nvidia earnings. The shorts in the market get nervous. You expect, blowout Nvidia number. The market rallies against you. Today we're kind of just back to where we started yesterday. So I mean, nothing too much has changed, and we've had the biggest market cap company report, and we're back to where we were. So I mean, what is the story that's going to drive the market going forward if it's not earnings from the biggest player in the game?
I think the dispersion story and the second rotation here, Thomas, is probably the most important takeaway today. RSP is up by 0.3% now. I know it's a 4-hour time frame, but triangles at the end of uptrends, bottom left to top right, typically yields continuation. And while not everyone may be a fan of diagonal lines because they are far much more subjective than anything else, I think we could argue that maybe the downtrend that was resistance is becoming support of sorts. Recent swing levels, that capped off price here in RSP, we're seeing that hold up as support a little bit better after retesting it. So is this looking like a market that we're looking for a major top having formed thanks to the letdown today that is a little bit of Nvidia, maybe even some of the Iran news sprinkled in? Maybe not. Maybe it's just going to be more chop, and bulls nor bears, neither bulls nor bears walk away happy. And it's the folks who are just sitting on their hands expecting the chop to continue. They are the ultimate winners. Thomas, I still have long deltas in the Russell, which is substantially off the lows, only down by 0.15% now. Triangles after uptrends, like I literally just said, are typically yielding bullish outcomes. So that's why I'm still leaning long here. I'm content with my equity positioning today for the most part. There are some things that aren't serving me well, but I don't see much of a change in the chart patterns that would warrant a change in our stance.
Yeah, for the Russell, I agree. I mean, you're holding the downtrend from the November swing low. You're in a triangle right now after an uptrend. Technicals, they look decent to take a stab on the upside. If I was probably going to do anything right here, probably be, getting some upside exposure to the Russell. That makes sense if you think dispersion is going to continue. Maybe, investors continue to get, less incentivized to go into these tech-heavy players, and you start looking for other opportunities. So things like, small caps, stuff like that. If you get a big rally in the Russell through economic or market cycles of the past, the Russell rallying, sometimes predicts the end of, the bull cycle. And, it doesn't happen every time, but sometimes it does. I don't remember the exact numbers. But that could be, a story to watch. And the timeline that it happens, I think, is like somewhere around 12 months that happens before you go into a bear market. So, I don't think it's too strong of a predictor, but something to keep in mind.
Much more domestic focus. The Russell 2000 here, Thomas, maybe keeping an eye and leaning, dare I say, on some of the data that's coming out about growth. Atlanta Fed Q1 growth update finally released 2 days ago for the first time. We're going to get an update tomorrow, 3.1%. So whatever fourth quarter weakness that may have circulated or been a knock-on effect of the government shutdown. Doesn't necessarily look like it's continuing. Then again, a CapEx build-out is becoming a greater influence on the economy, so that could be keeping a floor under things. Thomas, this is a future show, so why not have exposure in RTY as opposed to IWM? Good question. Let's do it. Where would we look to if the Russell is breaking out and we want the direct futures exposure? The high from January 22nd is 27.49. I think that's a fine place to look. If a triangle is going to break out to the upside, it's going to have to retest the flagpole, if you will, the starting point when the consolidation began at the highs. Only once that's cleared is the breakout valid. So we're going to make an attempt at it. 27.50 seems like a place we should reach into. I want to head over to this call spread. It's not quite a 2-to-1, but 1 in 3 chance, probability of profit, 33%, risking a little bit more than 1 to make 2, not quite there. But at 43 DTE, that puts us on the other side of a potential March seasonal window that has produced better outcomes for stocks. And so it's not relying on the market picking itself up between now and, say, March 10th, which maybe the consolidation continues for another week or so as we work our way through this tepid seasonal period. I'm comfortable with this. I'm hoping I get filled. I don't see much volume here at the 2,800 strike, but hey, maybe someone wants to make my day. And they did.
Yeah, 43 days out. You got some time to work with there. Some things are lining up for the Russell. If you look at things like regional banks, KRE over the past month is up 3%. If you look at larger banks, something like XLF down 2%. So there's also dispersion happening between large banks and the small and medium-sized banks too.
Yes, and you mentioned KRE, which I'm going to go to a 2-day chart here just to pull this back up onto the screen. I mean, this is a market that's pulled back into the highs from 2024 and is still retaining very much a technical setup that suggests breakouts in play. The triangle broke out, moved up to test the highs, punched through it, now pulling back in a little bit here. The regional banks don't look bad, and they just bounced from their 50-day moving average again, which has been pretty concise support, very clear support, going back to late November. So until that characteristic change, if the regional banks are trending up, Thomas, then the Russell has a shot. And I think we have to just take that shot and be on the side of a potential expansion to the upside.
Yeah, and I mean, good volume today or decent volume in the products today, which makes sense. Some lighter volume earlier this week, maybe some hesitancy to take on a risk ahead of Nvidia earnings. Earnings for the most part, we don't have too much left, right?
No, I'm just looking at the calendar right now here. In fact, it's funny that you said that. Do you care? I mean, there's Intuit and Dell today after hours, which are obviously important. Berkshire tomorrow. Buffett's last quarter at the helm. CNBC and Becky Quick will be talking about that nonstop, guaranteed. CrowdStrike next week. Target, Broadcom Wednesday. That's Costco. There are maybe one name every day moving forward that piques your interest, but things that are lodestars for the broader market, we're done with those.
Yeah, so it's back to, watching Fed rate cut bets, economic data, political headlines, geopolitical events, things like that. Intuit, after the bell, they just made a deal with Anthropic, two-way deal, Anthropic putting, Intuit's products directly integrated into their platform and then providing Intuit with some AI tools there. I think that's all priced in already to the stock. Kind of helped the SaaS sell-off to end, seeing a deal like that happen. Maybe we get more deals like that in the future for some of these software as a service stocks.
Before we take a turn to bonds, just a quick look at the sector breakdown today. We track 25 sector ETFs here on Futures Power Hour. I'm counting 14 in the green. 11 in the red right now. Worst performer semis down nearly 4%, followed by telecom and tech. Those are kind of all the growthiest things, Thomas, that we don't like being down. Same thing for discretionary, off 0.32%. On the other hand, there's a lot of names here that you like seeing to the upside. Real estate's doing better. Financials are doing better. Retail is doing better. It's not great. It's not the heavy things in the market. It's not your mega cap tech. But again, a day like today, Dow's off 0.1%, the Russell's off 0.2%, the equal weighted S&P is up by 0.25%, and just a little bit more here, it's going to be at an all-time closing high. I know what we're seeing on TV is spooky. CNBC is very upset about what's happening with the Nvidia reaction.
Yeah, it's a good headline for them to run all day.
Let's not get over our skis here, though. There's a lot to like still in the market, and we're continuing to churn and show dispersion at a time of year where it typically occurs. So nothing's really at a lockstep right now. Directionally neutral. It's working. Directionally neutral in the S&P, adding long and RTY, let's get away from IWM, Thomas. This is a future show. What are we thinking here? All right. We could turn our attention to bonds unless there's anything else you got to say here for stocks.
No, I know you're going to tell us about this 7-year note auction that we had. Completes the schedule for the week.
Am I? Do I have to?
I was expecting it.
I guess we could talk the 7-year note auction. Yes, there was a series of treasury auctions this week that were situated in the short end and the long, or rather the belly of the curve. There, of course, are no such thing as 7-year note futures. So we would look at the 5s, we would look at the 10s to see any sort of imprint there whatsoever. Bid to cover ratio was 2.46 over the past 6 auctions. If I'm seeing the numbers here correctly, we had a 2.5 bid to cover ratio. So that's good. We want to see higher bid to cover ratios, sign of stronger demand. Anything else, though, is kind of just on the screws. It doesn't really raise or pique any interest. The long end of the curve, though, where ZN, the 7s are right in between ZF and ZN, I suppose. They're holding up. 113 and 9 ticks right now. It's a 6-tick expansion, less than 0.2%. ZB, similar, 9 ticks higher, about 0.25% to the upside. Although it would be a closing high for ZB, a high that we haven't seen going back to October, in fact. So this is a market that's starting to look a little firmer. Low vol and pushing higher. This is an environment for call spreads, Thomas. That looks like a bull flag.
Yeah, it does. I'm a little hesitant to get long bonds until the 10-year yield breaks below 4, because we had that bounce back in October once we got just under 4 really quick, bounced, tried to get under there again in November, bounced from it, and now we're coming back for a retest. So, if we clear under the 4% mark for the 10-year yield, I think you get follow through. If we bounce from it, I'm a little more hesitant to, take a long position in bonds or notes.
There is that whole tariff rebate refund situation going on, which apparently
they're trying to get around.
The administration is trying to get around and saying, we can't facilitate the refund of these tariffs. It's already in the coffers. It's already been distributed and spent. So sorry, you're out of luck. Maybe issuance doesn't go up. I don't know if that rationale is going to stick, right? The government does control the printing press and can just issue more debt to pay back. I find this fascinating in the backdrop here. Stocks are down, gold is down, bonds are up, the dollar's up. That's a really, There was a piece of news that came out a few minutes ago that Israel's defense secretary, if that's what we call it, they told their health ministry, told hospitals to prepare for extended underground operations. So oil has been in the thick of it today. I know that we've been jazzed up on Iran headlines earlier this week going into Soto, but with oil now back in the positive after the Geneva headlines earlier, bonds up, stocks down. I don't know. we may be right about our concerns about Treasury issuance and the tariff refunds at some point down the line. But that doesn't seem like it's going to be resolved in the near term. And there are other catalysts in the queue ahead of it. So Treasury is kind of just acting as a general safe haven in the short run, absent any other influences.
Yeah, it goes back. If there's a war trade going on, you get oil and bonds up. Stocks maybe down a little bit, gold up. So I think the war trade headlines are going to continue, as these negotiations go on. And it looks like another week at least. Trump gave previously a 10 to 15 day deadline. That was like last week. That puts you somewhere like March 10th, around March 10th to the 12th. So, every weekend you got people calling now that the strikes are going to be this weekend. The assets are in place. If it's this weekend,
I would never say such a thing.
Yeah. If it's this weekend, it's this weekend. But I mean, you got to watch oil. You can watch bonds, gold. They're all going to react to these developments. So, I mean, once we get past it, you might get a clearer picture of the market operating on, fundamentals that aren't geopolitical.
Thomas, I've had two things going on here in bonds recently. At 29 DTE still, there is a short iron condor position on the board right now. I'm less inclined to keep something like that on when I look at a chart that appears in such a manner. Ticker agnostic, a rally into a consolidation that gives you a left shoulder head, a right shoulder that is higher than your left here. That looks as continuation can be. So let's change tact. Let's change tact here in ZB. 111, 112. We're getting out of the 119, 120. Nice 60. Oh, maybe $78 for our troubles here, Thomas, if we can get that filled. But instead, I'm going to take a look at the 57 days to expiration now. If we were to break out and we were to consider the move from the lows that we had in February, this is our extension that we'd work with. We'd start. Now let's go to the yearly low. Let's go here, and let's go back down to the swing low near 116.5. We start to line up targets that are up closer to 121. And so if we wanted to be a little bit more conservative and take just a measured move of even point and a half above 117 breakout, we could just go 120, 122 on a call spread in the short term, which again, it's a little bit of a reach. It needs the market to move. $359 loss if we're wrong versus a potential profit of 1640. I really like the setup. And I know bonds directionally haven't been the best thing for me. And I think ZB, the directionally neutral iron condor that maybe we make $78 on here, is the best bond trade I've had in a while. Although, guess technically not. The ZN reverse iron fly, I got assigned a note position at 113, and Nick let me know today that he was able to roll it and close it out at a profit. So maybe that didn't turn out terribly. Either way, though, ZB, can we make it two in a row, Thomas? I think it's worth the shot given what we're seeing on the screen right now. $240 of buying power, 57 DTE. It gives us plenty of cover if something bad goes wrong over the next few weeks.
Yeah, you got time to work there, and if you're playing for the technical breakout, I think it makes sense. I'll have to look at it. I can't get my platform up right now. That's not bad. I like the risk to reward.
Yeah, Jock, bad goes wrong. I know. That's why I looked like that when I was saying it. You don't need to bring it up. Okay. Metals have been dented for now. Next auctions, by the way, before we quickly move too far away from the auctions here, Thomas, next auctions that matter to us don't appear for another few weeks. The 10s, the 20s, the 30s, which is what we would care about. Next 10 is Wednesday, March 11th. Next 30 is Thursday, March 12th. And the next 20-year bond auction is going to be Tuesday, March 17th. So we do have a little bit of time here, a week and a half or so. Next week, nothing of interest. And then the following Tuesday, March 10th. That's when we'll start paying a little bit more attention to what's going on with Treasury. And then we can start talking about the QRA again and Treasury funding needs moving forward. Thomas, Gold, silver, a bit of a pullback today. Maybe a welcome sign for me and you. I know we've been talking silver here, but I don't know about you. I still haven't been able to get a silver call spread filled. And now the market's about $3 cheaper than it was yesterday. So
yeah. I was trying to get a call spread in silver too today. There's not a lot of volume there. And, technically I really like the levels here. I think gold and silver, we still have an administration that's pushing for more spending, tax cuts. Fiscal concerns have been, at least in part, helping the precious metals move up over the past, year and a half. I don't know if that comes back as a driving force, the war trade coming on, helping it. If there is war, I do think there's more chances for an upside move than a downside here. So if I can't get in the silver today, I'll try to get back into gold long. It's just the silver, not as easy to get in and out of as gold is.
It hasn't been. The markets are a little bit wider. I mean, I'm looking at the 96-97 call spread here right now. 50-cent wide markets up at 96. That's obviously not close to the money, but if you were to come in, their spread is closer to 35, 50 cents. A little bit. I mean, it's not terrible, but it's a little bit wider. SLV may be the better vehicle for silver for most people right now. If you're someone who likes to trade after the regular hours, SIL could just be the way to do it if you're going to be directional. I know there were some issues yesterday as well when we were on the show, or rather, yesterday, when we had the COMEX issues with silver and the market paused for 90 minutes. I'm not going to entertain speculation about what that was about. I've seen a lot of interesting theories come my way over Twitter. I appreciate the feedback from everyone. Someone said it was Jane Street. Come on. All right. 10 a.m. crypto plunge is one thing, but maybe I do indulge in conspiracies from time to time, Thomas. Either way, I'm going to try this again. 96.97. We got a bit of a pullback here. If the base of the consolidation that took place in February gives you a 95, 96 level, and the low is closer to 65, that's a $30 range. $30 on top of the breakout point at 80 gives you a 110 target. I'm not playing for 110 right now. I don't need something that far out of the money. But incrementally, step by step, getting a move into, say, 96, where the market did bounce initially on January 30th before finally spilling over, that would be of interest to me. So that low is like 96.40 and change, 96.97 call spread, 60 days to expiration. It's a beefy position, though, at $4,000 worth of buying power. We'll see if it can get filled. But SLV is probably going to be the better way to do this. And if it can't get filled today, Thomas, I think I'm just going to bite the bullet and go over to SLV because I need to just have the skin in the game. And I can't wait at a fourth day to get some action.
Chris, I've seen you espouse the conspiracy view that the CME glitch was about killing silver. But
okay,
I think
Tony
you were being
asked
facetious.
for spin.
You were being facetious.
Tony, he said, "What's the spin on the news?" And I said, "Okay, well, you want spin? I'll give you spin." Right?
Okay. Yeah, no, I'm going to try to get into silver. Like you said, the market it's not that accommodating right now for it. I'll be fine getting into gold too. I want to get back into the exposure for gold and silver. I've been out for a few weeks now. I've been playing the metals more copper focused, and I still like copper too, but yeah, I think gold and silver, they're set up for a decent technically. Copper, we have the big multi-week holiday in China ending, so all the factories are restarting. People are coming back from their vacations, so the copper demand will come back into the market there. We have to see how strong it's actually going to be. And copper is dictated largely by China demand. A lot of this year has been, tariffs, copper moving from LME and Shanghai inventories to COMEX inventories, a lot of disruptions between the three main vaults or three main, stockpiles you get there. I still like copper. Inventories have risen surprisingly this year, but we're still long-term, even medium-term. It looks like the market is going to move into pretty heavy deficit, depending on who you look at. We don't have enough copper to support this electrification, this AI taking all this energy, electric cars, all of that. So, copper, it's got this rounded top here, which I don't love, but we are holding those horizontal support levels. And until we break those, I'm going to be playing copper to the long side.
The horizontal levels, as Ilya Spivak aficionados would know, are his preferred way of looking at the market because those are absolute price levels as opposed to subjective diagonals. I think that's a fair reason to critique diagonals. So let's just use the horizontals here. The highs that we had here on the hourly chart, and we're looking very granularly right now to examine some of the micro technical structure here in copper futures. The 22nd and then the 23rd swing highs intraday have since become support now that we've flipped back over. And the uptrend that's carried us here from the lows just over a week ago on the 17th, still very much intact. I'm still leaning long deltas here, although not necessarily in the manner that I would like to be ideally. Short put spread has worked. How much more juice are we going to squeeze out of this trade right now? It's pretty close to max profit. I think it was risking 750 to make 250, a typical 1 for 3. And so at 225, we're there. We're basically there, Thomas. So I think taking this off and freeing up a little bit of buying power first off is a good play. Step one, that's done. Step two is figuring out what new exposure could look like and how we could take advantage of the fact that it's still a 60-hour IVR environment. If we pop on over to something like CPR, the U.S. Copper Index Fund, we don't trade CPR here. We're trading copper futures, but we do see a 60 IVR. And keeping that in mind, it's been a 60 IVR contextually where volatility has actually been coming back in over the past 2 days or so. If we step back from the hourly chart and go to the daily here in CPR, you could see that volatility has been trending lower for most of this year. I think we should take that as a sign, maybe, just maybe, Thomas, now that we're not sitting near support. The call spread side is maybe the more efficacious way to do this, because if vol does expand again, these calls should go up in value. So popping back over to copper here and looking at recent swing highs, 620 seems to be a place of interest. 620, 625. Risking 1 to just make short of 2. It's actually a 40% probability of profit. It's not a bad way to do it if we're looking for a bit more convexity now on the other side of a long delta trade where we did well. We probably could have been doing better.
Yeah, I've been playing a short put spread. I rolled up my prices, I think yesterday, maybe this morning. But I do agree with you. Volatility has been coming in. Still 60, not bad. You can find stuff there. But yeah, if volatility does come down more and then you get an expansion, it would be advantageous to your position for volatility to expand. Kind of like how we play gold. Gold usually rises, volatility rises. So you're getting the benefit both ways in playing a long call spread there.
If we were to think about the recent lows in the HGK6 contract, you are looking at a floor of basically 560 still. I'm just going to steal one of these horizontal lines here. 560 with a 60 IVR may be the more responsible way to do this, Thomas. Perhaps copper chops around moving forward. And you know what? We already do have long deltas and metals in the call spread side of things. So not putting all the eggs in the metals have to rally basket for this trade to work out, better suited. So let's go back to something where maybe on an individual basis, not happy with the convexity of this trade, but we don't need all the convexity in the metals. We're going to get more hopefully in silver sometime soon. And that's proven to be a little bit more jumpy than copper. So a 56565 short put spread, it is close to that 2-to-1. It is more of the conventional tasty methodology where you're risking 2 to make 1 and that 60 to 70% probability of profit. And what's great about this is even if copper, say, comes back into like 5.8, 5.9, this trade could still work out if you're patient enough with it and ride it down towards expiry, maybe through the other side of the decay curve, past 21 days.
Yeah, and copper seasonality, if we want to talk that, it's not the greatest through spring, but through summer you really get some good seasonality in copper, and that's because the demand side is usually drawn down on stockpiles are drawn. Construction spending typically picks up in China during the summer, North America, so you do get a tailwind there. So now we could, we're almost in March, we could start to structure our trades to take advantage of that stronger seasonality move starting in June, going through July and August.
Highs 5.7, 5.57, 5.58. The low here 5.8, 5.617. If we really want to be protective against the lows, we're going to have to give up some profit potential. And there's only not a lot of trading volume here today in the 555s. I don't want to Hotel California myself into position here, Thomas, but let's see.
It's the thing with copper, it's just, you got to be selective. You're forced to be selective.
Forced to be selective. We're going to select the 56565. Maybe it gets filled, not imminently, obviously. So we'll see if we have to work this a little bit, but maybe it's rounding out. I don't know if we can take seriously the January 29th, January 30th action, the candlesticks. It's a crazy day. The story then, if we're going to clip the tails off the price action, right, we'll go for, it's been flat. So short put spread, this thing doesn't necessarily have to rally to be correct. It just can't break down materially through the lows that we had post metals flush at the end of January going into the beginning of February. I'm okay with that. Long gold, silver, call spread, short copper put spread, all long deltas, a little bit of variety there. Which gold, do we need variety in gold? We broke out. We've been consolidating. It's a triangle consolidation after a breakout to the upside. Are you overthinking this, or are you just going to let your gold stuff ride? If you have it, I have it. I'm just going to let this ride. This looks fine.
No, I'm just going to get in a long call spread on gold right after the show. I've been wanting to put it on. I think we're there for it. I'll give myself some duration and, let it ride.
What else are we looking for here? We punched through resistance around 5,100. We've since broken out. We've consolidated and we're treating that former resistance as support. Triangle after uptrend. How many times have we fallen in love with triangles in gold and silver over the past year? How reliable have they been? This is an old friend. Yeah. It's like riding a bike.
So yeah, if you're long bonds, long gold, those two trades could work together. You get lower rates. That helps gold out. Rates should drift lower. 2 rate cuts. If you come back, start getting 3 rate cuts again, maybe that's a tailwind.
We do a little Drucken-Millerian type of analysis here, and it's a 4-hour time frame, 8 to 20 multiplier. You're looking at maybe a breakout occurring in the next week or so. We have a lot of gold here. If we didn't, 60 days is beyond the 28-day window. At a 57 IVR right now, I think there are some interesting opportunities ahead of us in gold because volatility, it's come in some over the past week. Volatility coming in and prices not breaking down raises an eyebrow. It's kind of like when volatility goes up, but prices don't rally. You go, wait a second, shouldn't it be doing better? I think long deltas here in gold are going to work. I like this chart. It's a chart we've seen before. I'm playing for the move back up into the highs. That's what the extension calls for. I've got my exposure peppered between 60 and 90, 60 and 89 now, technically speaking. Sitting on hands, Thomas. That's what's worked best for us with gold over the months. We don't change our tact.
Yeah, I still got to do the same thing. I was doing it all last year. I think you were too. And I think you got to keep doing it. We've had some consolidation, but that's expected after you get, that big sell-off that we've had, resumption in the prior trend. It looks like it's going to happen. If you look at the chart, it's a good setup.
I like it. It might be my favorite setup on the board right now, but that is typically how I feel about gold. least in recent months. Oil eyeing Geneva and then Oman and then whatever Jared Kushner had to say. It's been a rocky day for oil, to say the least, especially over the past hour or so. We can go to a 5-minute chart where, Thomas, this morning, oil goes from 64 and a quarter up to about 66 and 3/4. And then we start the show today right on the dot. We get the headlines out of Oman that the U.S. and Iranian diplomats will be meeting again next week, even if Kushner and co. are disappointed by the counterproposal, which from their estimate, at least what I've read publicly, it seems like Iran came back to the table with the same exact offer they had after the last meeting. So how much progress is really being made? Either way, though, oil is holding up. I mean, we did dip below 65 in that headline. We were down to 64.94, and we're already 50 cents higher from that. So nearly 1%, Thomas, 0.8% more than that off the intra-hourly low during Future Power Hour. The market is not really giving up the geopolitical risk premia here. In fact, if we look at how IVRs evolved over the session from this morning, it was in the low 70s. And even with the latest bit of pullback around the news, it's still sitting up near 78, 79. I think that's the tell more than anything else. Until oil vol dissipates, we're not done with this news cycle.
Yeah, very headline sensitive right now. I took off the put side of my iron condor this morning because we're pretty far away from it. We're near the call side, so I'm leaving that on. And, you know, if we get this pullback in crude, you know, I will take that off, and I'll probably go back into another iron condor on crude is what I'm thinking right now. Because you can get pretty wide right now, and I really like that. And, you know, you can take your ranges on the chart and pretty much pick out where you want your range to be, given how much IV is in the product. So it's, you know, it's juiced up right now, and that just gives you more optionality with the options.
81.6 IVR here now in crude oil. Where does this leave us on the charts, though? It leaves us meandering right around the highs that we had at the end of January. We've been pinned there. We have not been willing to give them up so far. That is very important. The market is staying here. Thomas, usually you come on Wednesdays. You couldn't make it yesterday, though, and we had a really interesting inventory data out from EIA, among elsewhere. I'm thinking that the market responded a little tepidly to some outrageously large inventory builds. How does that shape your understanding of the oil market right now?
Yeah, so the EIA said that there was a 16 million barrel build in U.S. stockpiles. That's the largest inventory build since February 2023. So it's big, you know, 3 years. We have not built inventories like that. Not the reaction you would expect from crude oil, given that size of a build. So it's showing you that this geopolitical premium is, you know, it's pretty firmly priced in to oil. It's showing that, you know, traders expect if we get a war that this huge build doesn't matter because the disruptions to the oil complex, the Strait of Hormuz, where 20% of global supply travels through, you know, if it's a war where the U.S. potentially targets Iran's energy infrastructure and just, you know, your typical regional disruption in the Middle East. Now there's headlines out that Saudi Arabia is standing by, ready to replace the lost oil from Iran if it does happen. But still, there's going to be implications to the oil market where a lot of things get really, you know, wonky. So, you know, right now you're not trading on fundamentals for oil. That's what it's showing. You're trading on headline risk concerning these negotiations. So, you know, I think the volatility is going to stay high until you have a deal that is signed. If, you know, you get headlines saying that negotiations start getting stale, start getting sour, then you're looking for the bombs to drop. And I think oil will react to the upside before that happens, because it's going to be, if the negotiations do break down, your only path then, the way the U.S. has set themselves up, is that there has to be military action if negotiations don't happen. Otherwise, why did you do this huge force buildup? Why did you set a red line? Why did you do negotiations in such a hardline stance if you weren't going to do anything? It would only embolden Iran. So, a deal has to be signed or there's some type of military action. And right now, the market's really uncertain about which way that's going to go. So it's erring on the side of, there's going to be some kind of disruption to the market. Like last year, it could be like where we strike the nuclear facilities, oil sells off on the news. But this time is different in that it looks like it's going to be a campaign that's perhaps a few weeks long, maybe even longer. And, when something like that happens, you have the potential to get dragged into a conflict that goes even longer. So, a lot of risk here to the crude oil market. And I think that's what the price is reflecting. That's what the lack of reaction to this huge inventory build is telling us.
We did get a headline here a minute ago. Senior U.S. officials telling Axios that Geneva nuclear talks with Iran were positive. You pop on over to your 1 minute chart here. You can see that oil decided to take a quick little 20-cent spill here over the last few minutes right now. We're obviously going to be in the throes of this chatter for a while, Thomas. But I think in both of our time in the market, if you saw inventories up at 16 million versus a 1.8 million build, 2 million, that would be something that would crush oil prices if there wasn't this background of geopolitical risk premia. So the fact that we're having this gigantic buildup and oil's not reacting negatively, it shows who's in the driver's seat. So, let's not overthink this. Oil vol up, as long as it stays up, Iran's at the front burner. That's what you're trading around oil. If you don't like it, then, maybe don't trade oil. But the continuous contract here, Thomas, before we turn our attention to FX ever so briefly, we are still sitting just below the midpoint of the trading range off of the Iran attack highs last June, going down to the lows in December this year. With the IVRs where they are right now, Thomas, you could look out in oil, as I've done, 49 days to expiration. You could start to layer in something like a short iron condor position on the other side of those highs and lows and get pretty decent compensation for it. Looking here at let's clear you out. If we were to put back on the trade today that we did just a few days ago here on the show, the 53.54, 78.79, it's still in that 3-to-1 neighborhood of about a 63% probability of profit. That is the yeoman's trade in oil, directionally neutral, range bound. You're sitting in the midpoint of the 12-month high-low. We don't need to play the Iran headlines. We can try to look through them. We could try to see if we can extract a little bit of theta decay out of here, even if we stay pinned at 65, 66 with an 80 IVR. Time can just melt away for this position to work out in our favor. So, Thomas, I think we have the right oil things going on. Maybe some long delta, a little bit shorter tilted, but take advantage of the high vol and work through it while we can, because it's not often you get IVRs sticking in the 70s or 80s for oil. It's more of a flash in the pan type of setup.
Yeah, we were trading in the 20s, the teens for quite a while there. So, this is a gift if you like trading crude oil.
Thomas, the expression, 6 times the charm, as they say. For the US dollar index, it is day 6 of trying to poke through our 50-day moving average, which is right near some of the swing lows that we carved out in December of last year. So not too long ago. You can see a market that bounced here in early February and fell short. So 98 is the ceiling in Dixie. So 1, 2, 3, 4, 5, 6 attempts now, but we're also not falling back below the 1 month. This feels like it's a pivot point for the dollar. We can't really determine the intermediate direction. Should we be trading higher than the 50? Probably not. But things have been better the last month, so we should be higher than the 1 month. Dollar holding up, though, against the places where it should be today. The British pound, an area where we've had some vested interest, leaning short a call spread here. Got a little dicey the past few days, Thomas, but now, hey, better be lucky than good. The 135, 136, this pushback against the 1 month today is doing what it should be doing if our thesis is correct. I'm going to ride this out a little bit longer. It's not comfortable, but it is something that is working right now. If I want my dollar exposure short, the British pound seems to be one of the better places to do it.
Yeah, I agree. I've been meaning to get in a short pound position since last week. I'm probably going to try to do that today. Another thing is the yen 2-week low, or somewhere around a 2-week low. Overnight, 2 new appointments to the BOJ's policy board that are dovish. So the rate hikes are back in question for the yen.
What's next on the calendar? Tomorrow, a few things: Canadian GDP, US PPI, arguably the most important macro event of the week for the US economy. Take that what you will, because I don't think it's all that important. Thomas, we won't see the tariff impact tomorrow, so who cares? We'll be paying attention to what happens later on today and the Nvidia digestion and this dispersion. Dr. Jim's coming up next with From Theory to Practice. Stick around, folks. You're watching Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Thursday edition of what it is that we are trying to do. Guys, welcome to the Victory Lap edition of what it is that we are trying to do, man. We are doing it. You can't even stop it now. Nvidia, Shake Shack, shout out to iPod Touch, hooking us up with a little Shake Shack last night, and CRM. Somebody else hooked us up with CRM, and I can't remember. I didn't keep the receipt on that guy. I do have iPod Touch for the Shake Shack, but whoever gave us the CRM trade, please identify yourself in the chat because you should get most of the credit for that trade. I mean, I'm going to take all the credit for that trade, but you should get most of the credit for that trade. And so this is indeed the victory lap edition of the program. Welcome to the show. I'm so glad that you're here. It's only because of you guys that we can do what we do. Like, it's only because of you all that we can take these victory laps together as a team in unison, enjoying all of our banana natties. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the show. Man, if you are also a bear in Nvidia, you can celebrate. If you are a bull in Nvidia, then you, of course, will be commiserating. But at least we get to do it together as a team there in the chat. And of course, remember, your number one goal, your number one objective, mission critical, is to pump that algo. So Josh, bring us into the market. Let's have a quick little look at what's going on. Yeah, we got some things, man. Even S&P is down 43. Man, look at that. Got the risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, down 323. You got the boomers down 6. You got the Russell 2000 futures index up 6 on the day. You've got bonds up about 10 ticks. You got notes up about 5 ticks. You got oil about unchanged. You got UB40 up a little bit. Got the Shifties down 24. Got the Hunt Brothers. Ooh, Hunt Brothers down $3 today, down to 88 and some change. It was a lot worse last night, though, right? Wasn't it? Wasn't silver down to like 85 or something crazy? I think silver was in the 85 handle last night. And so let's look here. Is this a daily chart? Yeah, that looks like a daily chart. So silver last night, yeah, it was 85.61. I'm pretty sure that happened like in the evening or maybe the overnight hours of last night. And yeah, so silver being 88, like it's down 3 based on how the futures kind of does like the closing of the day and like the daily changes and stuff. It's kind of hard to keep track of because they're all kind of different. You know, the metals are one thing, the financials are another thing. And so it looks a little bit off, you know, relative to like looking at spot prices all the time and looking at stock prices all the time, because it's clear. It's very clear. It's 9:30 to 4. It's very easy to follow. The futures pricing is not on a day by day basis. And so silver being down 3, it doesn't really feel like it's down 3. It feels like it's more kind of unchanged on the day, just given the fact that it was pretty weak last night and then overnight. And then gold is kind of similar from the standpoint that it's quite different. Gold, I mean, the chart looks kind of similar, but it doesn't feel the same. Gold feels much higher than silver, just because gold is 5,200, just over 5,200, and silver, obviously being 85, 86, 87, 88, is a lot lower than the 120 that we saw, you know, 3 weeks ago or 4 weeks ago. I mean, that's a 30% haircut, right? I mean, I myself could use a 30% haircut. That's absolutely true. And so I can appreciate the 30% haircuts more than most, I think. But gold, I mean, 5,600 was your high. You're at 5,200 now. It's only 10% off, not even 10% off of the high there. So anyway, there's some metals commentary. Volatility on a daily today. Volatility is going to be strong, of course. You've got volatility futures up 40 cents. You've got the spot volatility. The old VIX up 85 cents up to 19, just under 19, just a hair under 19 to 1878. All right, so here's what we're going to do. Guys, I finally did it. So this morning, so last night, right, Nvidia reports, and it's like, all right, like the first move was lower, but that only lasted for a couple of seconds, and I'm like, all right, that's a sucker's move. This thing's obviously blasting through 200, and there's going to be, you know, it's never coming back, right? So it was 201, 202, and it looked like it was off to the races. Like if you guys were watching the markets and kind of watching the print, whatever, it looked like 201, 202. It was about to be 206, 209, 217, and then it was over, right? I'm like, oh man. Like it's over. So I shut the laptop. I'm like, it's done. It's over, whatever. Hung out with the kids, hung out with the wife, you know, all those kinds of things. Later on that night, I pop in. I'm like, I'm just curious what's going on. And all of a sudden, I'm like, okay, it's like 196, 197. I'm like, I don't know what Jensen Huang said or didn't say. Right. I mean, I don't know if he'd be doing his own conference calls at this point. I would imagine he's just got the robots doing all that stuff for him. So I don't know what Jensen's bots said in place of Jensen, but apparently it wasn't necessarily well received. I mean, all the numbers looked amazing. Your revenues, your guidance, your profits, it's all amazing. But once again, the market reaction is totally random. Like the market reaction on a day-by-day basis, completely random. Of course, it's all going to go higher over time. You've got positive drift and positive risk premiums and all those things. But day to day, day by day, I think it's completely random. And last night was exhibit quadruple Z to that effect. And so as I'm looking at it, I'm like, we may have a glimmer of hope. We may not get completely crushed tomorrow morning. That would be kind of nice. And then this morning, all of a sudden, super weak, going down. The market opens and it just drops like a stone. So I did it, guys. I finally did it. I'm like, I'm going in here and I'm putting in an order to get this guy closed. And so if you look at the activity page here, you can see we closed out of both Nvidia at 1140. Right, we cashed that guy in for 656. I think if I would have held it, we would have gotten even more. It turns out we would have gotten more because now Nvidia is 185. Of course, that's how it goes. But I was like, I'll take it, man. We paid $2 for it or whatever. We're going to cash out for 650. That's a pretty solid trade by anyone's measurement, I think. And then Shake Shack, man, look at iPod Touch, Shake Shack. Man, that is some good stuff. I mean, that just makes sense, right? If you think about the event horizon and you think about the apocalyptic nature of said event horizon. I mean, I don't know about you, but I'm going to Shake Shack. Like, if it's my last meal, I'm going to Shake Shack. I mean, I haven't been there in 15, 17 years. And I'm actually a bit surprised they're still in business, but that's where I'm going. And so the fact that Shake Shack was up when everything else was down, it just makes common sense, man. Like, just use your noggin and it all kind of comes together. So Shake Shack, with our diagonal spread here, that was a really, really nice trade. And so thank you again there, iPod Touch. And whoever gave me the Salesforce.com trade, please let me know. I can't remember. I did not write that one down. And so Nvidia, we did this guy at 1140. Now let's go ahead and I want to continue the victory lap. It feels a little too short-lived. If we shut it down now, I can't shut the victory lap down now. That's way too early. So if I go to the chart of Nvidia, this is a daily chart of Nvidia. I don't want to see a daily chart. Let's do like a 2-minute guy. Let's get some of those royalties on the old 2-minute chart there. So if I go to like a 5-day 2-minute, like this is fine. I just kind of want to see like the open. Like there you go. Like you see all the pre-market stuff. Like again, this is kind of what I saw this morning. Right, we're getting a little chest pump, we're getting a little delt pump, and I'm like, all right, what's going on with Nvidia? A little chest and shoulders on a Thursday. I'm not sure if that's allowed, but that's what we did. And so there you have it. So yeah, it was just kind of meandering around. I'm like, okay, again, we may not get crushed on the open. And then Nvidia just completely sold off, just dropped like a stone on the open. It tried to kind of find its way. It tried to kind of find its footing, but it really just couldn't do it. And so we got out right around, I got out right around here, give or take. And so obviously that's not too bad, not knowing what was going to happen next, of course. And you have to remember, like if I look at this, let me clear those drawings. Like when I got out of it, it's always funny. Like when you look at a chart, whether you're doing analysis or not, like when you look at a chart, the first reaction I think everybody has is, oh yeah, I saw that coming. Like, oh yeah, that makes perfect sense, right? Because you have all the information. Like you have the benefit of hindsight. Like you are literally looking through the rearview mirror at whatever happened. You're like, oh yeah, it's so obvious. It's so clear. The Middle East tension did X or Nvidia earnings did Y or whatever. It's always clear. In hindsight, I mean, the rearview mirror, it's batting like 408, 410. Roman Anthony's about 420, 425. And so it's right there in the conversation. But when I took the trade off, I mean, I was looking at basically this. Right? Something to this effect. And so when I looked at this, I'm like, that's pretty good, man. I mean, I don't know that I'm going to get a better price today. Like, I would love to hold it. I would love to nail the short strike. And then the whole show can just be literally a 44-minute victory lap. Like if we pin the short strike and get max profit on a put butterfly for Nvidia earnings, talk about beating the system. Like talk about cheating death. Like, oh, that's going to be a 2-parter. That's going to be today and tomorrow, the entire show. But I looked at it and I'm like, man, we've missed so many of these in the past, in the recent past. Like they've just slipped through our fingers where it's like I had a nice trade, I had a nice winner, I didn't have the GTC set, or I wasn't in the market or whatever. And so this time I didn't even use the GTC. I just went in and actually closed it. Like I just went in and just kind of manually overrode the process and got rid of that guy. So Nvidia, very happy with the outcome. Of course, if I would have held it, it would be even better now. But yeah, I didn't know that in the fact. I didn't know that in the moment or before the fact. And so that's Nvidia. There's your victory lap. Second victory lap, Shake Shack. So Shake Shack was, if I look at a chart of Shake Shack, again, the fact that they're still solvent, it's a little bit surprising. I mean, rallies went up in flames. You guys remember rallies, right? I mean, in the north, in Michigan, it was called rallies. In the South, like my wife, Autumn, like I guess it's referred to as checkers in the South, but it's the same thing. I'm like, man, I don't know. I don't know if I can buy into that. Like you're trying to tell me that there's another rallies out there? I mean, there's really only one rallies. And now listen, guys, we can argue about this until the cows come home, right? But this is where I draw the line. Like McDonald's fries are good, right? Wendy's fries are good. Burger King fries are not that good, right? Arby's fries, obviously amazing. But Rally's fries stand alone. Listen, guys, this is objective truth. This isn't even up for debate. Like, I opened it up for debate when I started saying this, but as I think about it some more, this is not actually up for debate. This is a stone cold fact. Rally's fries are number one. There is no close second. And I don't want to hear this Checkers business. I can't vouch for Checkers being a viable substitute for Rally's. Is Checkers a synthetic Rally's? I don't know. Right, so I'm not going to vouch for that. But the fries at Rally's stand alone without question. And so Shake Shack, to me, feels like it's about on the brink of meeting the same fate as Rally's, but the stock's $100 a share. And so Josh is talking about Five Guys. Come on, dude. Dude, that is the most public thing. Now, Josh has said a lot of public things in his day. I mean, he pretty much just keeps spewing public nonsense day in and day out. But now he's talking about Five Guys Cajun fries. Come on, guys. You guys are killing me. Killing me. Let me know, though, in the chat, where you guys at? Oh, I see the Preston in the chat. You're the Salesforce.com. I appreciate you, my friend. Thank you so much there, the Preston. Outstanding job. But let me know. The algo wants to know. I want to know. Everybody wants to know. Where are you guys at on the fries? I don't want to know. I don't rank them. I don't need your top three. I need the number one. I need the number one, the numero uno. Who are you going for when you got a strong hankering for some farbs, right? Not just fats and not just carbs. You need them both, right? I need a heavy dose of farbs. Where are you going? I'm going to Rally's, like 1,000,000%. Like there is no close second. And so, all right. So that is, we just totally off the reservation, but it's Thursday. It's almost Friday. So that's kind of, kind of to be expected. And we got a fun little calculated risk episode coming out for you guys later on tonight. Man, I don't know what time they're releasing those now. I thought it was 5 Eastern, but they're dropping those guys at like midnight, so I have no idea. But it'll hit the YouTube channel at some point tonight, I think. And I think it's gonna be good. I mean, I'm a little biased with the guy, and I know the guy who did the show, and so give it a look and help your boy out with that watch time. That would be very, very helpful. But let's go into Salesforce.com. And so this is another one, given the fact that this is the victory lap version of the show. All right, guys, Salesforce.com. I mean, they're doing it, man. You can't stop it now, right? Salesforce.com up 866 on the day. And they came out last night and they basically just said, look, we're doing it. We're still doing the same thing we've been doing for many, many quarters and many, many years now. I kind of have no idea what this. I think we use Salesforce.com. Like as for some of like the tasty stuff, like tastylive, I think we use it. I think Tasty Trade uses it. Like I've heard it kind of loosely referenced in like meetings and like, meetings about meetings and things like that. And so obviously I'm on board. Like I think I contractually have to be on board, but all the more reason to play this thing to the upside. Like all the more reason to just be like, man, CRM, been a fan since day one. Like you can check the tapes, man. I mean, I got CRM shirts. I got the mugs, even got myself a little keychain. And there you go. So CRM, we got everything out of this trade. There's nothing more to get out of this trade. And, there's literally 1 penny left in the trade. So we can close this guy now for literal maximum profit. And so thank you there, the Preston. I appreciate you, my friend. I see Night Moves dropping some onion rings in the chat. See, now we're talking, guys. See, now this is what we need to be focused on. All this other stuff is going to take care of itself, man. It's going to 100% take care of itself. I mean, obviously, I'm on a little bit of a hot streak now for earnings. And so maybe you should be following Dr. J through the forest. Like maybe you should be tailing Dr. J's earnings trades. I mean, it's probably going to set you back financially, but you're going to have a whole lot of fun doing it. And so you might want to think about that. But now we're talking about fries. We're talking about onion rings. I mean, this is what we're here for. So if you came to the show today looking for trading help, you might want to check in a different day. You might want to try again tomorrow or maybe Monday, and you may have a better experience there. But anyway, Salesforce.com, we got it, and there's nothing to do here. We're not rolling it, we're not holding it, like we're just shutting it down, and then that's gonna be that. So let's close out of this position. We'll pay our 3 cents. We'll move on, and there you go. So that's Salesforce.com. All right, so we did Nvidia. We still have on the short call spread. We did Nvidia. Well, we did the first victory lap on Nvidia. We're coming back to the second victory lap, apparently, that I actually forgot about. So we'll come back to this short call spread here in a second. We did Nvidia. We did Shake Shack. So thank you, iPod Touch. We did Salesforce.com. Thank you there, the Preston. Appreciate you very much. Let's loop back around to Nvidia part 2, which I think we actually put this trade on first. But this was intended to be kind of the financing portion of the butterfly. The main trade was the butterfly. And then I also had this financing portion in like the 23-day cycle to bring in some credit. And obviously, I mean, we got very, it was a fortuitous bounce in our direction. Like had Nvidia ripped, then we would have been obviously in the hurt locker, like just you, me, and Jeremy Renner. And it's like, I mean, he'll probably save us, but I don't know. Like we may be too far gone. Like it's very possible that there's just no coming back from this. And so thankfully, Nvidia did recover, or not recover, but it did move lower for us. And so the butterfly was a winner, and the short call spread is also going to be a winner. I'm going to take it off right now because it's at actually a little bit beyond 50% of max profit here. And so there's no reason to keep this on, in my opinion. If I wasn't at 50% of max profit, I would consider it. Like I would consider just holding on to this trade and being like, all right, we've got a nice little kind of kickstart into the direction that we want to go. Like this is a nice little catalyst moving in the direction that we want to go with this trade. So maybe we just leave it on and go for the original profit target of 50% of max profit. You know, I've been opening up and kind of warming up to the notion of taking trades off a little bit earlier when they're really outperforming like where they, should be in a typical cycle. Like for example, if I sell a vertical spread and I'm looking for 50% of max profit and I get to 37% in a day, earnings or not, it's kind of like, I don't know, man. There's something to be said for just closing that right there. Like there's certainly something to be said for just, just shutting that guy down. But we don't even have to make that decision here. And yeah, we can just take it off at 50% of max profit. So let's go ahead to Nvidia short call spread. We highlight both and we close them. We shut them down. And then that will conclude. All right, there you go. We got to fill that dollar right. So that will conclude the victory lap portion of the program today. And so we did Nvidia 2 times, we did Shake Shack, and we did CRM. And I mean, across the board, I mean, AMD, we're hemorrhaging cash on AMD. We still have on this 210 put. We'll roll this guy tomorrow. I mean, the content's not going to write itself, right? It's not going to just create itself out of thin air, right? What do you think this is? Quantum mechanics? Like, what do you think this is? The Big Bang? Like, no, man. Like, this thing's going to need some kind of catalyst for the content tomorrow. So we'll do AMD tomorrow. AMD and Nvidia kind of follow each other, which is maybe not that surprising since they're so closely linked in terms of the competitor space. But I mean, like when one has earnings and it doesn't go well, the other one tends to follow suit. And I think it's even the reverse, if I'm not mistaken. Like if Nvidia has earnings and they blow it out of the park, AMD oftentimes rallies with it and vice versa. And so I'm not super surprised that AMD is down today, but it still kind of stinks for this position. But we'll sit tight. We'll deal with this. We'll deal with this guy tomorrow. And then AMD is looking great. I mean, MES is looking great. Oil's even. I mean, oil, that's a little bit of a stick in the mud, but we'll hang in oil and not do very much in that guy right now. And then GDX got Home Depot. Look at Home Depot. Can't really get out of its own way, but that's okay. I mean, Lowe's more than paid for the Home Depot thing. Got Meta. Look at Meta. Bucking the trend, Meta up $4 today. So that's really, really good. And then IWM. Obviously, IWM between the short strikes. And so that's obviously looking really, really solid. Starbucks is up today. And so our short call, again, the idea here is not to do anything with this. Of course, had I known what was going to happen, I would have taken it off a couple days ago. Like had I known that Starbucks was going to rally, I would have taken it off. But unfortunately, I didn't know that. And you don't know that. And I don't know that. And we never know that. And so again, it may feel like, I kind of knew that it was going to do X, Y, Z. You didn't know anything. Right. And I didn't know anything either. Like we never know anything. And so you just have to respond to what's happening in the market and do so in a strategic, consistent way. And that's the best you can do, really. And so with an investment style covered call, again, it's more of a laissez-faire type of thing. It's more of a hands-off type of thing. I just want to let the strategy work. Now, the benefit here is from a teachable moment standpoint, this could actually be really good for us because if this short call goes in the money, that's going to give us, we only had a couple of opportunities last year across this, year-long, 15-month-long project that has been this investment style covered call in Starbucks. We only had a couple of situations where it actually went in the money. I think one time, like back in like March or April, kind of early on, maybe a year ago or so, it was in the money. The call was in the money for maybe a week or two, or maybe 3 at the most. But then we didn't do anything because that's the beautiful thing about investment style covered calls. No matter what happens, stock goes way up, stock goes way down. It's very rare that you have to do something right away. Like it's very rare that you find yourself in the situation that just commands like the utmost urgency. Like that just doesn't usually happen with an investment style covered call. Things are just kind of more not lackadaisical because that makes it sound like we kind of don't care, and we do kind of care. More kind of drawn out, more kind of methodical over time. And so that's kind of nice if you are a longer term trader that you want something that's a bit more hands off. An investment style covered call is going to be right up your alley. And so that's why I wanted to spend so much time on this over the course of the last year plus. And I think it's been good. I think it's been a worthwhile endeavor. And so we'll loop back around to this over the coming days and whatnot, and maybe it'll go in the money. I mean, that would be good from a position standpoint, and it would be good from a teachable moment standpoint. And so maybe we'll get the old win-win there on those two guys. So that's Starbucks. And then SLV, I mean, we're right there. Again, we'll just do this guy tomorrow. We might be just taking this guy off. Yeah, I'll do it tomorrow, though, because, again, the content tomorrow, guys, it's not going to create itself, right? We are going to need things to talk about. So we're going to wait on SLV until tomorrow. So SLV, man, look at Snapchat. Up 15 cents today, 16 cents. Now, this thing is on a tear. 15 cents on a $5 base, that's 3%. Like, look at this thing, man. I mean, are they getting bought out or something? Is there some M&A whispering going on? Because a 3% move, that's a pretty significant move. Now, normally, we're trading Netflix, trading a little Snowflake, doing a little Tesla. You see 15 cents, you're like, well, that's just a bid-ask spread differential. You're like, that's just kind of a little bid-ask bounce. That's not an actual move in the stock. But not for Snapchat. That is the whole move in the stock. Like, that is the stock, right? I mean, 15 cents is like, man, that's 3% of the whole company, right? And so, man, that's some good stuff. Snapchat being up 15, 16 cents. We will take it and not ask any questions. So, all right. So there is your overview, your state of the union for the portfolio. And there you go. So, all right, let's see where you guys are at, though. Man, where are you guys at? I want to give a quick scan. We got to surprise and delight some people, but I'm giving some quick scans to near the end because I want to see where you guys are at on these fries. The Jumbo Life saying number one is McDonald's. I respect it. I respect it if for no other reason than the nostalgia, right? If for no other reason than kind of being the OG. Like, I'm pretty sure McDonald's was first on the scene. Like, McDonald's was first on the scene in the fast food kind of giant, chain, restaurant, whatever. I mean, McDonald's is the OG. And so you got to kind of tip your cap. Like, you got to tip your cap and be like, yeah, man, give me all the canola oil. Like, give me all the palm oil because it's delicious, right? It's 100% delicious. Future me, going to have a whole lot of problems. But I'm going to let future me worry about that. McDonald's is the OG. Sparky Dog talking about some In-N-Out fries. I don't know if I've had In-N-Out fries before. Maybe I have. They don't ring a bell in my mind, though. And so they're not probably going to be above Arby's. They're not going to be above McDonald's, in my opinion. They're probably not even above Wendy's. And, I mean, apparently Josh's Cajun fries at Five Guys might even be able to kind of give them a run for their money. So I can't speak to In-N-Out. Really. Old Two-Face saying Five Guys are my second best. Five Guys are just not very good, though. They're just not. Old Two-Face, Wendy's fries are the worst. I can respect that too, actually. I'm going to put Burger King at the bottom of that discussion, and I think that's a pretty obvious choice. The Burger King burgers are amazing, but the Burger King fries, not so amazing. If you want to put Wendy's in that category, you're not going to get any fight from me. I 100% agree with you. And so let's see. Oh, and then Stan Lucian says, Mr. Ronnie Coleman baked homemade style potato sliced fries. Yeah, I mean, the homemade styles are great, obviously. I mean, the homemade styles are amazing, but we're talking, I want the commercial stuff. I need the mass produced stuff. I want the stuff that they're selling millions and billions a day. That's what I want to talk about right now. And then Night Move says the curly fries, Jack in the Box or Arby's. Yep, Arby's curly fries. I'm right there with you. And so, all right, let's go. Let's see. Where are we at? Let me try to get to, man, can I surprise and delay somebody in the middle? Let's see. Well, Margin Walker is talking about in the middle. So, Josh, you were talking about Dell earnings too. So is Margin Walker. Margin Walker saying, just drop it in for Dr. J to pump that algo. What's up, my man? How about a 50 DTE strangle in Dell for earnings? The 100, 150. Man, Dell. Here we go. And so, Josh is trolling me about Bonefish. He just doesn't know, man. He just doesn't understand. It's okay. It's all right. Dell. So if I go into Dell's at 122. Dell's tricky because Dell was private for a while, right? I mean, wasn't Dell public and then private and now they're public again? And so I could be like years off on this, but it's somewhat recent, them being public again. Like within the last 10 years, I want to say. It's not like they've been public since like 2000. Like when did Dell become public again? I would love to know. The chat would love to know. The algo is dying to know. So please put that in the chat. When did Dell become public again? Because they were private for a while. Like I would really, really love to know. And so would the algo. But if we go to Dell, they have earnings tonight. What are we thinking here, Margin Walker? Just a strangle? I mean, I'm kind of digging it because I feel like, feel like we've dipped our grubby little paws in the cookie jar a few times now. And we've gotten out. Like we've gotten away. Chocolate chips, oatmeal raisins, a couple peanut butter guys, and we went ahead and we snuck away undetected. And so now I'm kind of feeling like, I don't know, man. Like, do we want to do it again? I don't think so. And so yeah, I kind of think, what if we just do this strangle that Margin Walker's got for us? A 150 strangle for 468. I mean, your buying power is only $1,200. The liquidity is okay. It's not the greatest in the world, but it's also not the worst. I mean, it's probably better than Lowe's. You guys saw the Lowe's fiasco the other day. That was really bad, but it ended up working out. So obviously, I'm not going to be too upset about all the liquidity issues we had there on the way in, and if I remember correctly, on the way out too. Like it was a kind of a double whammy deal. But if we do this, a probability profit of 73. That's pretty good. P50 of 85, so I can round up to 100 for my mental records. That's pretty good. Theta 13. Max profit is going to be your credit collected, so 466. Maximum loss is going to be negative infinity. So theoretically, you could reach a state where you are never not losing money, and you need to know that right here and right now. Is it likely to happen? I'm going to say no, but theoretically, is it a possibility? You have to know that the answer is technically yes. Buying power $1,200 and yeah, credit collected 466. So man, I like it. They have earnings. It's tonight after the bell. I mean, let's do it, man. So this is not as fun. Like plus it's a Thursday, right? The Thursday going into Friday, expecting butterflies. It's all fun and the content won't create itself and blah 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 blah. But again, I'm kind of thinking about cookie jars, kind of thinking about grubby little paws, and I'm like, I don't know, man. I don't know that I want to necessarily, try to push our luck a little bit too much right here, double whammy style. So I think let's go ahead and do this. Thank you there, Margin Walker. This is a really solid looking trade. And let's see what happens. All right, so we got filled at 466. So there you go. Nvidia, I should say the liquidity looks pretty good. And so very nice. And I see Adam Armfield is in the middle too, saying, hey Jim, I took a quick $140 on your Nvidia trades. I took them off early due to the dicey source of the trades, as you should, my friend. Like, as you should. Any green that you get from a Dr. J tail, I mean, that is like, man, that is like a fat finger mistake, right? So this is something that every trader can relate to. If you've been trading for longer than like a week, I guarantee you've made a mistake. And I don't mean like a conceptual mistake or a strategic mistake. I mean like you went in and you meant to buy and you sold. Or you went in and you meant to buy one and you bought two. Or you meant to buy one and you bought 10. We've all been there, right? We've all been there a million times, right? Nothing is sweeter than a fat finger mistake that you don't catch in the moment. You catch it 10 minutes later, 20 minutes later, an hour later, the next morning, whatever, and you made a little money or you made a lot of money. You made any money. You're like, wait a minute. It's a complete state of disorientation. You're like, wait a minute. Nvidia's down. I thought I was long Nvidia. How am I making money? How am I this? How am I that? Right? And so it's an amazing thing when it comes to, fat finger mistakes and making money. And it's a beautiful thing. And so that's kind of like tailing Dr. J on his earnings trades. And look at Josh mixing up with the video trolls. Josh is video trolling me in the middle of the show. Don't ever do that again. And so I think he's got some weak Five Guys fries. And yeah, but he's stepping up his game though, man. The video trolls, that's like some B+ stuff. That's like some solid B stuff. And so good job, my friend. I respect the game. So let's go back to the very beginning though. Now that we he's got McDonald's fries. I couldn't see out of the corner of my eye. Okay, I made him order McDonald's. Well, it's better than Five Guys. So that's good. All right, the Preston's in the house. Again, thank you for the CRM. I appreciate you, my friend. You're the king. Man, I don't know about that. You have crushed it this week. Home Depot, Lowe's, Salesforce.com, NVIDIA, Shake Shack. Is now a good time to reverse and go bullish on NVIDIA. Thank you for all that you do. I mean, I don't know, maybe. I mean, obviously, all kidding aside, they did have an amazing quarter. Like, they really did. If I'm not mistaken, like, they crushed everything. Revenues, profits, guidance, like, it's all there, right? I mean, Jensen came out with the new leather jacket. Like, it was all there. Right. And so the fact that it's getting crushed today is like, I mean, I'm scratching my head just like everybody else. But again, I think day to day is completely random. Is this a good opportunity to get long Nvidia? Probably. Right. Probably. And so, this could be an opportunity to get long if you want to hold it for a long time or whatever, but could this be the bottom? I don't know. You might be able to get in at 170. You might be able to get in at 160. And so, I mean, just make sure that you, understand what you're signing up for when it comes to, getting long. And I mean, do it with a short put, do it with a short put spread, do it with something that's a little bit more strategic than just purely long stock and give yourself a few different ways to kind of make money and be right there. And so those are my thoughts there, the Preston. Ash Fan is in the house. What's going on there, Ash Fan? Thank you very much, my friend. Thank you for being here. iPod Touch in the house. What's up there, iPod Touch? Dr. Jimmy, that was 2 for the price of 1. It was a mini event horizon. That's correct. NASDAQ down 320. It was down 400 something earlier. And so, and an earnings winner. You're my man. You are my man. 100% there, iPod Touch. I appreciate you, my friend. Thank you so much. Too Late Jake in the house. Hey, Dr. J, do you ever trade zero DTEs? So, I mean, not really, not on the show, because I try to do all my trading on the show, and in terms of giving you guys, the live experience for things that are happening, and you can see them, right? So obviously doing the show at 2:30, it's not going to make a lot of sense for me to do a zero DTE with only an hour and a half to go, right? It makes more sense for me to do something overnight or like a 1 DTE, but in my head, I'm kind of classifying that as like a 0 DTE, not a 1 DTE. Now, could there be things happening behind the scenes in like stealth modes that you guys don't know anything about? Hypothetically, possibly. Could you maybe know things about these things later on in the future? Maybe, right? I'm not willing to say or confirm or deny any of these things that may or may not be happening. But too late, Jake. There may be some things coming on down the chutes at some time in the near to distant future. Orgdenu's in the house. What's going on there, Orgdenu? Hello, Dr. Jim. Congrats on the video. I appreciate you so much, my friend. I think we have to recalculate so we can change the policy. I think that doing the exact opposite is no longer an option. Well, so this is it, right? I mean, statistically, even I'm going to hit a little bit of a hot streak. And so we have a little bit of something now obviously happening right here and right now. I mean, Shake Shack, Nvidia, Salesforce.com, Home Depot, Lowe's. We got 5 or 6 in a row, whatever it is. And so, statistically, that has to happen to even the worst traders, and it's happening to me. And I don't know that there's anybody that's worse than me. Directionally for earnings, I've got to be bottom of the barrel. I'm right down there with Burger King fries, man. Like it's neck and neck. Like I'm not sure who's worse. It's one of us for sure. And so, Josh is telling us CoreWeave. Now I'll pass on CoreWeave. Thank you, though, man. I appreciate that. I'm going to pass on that. Again, Grubby Paws, Cookie Jar. Let's just let it sit for a minute. Let's just bask, right, in the spoils of victory for just a day. Like just one day. Right. And so thank you there, Josh, but I'm going to pass for that reason. And so I don't know there, Orgdenu. I don't think it's time to necessarily abandon, what has been proven to be safer than a UST bill. And it gives you a better return. So I don't know if it's time to do that just yet. But time will tell. Emmett Morrison in the house. What's up there? Dr. Jim Time, the best time. Thank you there, my friend. I'm going to send you the cash we talked about for you putting that in the stream at this very time. So thank you, my friend. I really, really appreciate that. Jared Kramer, Dr. J, going to be electric today on the Nvidia move. Let's go. Man, I appreciate you. I think we're kind of a flickering bit of electricity. I don't know if it's like a steady stream. It's kind of more like a Joe versus the volcano thing. And so we got a little bit of that going on, I think. But I appreciate you there, Jared Kramer. Thank you for being here. The Preston, if love and Dr. Jim is wrong, I don't want to be right. There it is, man. I'm going to send you that cash we talked about for dropping that little lyric in the chat at this very time. Thank you, my friend, and thank you again for Salesforce.com. Wolf, Dr. Jim, if you didn't take a 30-minute victory lap on today's show, please use my time to gloat more because you're on fire, man. Look at you guys. You guys are taking all my cash. You're taking all my earnings winnings for putting all the stuff in the stream. Because now the algo's getting smart, man. Like, they're like, man, this guy might be a solid trader. They're seeing all the comments. They're hearing my own voices and my own trades and dings and whatever. Like, wait a minute. If people actually want to become better traders, maybe we should show them this guy's content. Man, are they going to be in for a surprise? Because that cold streak, man, it's going to be ice cold. I mean, this thing is going to be like the Arctic, man. Like when this thing hits next week or the week after or tomorrow, whatever, like it's going to be frigid. But for now, we are going to bask in the sunlight that is the spoils of victory. And so Harsha's in the house. Let's do a Nvidia victory lap, man. We did a couple, and so there you go. Rats Media, I'm ready for that 10-minute victory lap. Let's go, my friend. Stan Lucian, what's up? Emmett Morrison must have used some of his Nvidia winnings to buy a new shirt. No, I've had this guy. Some of the OGs should know. Like, I'll mix this guy in. Like, every once in a while, I'm like, hey, you see that tree over there? That guy needs to get cut down. Right? So obviously I throw on my plaid shirt and we get to work. Right, so this guy, it's in the back of the closet, but it's still in there. Like, it's still there. Let's see. Up and down. Microsoft long leaps today. It's a game of time. Yeah, I mean, a lot of people like to do leaps with a lot of duration which I guess is a leap. A leap with a very high delta is kind of what I meant to say, to be a substitute for long stock. And that can be a great strategy there up and down. I mean, you didn't really ask about a strategy, but just to offer up a little bit more commentary around the edges of what you're saying there. That can be a great way to play direction in a stock or in an index. And so go for it. Yeah, definitely go for it. Ramsey, hello, Doc. Awesome Nvidia move. Appreciate you, my friend. Sparky Dog, you nailed the butterfly. Man, I appreciate you. Ranch, what's going on, my friend? Sergio, what is up? Bonefish weekend for sure. Weekend? No, man, we are going tonight. We are going tonight. I mean, Autumn doesn't know it yet, and I'm most likely going by myself. But Bonefish is going to happen tonight. And so let's see. Fred Johnson in the house. Dr. Jim enjoying the victory laps, man. I appreciate you, my friend. Up and down commenting on the shirt again. So thank you, my friend. Man, look at that. There's Adam Armfield, the surprise and delight. There you go. There's the Preston. He was the CRM, 10% of the credit. No, man, you can have all the credit. I mean, I'll keep all the profits. You get all the credit. That seems pretty fair. I think that seems pretty reasonable. So Margin Walker. Oh, there's the other surprise and delight. Man, we made it back to the surprise and delight. There you go. Argent Purrs in the house. Yes, the typical 7 to 8 p.m. attack just sold an SLV put spread to buy a wide call spread. Okay, so you're double dipping too, right? You're playing the upside by selling the put spread to bring in the credit, then using that credit to effectively buy the call spread, right? So that's kind of what we did with Nvidia, just on the other side of the market, doing it on the downside. And so that's obviously fine. I mean, I do it myself. I love it from a directional standpoint. Just know what you're signing up for, though. Like, just understand, like, all right, if this thing doesn't work, like, we are going to get hit twice, not just once. And so, let's see, Thomas in the house. Thomas Y3H3F. I sold my Nvidia put butterfly too early. So sad I could have made double. Hey, man, again, the rear view mirror, right? Again, just to recap, Roman Anthony, rear view mirror. And so again, it's like, man, that's tough. It's tough to kind of put yourself in that league. Like, it's tough to expect, that type of, performance when you know what happened, right? When we're ex post and we have all the information and it's after the fact, it's just a different world. It could just as easily have ripped higher rather than just keep going down lower for Nvidia there. And so nice trade though, my friend. Very nice trade. N1C is in the house. I appreciate you, my friend. BDH, the good doctor and his algo. Yeah, maybe that sounds like a book title. I mean, that definitely sounds like something. Look at the Russell up 11. Man, just really bucking the trend. Look at gold only down 14. Where's silver at? Are they rallying too? Silver only down 250. Yeah, see, like silver 89. Excuse me. Is silver 89 today? Feels like an up day. It doesn't feel like a down $2.50 day. And so, yeah, it's the futures pricing is always a little bit off. There's Griffin Jones for the algo. I appreciate you, my friend. Baker 4616. Dr. Jim, Jensen didn't say anything too outlandish. There was a good question about how Nvidia customers are going to continue to spend, and his answer wasn't great. Oh, well, maybe that was it then. Like, maybe that was it. Did that happen at the end of the conference call? Because I heard something about something happening at the end of the conference call. Oh, thanks there, Josh. Josh giving me a Netflix trade idea. Remind me tomorrow, Josh, because at the end of the show, I'm probably not going to do it now. But that's really, really good. Yeah, I heard something at the end of the conference call was a little bit off-putting. And so maybe that was it. I don't know. And so that could be the reason. I don't know. Let's see. Neil Weston is in the house. Hopefully I lose this 10,000 mores. I'm not sure what that's about, but I appreciate you there, Neil Weston. Thanks for being here. Brian is in the house, or Brian is in the house. That looks like Brian. Brian, that's the cha-cha. Not the gotcha, but the cha-cha. And so thank you there, Brian. I appreciate you. Old Two-Face. Dr. J, what are we doing in XYZ for earnings tonight? XYZ is so funny to me because it's an actual company. Yeah, that's so funny to me. Do they really have earnings tonight? They do. Now, of course, coming from being an academic, coming from academia, right? Having taught in the classroom for, it was like almost 7 years before I joined Tasty Trade. Undergraduate MBA classes, like I loved it. I've talked about this many times before on the show, so I'm not going to belabor that point here and now. But obviously going through so many examples in class, XYZ was the prototypical stock. XYZ and ABC, right? So XYZ, ABC, are they also a company? No. So ABC is up there. It's in there for the pickings, man. So if you're looking for a ticker and you're a privately held company looking to go public, might I suggest a little ABC? You're obviously going to get a lot of demand from the academics in terms of bringing some attention and some, kind of understanding to your company. And so, yeah, XYZ and ABC, those are your classic prototypical hypothetical stocks. But it's not even hypothetical because XYZ is an actual company. And so that's super, super weird. I'm going to pass just because I have no idea what they do. Not that that's ever stopped me before, but I'm going to pass right now. They're old Two-Face. Let's see. Griffin Jones, it is less noggin and more gut. If you are referring to my earnings selection strategy, you are correct. I'm not even sure it's too much gut. I think it's just kind of like, that feels kind of good. And so there you go. Let's see. Stan Lucian. I think Nvidia can create their own AI type products if their customers stop spending. They have enough cash to do it. Yeah, maybe so. And we will see, my friend. The Jumbo Live, saw some Twitter dude talking about Nvidia sold off because the market maker sold a bunch of 200 calls and bought stock as a hedge. And so it sold off because they dumped stock to close hedge. How do you find this info? Well, I've only got like a minute to go. It's going to be difficult to find that info, but dealer hedging is just a natural function of the marketplace. So the Jumbo Live, this is a great thing. And this is something we need to have a longer discussion about at another time. Maybe an episode of Calculated Risk. But like, so when a lot of people buy calls, like if a lot of retail flow comes in that's buying calls, the market makers are on the other side of that. They're short those calls. So they have to buy stock to hedge those short calls so it can send the stock even higher. You have a lot of upward pressure in the stock price from the long calls and the long stock that the dealers have to buy. The same thing happens on the other side. Right? Like if a lot of short calls were to come in, or if a lot of long puts were to come in, when it comes to, the retail side, the market makers are going to be bullish delta from those short puts. And so they have to hedge off that bullish delta by selling stock. And so that can cause the downward moves to be more pronounced as well. And so maybe that's kind of what you're referring to. The data on that is a little bit choppier to actually have. I think some traders can get it, but I think it's pretty expensive to kind of get positioning on that. So understanding it in more of a conceptual framework, in my opinion, is typically good enough to help you kind of, navigate the waters and kind of move forward. But I got to go. I got to run and get you guys to Tim. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, good afternoon. Welcome to the post-Nvidia world. Tim Knight here, and got some things to talk about. So, as you all know, the big event yesterday was Nvidia's earnings, and it was kind of an interesting three-act play because we were all on the edge of our seat, and for time immemorial, they've come out with earnings at 20 minutes after the close. A lot of companies do it like the millisecond after the close, but Nvidia, they pull an Apple, they get cute. They're like, well, we'll take our sweet time. And they really took their sweet time this time because it was like well more than half an hour after the market had closed. And like, deigned to give us the information. And people's eyes bugged out. It was so good. Revenue beat by billions. Profit way higher than expected. Projections for the future way better than anticipated. It was just like green, 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 green. Good news, good news, good news, good news. And the stock went berserk. The stock went blasting higher. Nvidia went higher. SOXL went higher. SMH went higher. Everything went higher. Party time. And it stayed that way. But it started kind of a little chipping away here, a little chipping away there, a little softness here and there. And before long, it was up by $1, just a little bit. So I imagine those who were like very aggressively positioned on the long side with like a lot of short dated calls or something were like, grr. And then it just kind of hung out all night, kind of drifted, meandered, almost always in positive territory. It looked like, well, the big pop's gone, but maybe it'll come back, and things are just kind of hanging out a little bit positive right now. And then the market opened and they pulled the rug out for some reason. And I imagine that those who held on to their calls or sold their puts right quick at the opening bell have been screaming all day long, because Nvidia is down. It's not collapsing, but it's down pretty good, and took most things with it, especially tech stuff. And so we'll look at that in a little bit of detail in a sec, but that's been like the show today. And so NQ has been following. And, I mentioned from time to time, follow Bitcoin, even if you don't care about crypto, follow Bitcoin, because it's got this weird relationship with equities. And that was borne out nicely because NVIDIA's news came out and NVIDIA popped. So did Bitcoin. What? It's bizarre. It's like a guy got served a medium rare steak in New York, and Billy in Des Moines got a B on a spelling test. Like, seems totally unrelated, but Bitcoin popped, and then when Nvidia started slipping, so did Bitcoin. Odd. Anyway, so let's look at some charts together, and we'll loop back to Nvidia shortly. Beginning with the diamonds, it is vexingly, annoyingly, irritatingly, just kind of hanging right at the trend line. It's just got its thumb stuck in its pockets. We have broken it. I'd love to see some selling happen, but so far it's just kind of lingering there. It's up, 1/10 of a percentage point, just below that trend line. But would you mind selling off sometime? I'd appreciate it. The small caps, the IWM, is up more than that. It's up almost 0.5%. And I'll just say it again. Bulls, you got to push it above this yellow line. Bears, you got to break this yellow line. The bears have a tougher job to do, as always. But either of those breaks would be a fairly big deal. Over in the cubes, thanks to Nvidia, they're actually down about 1.36%. It hasn't changed anything. We are still drifting in the open seas here, meandering, going really nowhere meaningful. It hasn't had really a net change in months at this point. I'm certain that there was the hope that, once Nvidia, last night after Nvidia came out, it's like, now we're going to get this party started again. This will be what we need to relight the tech fire. And just blast over to Dow 60,000 that Pim Bondi can talk about it. No, it didn't happen. It's just like they got the fire started and then started raining. So here we are again, month after month after month of zilch. 1.34% negative on that. A couple of quick overseas ones. South Korea keeps blasting higher. New lifetime high today on an intraday basis. It's still up a little bit, but this thing is just a bottle rocket. And then with Japan, EWJ, I've made mention of that gap. We're very close to the gap right now. And so it's either a great place to short or it's time for Japan to rock and roll again. This gap is the test, going to push past it. It hasn't done so yet. If South Korea is any guide, then maybe it'll just follow suit. Interestingly, as strong as a lot of Asian markets been, China, not so much. Here's FXI, down Today alone, almost 3%. You can see here that, of course, we had our Liberation Day plunge. It bottomed here. And then from April 9th, I guess it was, all the way up to here in October, China was very, very strong. And in retrospect, we can see now that was it. In fact, since, let's call it, July, it's just been doing. This line here, every time it tries to escape, gets yanked back down. And today it's a week we actually dropped to the lowest level seen since August. So we do have a failure there for FXI. EEM, the emerging markets, they are down about 1%. I guess China's not helping in that respect, in spite of the big gains we're seeing elsewhere. So still broadly, as you can see, quite bullish, quite strong, but we are getting some slippage there, probably partly due to this slightly surprising Nvidia news. Speaking of, let's focus on Nvidia for a bit. There is the Nvidia chart, and here again, we are at the same price now that we were in July. So all those tens of billions of dollars of sales, billions and billions of profit, many tens of billions of dollars pledged in future sales, doesn't mean anything. I mean, all that's kind of built into the recipe at this point. So here we have undone the past week or so of gains, and this is definitely not what anybody was expecting, but it hasn't really fundamentally changed anything, just like with the cubes. Until and unless it busts below this range, we're just, it's the meat grinder. On an intraday basis, let's just go to like a weekly here, you can see, so we're just kind of dawdling along. The earnings came out and went ripping higher and just kind of hung out there all night long. And then for whatever reason, the selling began, and it was just like straight down. Actually, as just a silly experiment yesterday on my portfolio, let's say I was like devil may care, I'm gonna be bearish on Nvidia, and I'm gonna pretend to buy some $200 puts on Nvidia that expire Friday, which I think is the 27th. No surprise, it's doubled overnight. And, it's like, I'm not mad at myself because I wouldn't have done it anyway. But, it just shows even as much volatility as Nvidia has, as much implied volatility and risk is built into the cooking broth there. Still, it was double in price. So it's like, oh, well, that would have been nice, but I still wouldn't have done it. And I imagine that this is, not any kind of bottom for this, because as people continue to consider, it's like the old saying, if something is supposed to rise and it falls, sell it. So I think as they contemplate just kind of how awful it is, that it's like, what exactly do we have to do? We blow all the numbers out of the water and we go down. And in fact, not only are we down, we are, it would take a 20% gain just to match the high from last July before all this good news. So, and if the day comes that Nvidia's like, we're starting to see a reduction in sales because the hyperscalers can't get funded anymore, well, God help you at that point. Nvidia could fall 80%, 80, absolutely. But as it is now, we've got 5, so there you go. Naturally, Durhay, SMH is down because Nvidia is the biggest component. We have a failed bullish breakout there. Nice. And SOXL, the leveraged ETF based on semiconductors, likewise is down double-digit percent. ARC, Kathy Wood's company, illustrates, I think, the vexing problem we're having of just tech. Sure, tech sells off here and there, and we get days like this in Nvidia and such, but it just can't really just sell hard. It's sticky. And that's what's going on here. This is a pretty nice pattern here. It should have just given way here, but instead it's just like pushing back into its pattern again. It's very hoofy. But this is a heavily traded, but it's a nice illustration of it. It's just not really breaking down overall. There are exceptions here and there, but it's just a sticky, sticky mess. Bitcoin is down about 1,300 on the futures. So real quick on this, I was short Bitcoin by way of being long BITI. I sold it here. I was delighted the next day not to own any of BITI because it blasted higher, but then I got back into it again yesterday, and bearish as I am on Bitcoin, I took profits again. I'm going to be a wimp about it. So once more, and I'd love to be wrong. I would love to be just on the screen here tomorrow, just screaming at myself for having no courage at all to stick with it. But I'm out of this based on no good charting reason. Because as with ARK, it just is not. It's not breaking the way I'd like to see it break, but it probably will at some point. But BITI, anyway, is something I didn't know existed a month ago, but I've been messing around with it here and there. But made a decent little overnight profit on that. How we doing on time? We got time. Some shorts still out there doing pretty good. Broadcom, AVGO, down almost 5%. This pattern is, give it a B plus A minus. We're just about below support on that one, so that's looking pretty good. AMD, which I re-shorted yesterday, as I mentioned on the show, that's down nicely. We're down. We fell yesterday, and we're falling again today. So that's slipping lower. The gap was way up here, which is why I refrained from shorting it. But yesterday, I gave it a shot. It's working out, so my stop is much, much tighter on that now. One to watch this afternoon is Dell. They announced after today's close. My position here is a more modest one. I had June puts on this. I decided to play a little safer. I just have a medium-sized short position. If it plunges, I will definitely be kicking myself on that one. But it's a pretty good pattern, but it hasn't broken down yet. And there's been enough surprises this week. SGHC, AXON, and another one that escapes me, that I've decided to get a little less cute with this stuff. But Dell's worth watching because it is, especially if it breaks below this support zone, very nice pattern there. I'm just emphasizing it hasn't completed the pattern yet. It could be complete an hour from now if it falls hard. MNRO, Monroe, is down again, about 1 1/3%. Micron, MU, is also down in sympathy. Hasn't quite broken its symmetric triangle yet, but we are moving away from that lifetime high, and we've got a chance to break that triangle. WDC, Western Digital, is sort of meandering, but it's meandering the right way. We're down about 4 1/4% on that. This one is really shaping up finely. CRDO, Credo Technology, really nice rounded top on that. And I've got puts on that one. So far so good. Move in the right direction. I really like how it's shaping up. And one that I usually didn't touch because it was kind of dull, but it's kind of interesting now. Alphabet, GOOGL. We've got a perspective break on this one if it can get below support there. But this pattern's been in formation for a while. It's not spectacular, but it's so heavily traded and such an important juggernaut in the tech world that we're going to give that a go. So just to wrap real quick here, just a goodbye to the ES. We're off about 45 points on this. Absolutely inscrutable. Just a big, fat, grinding mess. And then the NQ is pretty much the same, although at least the support and resistance zones, the range we're in is a little more clear, but we are still kind of smack dab in the middle of them both. So anyway, lots of good earnings coming out. Marvell, Dell, some other odds and ends, but it's not going to be any Nvidia evening, but it'll still be worth watching. So I'll see you tomorrow, and hope you're doing all right. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back, and boy, it's been a little bit of a wild market today. We've got E-mini S&P 500 futures. They're down 40. We were down as much as 80 or 90 at one point today. We got to 68.70, so about 50 handles lower from here. You've got the NASDAQ down 335, and the Russell and the Dow actually bucking the trend. The Dow up 18 right now, the Russell up 11. The Russell, the strongest of the group, up almost 0.5% here. You've got oil having some two-sided action today as well. It's up a nickel, basically unchanged on the session, but we've had about a $3 intraday range here, including the overnight session. Volatility futures got up to 2065. They're now down to 1990 here. A great year, the year I was born, a beautiful year. So we've had a little bit of a vol crush throughout the session. Bonds up 13. We're just below the 18, the 118 handle on the bonds. Gold and silver had some two-sided action as well. Gold down 15, silver down $2.50. Silver was down $5 and change at one point today at 85.50. And then you've got Bitcoin bouncing a little bit from the lows, $1,600 to the downside on the futures. Spot down 900, but having a nice little bounce back here. Kind of hovering by that 70 handle. Maybe we bust out from there, but wild day today. I mean, you got some big moves in some of the big name Mag 7 tech stocks. Obviously, Nvidia, the story of the session here, down about $10 here after earnings. It did get into the 200-ish handle at one point in the overnight session. Meta, on the other hand, up a handful here. Apple and Google have been pretty strong. You got a little bit of a bounce in some of the software names. ServiceNow was a position I took off today. Got a little bit of a bounce. CrowdStrike is another one, $16 to the upside. So very much the dispersion trade continuing today, as the peeps would say, our very own Chris Vecchio, outlining that RSP, the equal weighted S&P 500 index, new highs today.
That's how you get it done. Equal weighting. None of this super weight and the tech stocks that are getting bludgeoned.
Yeah, but the super weight worked for 10 years, so no big deal today that you get a little bit of a pullback there.
Yeah, it's been wild. We have seen quite the range, but this is Groundhog's Day, getting the market to reverse this thing. Only down 38 now. We'll see what tomorrow brings, but yeah, Nvidia had earnings yesterday. Big sell-off there. Opened flat. Looked like it would be higher after the close yesterday. And it's just one of those things where like it doesn't matter what numbers they post. The market is just going to do whatever they're going to do with it. And
yeah, I tend to think, in a stock like Nvidia, where I'm sure a lot of the speculation is to the upside into earnings, a little bit higher volatility into earnings, you get kind of a nothing move, and the vol of those options comes out. And so, from a market making perspective, if you're short stock against, or if you're long stock against long calls on the customer side, you have to start to unwind that, and you get a little bit of a pullback here. I tend to think that's kind of playing into a little bit of this move. I mean, 185 has kind of been the very middle of the range of where Nvidia has traded for, the past 8 months, 6 to 8 months. So I don't take a ton out of it. I actually think the buy the dip here that has happened in the last 3 hours or so, plus the vol contraction below 20 on vol futures, and it'll be interesting to see where vol ends the end of the session here. It seems all system go for me.
For a reversal.
No, for upside.
Yeah, upside. Yeah.
Like, I think this looks good. You got RSP, like that doesn't, the dispersion is a good thing. That other stocks are moving higher while the Mag 7 is languishing.
In the AI worry of what's happening with AI.
Yeah, because when you get the AI, okay, all systems go with AI, then they catch up, and that's upside.
And that's how you get 7,700 year-end SPX. That's
your play?
Yeah.
10%. I did take one from your book today.
Ooh.
I put on a Super Bowl.
Oh yeah.
At the it actually ended up being a nice little entry point. But I put this on for a 20-cent debit. I sold the 6,600 65.75, so 25 points wide, and then I went and bought the 7,075 and sold the 7,090. So it's a 15-point wide call spread. I did that at 20 cents. It's already up about $1.50. I'm probably gonna hold that to tomorrow, see what happens. I think we get a little bit of a bounce tomorrow.
Yeah. We placed some SPX trades today. I actually got into a short-term kind of weird calendar spread.
Oh.
So I did the 69.50 long March 3rd, short March 2nd. So just a 1 day difference between these options.
Into the weekend.
Into the weekend, but into next week also. So you have, it's a Tuesday, Wednesday spread, which is interesting. And
no, that's Monday.
Sorry, Monday, Tuesday.
Monday, Tuesday. Yeah, so you got the short expiring Monday, and then you got the long in Tuesday.
But yeah, the spread was only $500. It's up 50 cents right now into this rally. But if we get a rally tomorrow, it'll be a nice trade. But yeah, the Super Bowl has worked out well. Jamal actually got us into one in Microsoft out in May.
Ooh,
so a long-term one. And that one, the nice thing about this one is it was a 380, 370 put spread to finance a 425, 440 call spread. So
so wider call spread.
Wider call spread, still routed for a credit, 70 cent credit, and it's up $200 right now, $250 right now into this reversal. But this thing can really come into play if we get up to 425, 430, which is really not that much to ask at all. But yeah, to your point, seeing Microsoft catch a bid here, seeing some other tech stocks catch a bid, Vol's getting crushed. The VIX is getting decimated. The VIX was up 10% earlier today. Yeah. It's only up 3% now, which is nothing. Like 50 cents is, it doesn't matter what the percentage is.
1850 is the VIX right now.
Yeah.
It's completely average.
I keep saying, like, as long as we see this continue, I see no reason not to buy the dip in a responsible way if that's what you want to do. because the vol futures are not reflecting anything crazy, and every sell-off that we've seen has been bid up over the next couple of days. And maybe that's just how this market's going to behave for the next while.
Yeah, it's been an amazing scalping environment.
Yeah,
this year. I mean, buying NASDAQ at the lower end, selling Dow and Russell today had two-sided action. I mean, you've had on the NASDAQ, the NASDAQ has been the weakest all day today, but the Dow itself has had about a 600-point intraday range, and you're right in the middle of it. So you've had, like the tough scalping days are the ones where you move in one direction the whole time.
Yeah.
And there's no, this has been, and it's been like this all year, where you've had opportunities, and I've been talking about the 69.50, 68.50 range that we've been in, which we happen to basically trade both of those today. 68.70 on the E-minis, 69.70 the high. It's been a scalper's paradise here. If you've been selling, 69.50 to 7,000, buying, 68.50 to 6,800, that's been the range for 2 months, 2 full months.
Yeah, more.
Yeah,
so literally since December, we've been in the 6,800 7,000 range, basically
the
whole time. But yeah, speaking of range bound, I made an adjustment to that MES year-long position. I took the sell-off this morning as an opportunity to roll out to the M contract. So I went to the April 30th, end of month, 63-day, longer term. That's the highest I would go in terms of days to expiration. But just made that adjustment into the sell-off today with the little vol pop. And I moved the strikes 50 points higher, since the M contract is 50 points higher than the H contract. So you have to account for that.
Yeah.
But yeah, it's been a nice trade so far. It's up $750 on one contract in MES. And extrapolated out, I've collected 300 points of premium beyond the strikes. So my break evens are down at 6,400 and 7,550 to the upside. So we're creating a nice wide range. If you did this in SPX, you'd be up 14 grand right now on one contract, and that's 7 grand in the E-mini futures as well. So it's been a nice trade, and it's really just been benefiting from this chop that we've had, because I haven't done it. I've made 3 adjustments in here for the whole year, and it's end of April. Or no, it's not. It's end of February. Soon it'll be the end of April.
Yeah, things are moving quickly. I actually just figured out how to put lines on my chart. So now,
perfect.
Now look, I got my channel here.
Yeah.
68 to 7. That's my spot. I mean, that's
crazy.
It's about as good as it gets. It's been the whole time.
Yeah.
A couple days outside that.
Indeed.
Unbelievable.
But yeah, other trades, Netflix got a nice win out of that. Yeah.
Finally catching a bid in Netflix.
Yeah. A lot of those stocks that were left for dead, Netflix, McDonald's, Costco, Target, they're all ripping higher. But yeah, Netflix is a classic story of household name at multi-year lows. Let's buy the dip in a defined risk way. That was a 10-point wide diagonal spread, took $200 out of that. And Nvidia, I actually added another calendar spread into the sell-off.
Yeah.
200 strike, long April, short March.
Ooh.
That's only $300. So I liked how cheap it was to have so much delta.
Vol has definitely come in there, and a lot of the call skew has been taken out, which makes that a little cheaper too.
Yeah. So yeah, we'll see what Nvidia does, but if we get a reversal up to 195, we'll be golden. I also adjusted the diagonal spread. I had a 20-point wide diagonal spread, the 190, 210, and I rolled the 210 call down to the 200 in March, and I picked up another $2.10. So just making little adjustments, but plenty of time for this to reverse. And I think it will.
I did also get some long delta in Nvidia today. I did diagonal spreads April, March. I also took off a ton of positions today. A lot of stuff really came in. I've been selling strangles in the Qs and SPY over the last couple sessions. I mean, the volatility contraction today was beautiful. And if you look at volatility over the last, 2 weeks or so, you've been getting paid to put on some short premium, and that has come in pretty nicely today. I had puts in Microsoft that I've taken out off AVGO, even though it's down today. A lot of the earnings trades, if you did anything like kind of neutral-ish, so Snowflake, Nvidia, I did upside crab trades. So I was actually long delta into those moves. But both those stocks basically opened, unchanged to small up. Nvidia, I guess, was basically unchanged, but Snowflake, had a small up move in the morning. Vol just getting killed in the front, and that long option in the back kind of holding its value. So they've worked out nicely.
Yeah, it's been a nice range-bound day, especially if you're trading the sector indices for sure.
Yes. Some of the earnings coming up after the close today, you have CoreWeave, you have Rocket Labs. I put some long delta on in Rocket Labs. Kai came with a nice, interesting diagonal spread trade idea from trades from the research team today. So I put that one on. I've got Dell. What did I do in Dell? I did something. I think I did a diagonal spread. Yes. April, March call diagonal spread in Dell. You also have Zscaler, which is another one of the cybersecurity stocks that has gotten killed over the last month or so. You got Mara in there. We took some of that off yesterday with TP via his cherry picks from last week.
Lovely. Yes. Yeah, lots of more earnings after the close today. Intuit, XYZ, Block.
Ooh, I took off my puts there today.
XYZ, formerly known as Block, formerly known as Square. Autodesk. So yeah, there's still some things to announce, but interestingly enough, when you look at SPX 1 day's expected move, you're looking at 40 points. There is still PPI coming out tomorrow, so maybe that does something in the market.
I see some people calling that out.
Yeah. 7:30 Central, so an hour before the market opens, we'll get some numbers there. And maybe that sparks something, but I think it's interesting to see this market catch a bid here. Dow and the Russell look like they might close up on the day, which really just emphasizes the move to the downside.
The Russell's actually at the high of the session here, about a point off the highs.
Yeah. I think it just emphasizes the concentration of these tech stocks, and when they go down big, like they can just drag down the whole sector.
Yeah. The Russell's had about a 40-point intraday range here from high to low, so it's still a big range. The context is this has been a trader's paradise here for sure.
Yeah.
My Taiwanese sources are telling me that Nvidia has traded almost as many options as the Qs today. So huge volume for Nvidia on the session.
Yeah, even in the shares, 320 million shares traded.
It's a big day. It's like a meme stock.
That's twice. So Nvidia has twice the amount of shares traded compared to SPY and Qs combined.
Yeah, SPY 62 million, QQQ 88 million.
Yeah,
that's an incredible.
That's something more than twice.
Yeah.
If you have trade ideas though for tomorrow's Freaky Friday, Party Shirt Friday.
I haven't brought the Party Shirt Friday to the morning session.
Yeah.
Maybe I'll
do that. It's been too cold. That's a problem.
That's true.
Now I'm in my casual party shirt, like sweater on Fridays, You can still party in a sweater.
Maybe I'll bring the party shirt tomorrow.
There you go.
We'll see. Depends on where the market opens tomorrow morning. If we're higher, I'll bring the party shirt.
Yeah. That's what the people want.
Yeah.
A little bit higher.
We'll get ready for 7,000.
But yeah, tastylive.com/fastmarket.
Yes.
To make your trade ideas tomorrow. You can do that, and the crew will review them, and it's always good.
We've gotten some bangers recently. Yeah. We had CRM. I mean, CRM was an earnings trade that we closed today. XYZ, we had puts there. We've done a bunch of Intel trades. We've had a ton. So submit your trade ideas for us. Nothing's off limits, but we prefer more liquid underlying. So, give us something that's tradable here. But we'll do anything You can give us a directional assumption as well.
Yeah.
But it's a good thing to do for your friends, which is also something that we have.
You see
a little referral, refer a friend.
Yeah.
$100 for you and your friend.
Yeah. Friend brings in $2K, you both get $100. If you scan that QR code, you can find all the information there, including where to get your referral code, et cetera, et cetera. So yeah, tomorrow's expected move, 40 points to the upside or downside. You're saying inside up or outside up?
For what? For the market tomorrow?
Yeah.
Going into a weekend, weekends have been a little, and you still have I was telling Vecchio this, I was like, you still got this like kind of Iran situation hanging over your head.
Mm-hmm.
I don't anticipate that being, Trump hasn't really done much good on Fridays. He usually waits till the weekend to kind of
spice it up.
Yeah, to spice it up. So I feel like inside up tomorrow is probably the call, but I think once that gets resolved, I don't know what else we got to be fearful of.
I mean, the vol futures are telling us that there's not much as of right now. That can change, of course, but I mean, how many times have we seen the market try to sell off and then it catches a bid midday?
To your point, you've got vol futures in a pretty decent contango here. VVIX slightly up on the session, but is way lower from where we were in the middle of last week. So it tells you volatility is relatively low too. So
yeah, VIX had a decent intraday range from like 17.5 to 21, we'll call it almost, but sitting well below the middle of that range, closer to 18.5 now. And yeah, it is up technically 4%, but that's on an 18 print. Like it's not really anything.
Yeah. I will say anecdotally, I did get a text message from a friend of mine who is in the tech space, works in the tech space, and is, dabbles in kind of, he doesn't really trade options, but he buys shares and he's, kind of plugged in. And I quote this from this morning: "The stock market is so dumb." And so I think the pain has been had, is what I was trying to get at.
Was it because of Nvidia? Because Nvidia went down even though they broke records?
Yeah, but E-minis were, we were up like 20 or 25 in the overnight session. And then, we promptly sold off like 80 handles in the morning. Here, let's go back. I'll pull this up to see exactly. So it was the text came in 10:04. Okay, so let's take a look here. So
those are the best.
Yeah, so here we go. So here's our open. 8:30 is the open. You go from 69.60 to 68.80. It was basically the lows of the session. You have a little bit of a bounce back here. 10:04 is somewhere around here, so about 6,900. So you have about a 2% sell-off there from the high to low. And that was when I got the text, the stock market's so dumb.
Yeah.
Classic. So it tells you a little bit. There's, you might have been loading up on some Nvidia and whatnot.
Sure.
And Nvidia, let's see what Nvidia was doing there.
That's when Nvidia started selling off.
Yeah,
for sure.
I feel like that was,
and it really hasn't stopped.
So he was probably looking at his account there, 197 up a couple dollars, zoom.
Yeah.
And then you lose about, you lose a couple percent there, 5-6%.
Yeah.
And then it kind of stabilizes there right around 10. So goes to show you, maybe it's the public has had some pain.
Yeah. But longer term, if you ask yourself, do I think Nvidia is going to go back to 200? Like this could be a nice entry point if that's what you're trying to get into.
Yeah. We've had, this has been 185 has been the exact middle of the range.
Yeah.
So
literally.
If
you just draw a line right through that with your
I can't do any more lines. I can't do any more lines. I'm not that guy. Pal.
It's fine. But yeah, right in the middle of the trading range since October, really. But yeah, eventually this whole AI thing will likely resolve itself. But at the end of the day, people are going to continue to pour money into this market. So where is it going to go? That's the question.
Pour more money into this.
Yeah.
Famous last words.
Yeah.
What are you doing in SMR? It also has earnings after the close there. Are you still in that? A dog with fleas?
I am not. No.
I think
the last thing I did in SMR was a call ratio spread 30-35 that expired in January.
There we go. I'll participate. I see some people calling it out in the chat, so I'm going to go with a covered call here. I sold the 14 call against it. So bought stock, sold the 14 call, $12.92. You got $100 of upside into the close or into tomorrow.
Sorry, I am still in SMR. I have 100 shares.
Okay, there you go.
A cool 40.
Yeah, that's not a good one.
Yeah, that's not good.
Not a good one.
Sorry, I didn't see that. So yes, I am still in SMR. They have earnings after the close. I'm just going to do nothing. There's nothing to do here against my shares that I need to, unless I wanted to buy more shares.
Do you have any interest in CoreWeave?
CoreWeave. $11 expected move on a $97 price point. That's pretty nice.
Yeah.
It's pretty nice. We looked at this earlier, and the markets aren't great in here.
They aren't. I agree with that.
But I think you can get away with it if you're just doing like a defined risk near term type thing.
I did a Johnny Little put ratio at 40 cents.
Yeah.
Bought in April. I bought the 75 and sold 2 of the 65s for 40 cents. So it gives you a break even at 55.
I like it.
So we're going to play it. And that's in April. So it's not going to, into tomorrow, it's not going to move all that much unless stock goes higher.
Yeah. CoreWeave, plenty of implied volatility though. When you look at the 1 day, over a 10% implied move in the stock price in 1 day.
Mm-hmm.
Doesn't get much juicier than that from premium standpoint. But yeah, CoreWeave, that'll be interesting. SMR, God.
It's a tough one.
Yeah, the only thing to do there is just buy more shares, but I'm not sure I want to do that.
Well, I just painted the low, so sorry.
How about your little Tasty FX positions? You got anything spicy in there?
Horrific.
Are you long the US dollar as I am?
Yes.
Probably.
Still, unfortunately.
Yeah.
Yeah.
But
I don't have
hold
good stuff there.
Every time I log in, my funds increase by $5 or $10 from my positive yield. So I'm just picking up pennies. But eventually, when the US dollar recovers, I'm going to be looking pretty in there.
Yeah, my newest addition was an Aussie short the Aussie against the Japanese yen, which has gone just straight up. It's just a straight up chart. I'm already out $10. It's not the currency is not my call.
It's why you just got to trade small and just forget about it until it works. That's a foolproof strategy unless you get long the US dollar.
They get big. Some of them get big.
Yeah.
Are you doing anything in oil? So oil volatility. Oil has had some whippy action today, but oil volatility. If you pull up OVX CGI, that's how you pull up it in the platform. CBOE volatility index for oil futures near the highs. Do you have a position on? I'm a little short delta here. I guess I'm kind of flat delta because I did a Jade Lizard today. I'm selling upside call spreads.
Yeah, so I have an Iron Condor in there out in the 49-day April 16th cycle. So into the rally, when we saw this big rally in crude, we also saw, like you're pointing out, we saw crude oil's implied volatility explode.
Yep.
You also saw some call skew get infused into here in a pretty big way. So I went out to the 49-day cycle. I sold the 60-59 put spread. And then I sold the 79-80 call spread. So because of this premium that's all the way out there, you can see that the 60 strike is trading for $2.20. The 79 strike is trading for $2. So huge upside call premium, and it just gives you a ton of space to work with in this range. So I sold that Iron Condor for $500 and $440, and it's trading around that same level.
And that is the bell. A very uneventful close. I agree with my guy Gapper in the YouTube chat here. A very uneventful close here. A nice two-sided action throughout the day. Volatility futures 1975, actually right at the or near the lower end of where they've been trading today. So I'm feeling good. I'm feeling good. You feeling good?
I feel great.
Good. Well, if you're feeling good over there, stay tuned for the next segment, Overtime with Chris and Ilya, because that'll make you feel even better. Those two are the best. So we're going to take a quick little 90-second break. We'll see you tomorrow morning. Peace.
Peace.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. Guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The market got the memo that Nvidia beat, right? It's Thursday, February 26, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down the trading session. What a session it was. The average stock in the market was up, but thanks to the weighting of the market stocks, the indexes are broadly down. NASDAQ off 1.2% here. The S&P off just a little more than 0.5%. The tech-heavy stuff suffers on this Thursday post-Nvidia earnings, where we see semiconductors are leading the way lower. So much for guidance mattering. Guess nothing matters, Ilya. It's a market where
I was just going to say, we thought, right? If only they guide big. They guided $78 billion for next quarter. Let's just stop for a second. That's $10 billion more than this quarter. 10 from quarter to quarter.
$2.
The market had 72 billion. So they guided better. Yeah, nobody cares.
Apparently not, at least for the NASDAQ temporarily. Although, is this just the market bleeding out all those calls that are spiraling worthless now, thanks to the inside move initially? We'll answer that question with tomorrow's price action. But it's a day, Ilya, where distribution and dispersion are very much in focus in stocks. You can see with the NASDAQ decline, you have a Russell 2000 that is leading way higher by about 0.5%. The equal weighted S&P 500 is at an all-time closing high, not at an all-time high just yet.
Yep.
Bonds are up somewhat, and we see here at the long end of the curve, maybe ZB is trying to break out through former highs. We had gold trade lower a little bit over the course of the session, although still holding that 5,100 level. Crude oil has been in the blender thanks to some of the headlines out around Iran and negotiations in Oman. Ilya, where do we find ourselves after Nvidia? Do we put on rose-tinted glasses and look at the fact that the RSP is at an all-time high?
No,
the Russell's your top performer today?
No, we do not.
Why can't I? Please tell me.
I mean, look, we said this in the green room when we were about to go on. I am just as ready as anybody and just as attentively watching something like an IGV. Obviously, software has been a bloodbath. Okay, let's see. We're hitting some very important levels. Maybe this is a bounce. I am just as opportunistic. Be clear, I am not married to being bearish. I am trying to get married to making money. So what I'm doing over here is not ideological. This looks like a opportunity to buy something in the making just as much to me as anybody else, I would think, looking at this chart with a ticker agnostic kind of lens. But you can't ignore what's going on here. You can't ignore that most market cap lives in these magnificent 7 names. And if they're not performing, the overall market is not going to go. There is not enough distribution to have. Think about how much money has gone into an extrapolated AI utopian future in the magnificent 7 names and think, is there enough out there in the rest of the stock market even to just absorb this volume? No. On the basis of what? Where is the next boom in size that we are going to send all of this money rotating into such that the stock market as a whole doesn't go down? And that's why when you look at the actual indexes today, they're down. And they're down because tech is down. And they will keep going down as tech keeps going down. And you can have all the rotation in the world, but it's not enough until there is a meaningful correction in that tech narrative, apparently. And that's not my opinion. That's what Nvidia is showing us today.
Among the Mag 7 names, all but Apple are down year to date so far. Apple is here. It's off 0.5% today, but it's still treading water in the positive for 2026. Nvidia gave up that crown with today's price action where it fell about 5.5%. Tried to break out ahead of earnings, rejected thus far today, Ilya. And the Mag 7 ETF, just as a point of reference right now, yesterday's move to try to get back to its 1-month moving average, it has thus far failed with today's action. We'll see what the week close brings, but failure to get back into the channel would indicate that former supports become a little bit more resistance, and that's going to be problematic for a NASDAQ, which I'm looking at this right now, and it feels like it's sitting on the edge. If we were to just remove everything else from this chart, except for the fact that we have a swing low here back on January 21st, we haven't been
an arranged top, right where it's testing right now. We're kind of wedged in between the two.
Right. And so we're not bulls and having a great time the past few days. It's been very difficult to be directional. Which
it's been real choppy.
It's been a blender. Like my long MES position takes it on the chin, but then again, the short iron condor trade works out a little bit better over the course of today's session because we get closer to the midpoint of the recent multi-month trading range. So it's a good with a bad kind of session. I still don't feel like there's really any need to change positioning right now coming out of this whatsoever, because the price action hasn't suggested that the consolidations are finished.
I mean, I would think that there's nothing here that tells me right now that I need to change anything. And while I'm not taking sideways bets here, what I'm essentially sitting in is very small, risk-controlled, risk-defined put verticals that I've bought in both the Qs and SPY to keep sizing small. I'm using ETFs rather than futures, and sitting basically on both of those positions near October's highs. And the idea is that that's a high that's going to hold or it won't. And the risk reward since October has been to be short against those highs because we haven't cleared them. So as long as those highs hold, the better risk reward is waiting for something to keel over. And by the way, we do have a series of lower highs. We have it in the S&P. We have it more so in the NASDAQ. The problem is we're not really setting lower lows. We're grinding down the bottom of this range. It could be, as you've pointed out before, and I've agreed with, a correction in time rather than in price. We could eventually blow out, and that could go higher. Oh, hello. And
Jack Dorsey's company.
What's this about?
Jack Dorsey's company, Block, announcing that it will be cutting its workforce in half here. After hours, it's up 20% on the news, closed at 54.60, now up to 64.75.
Dave Chappelle's voice rings in my head and goes, gold is up 10 points.
Outside of the corporate banter today and Nvidia, really there's not much more going on, although I keep pointing back to the distribution, Ilya, and I know you and I don't see eye to eye on it. And fairness, rare is a market rally led by the Russell and the equal weighted S&P 500, but more sectors than not closed positive today. We tracked 25 here on Overtime and Futures Power Hour. 15 of the 25 were in the green. So let's square some circles. Yes, sure. Semiconductors were down. Telecom was down. Tech was down. That's all really bad from the growth perspective. But also down was utilities, was healthcare, consumer staples, which are certainly more defensive names. Certainly. On the way up, you have among the leaders retail, home builders, regional banking. And those are names that you like to see on the way up. So are we going to get more of this divergence here? I mean, is the Russell poised right now to continue its outperformance as the NASDAQ deals with this margin compression, or rather valuation compression trade, thanks to the prolonged elevation of Fed rates and questions over the AI apocalypse?
I think this is the real key here. We're looking at basically the markets holding in a kind of roundabout uncertainty basically across every asset. Bonds are kind of range bound. They're near the top of the range, but they're in consolidation mode. Stocks have been in consolidation mode for a long time, especially when you look at the tech heavy indexes, but now also the Russell here, as you have on the screen, going back to late January, not really going anywhere. And anywhere you look, I mean, crude oil has had a nice rally, but now it's stuck in a range. Gold has had a nice rebound after what looked like a kind of speculative capitulation and is now again in digestion mode. It's almost like everything is waiting for the next shoe to drop. And what's interesting here is that there isn't much in the way of data, and won't be much in the way of data for a while. I mean, are we going to get an NFP report at the end of next week? Maybe that
I have no idea.
Does something.
Are we? I mean, the government shutdown has already been used as we had a shutdown start a few weeks ago. They delayed the non-farm payrolls report.
Yeah.
The government shutdown that caused that delay hasn't ended yet.
No, it has not. So what in the world are we going to hang our hat on here? I mean, obviously, I am looking at the PPI numbers that are coming out. They're going to have a little bit more importance this time because, in part, they're going to show us how much margin compression has continued to happen for wholesalers, because ostensibly, after the Supreme Court's AIPA decision, that's all money that's due back. And so those are lawsuits that are going to happen. There's already almost 1,000 lawsuits linked to the tariffs since the Supreme Court took up the question in early November. So we're looking at a situation that's fraught with uncertainty. For me, there is, again, back to the same relief valve kind of dynamic here. All is well as long as there's rate cuts, because nobody has any sense of how this situation will evolve. You know, on top of the tech side seeing distribution, now we're all collectively concerned about private credit. First, it was just Saba Capital. Overnight, it became UBS that was out there warning that private credit is a mess and a half. So we're looking at a situation here where the markets have so much to hold on two. The Iran US situation, the Russia Ukraine situation, the private credit situation, the tech situation, this and that and the other. And against that backdrop, they don't know which one of the plates they're going to accidentally drop and which ones they can keep spinning. That's why they want the rate cuts. They want some kind of a safety net, at least by way of cheap money, where if they get something wrong, they can borrow back and go again. So it's the PPI numbers I'm looking at here, and then whatever happens as far as data next week, because we're back to square one here. Markets want 2 cuts. Fed is only sounding more hawkish, not less. At some point, something's got to give.
You mentioned private credit, and there's not a ton of private credit ETFs out there in the space, and most of them are exceptionally liquid.
Yeah, you guys are looking at individual names like Apollo or Blackstone or KKR or something like this.
For the sake of tracking the conversation, we can look at the ETFs though, right? So Wisdom Tree, private credit and alts ETF, sitting below the April 2025 lows.
Yeah.
You could look at a thing like VPC, which is the Virtus private credit ETF. That's well below the lows of last April. Private credit's in a really tough spot right now.
There's also some knock-on places. I have a little bit of a put on in KIE. That's the insurance ETF. And I'm just looking at it trying to grind down and seeming to make lower lows. I've got a little bit of a put that I bought. It's very cheap, vol a few days ago at 55. The idea being that if we break the bottom of this range right here, that you want to be short. And so this is kind of a flyer.
Hayes, it's an industry backstopped by the federal government, right?
It's also an industry that owns a ton of private credit. So if private credit blows up, these guys take it on the chin.
That is fair. That is interesting. 31.2 IVR market is seemingly right now. I mean, it depends where you look. Like PRIV, which is the State Street Spider private credit ETF, is sitting near the high. So selection matters obviously a lot. Ilya, I'm not really concerned about the private credit situation just yet, although I think the news flow this week certainly warrants a greater look at it right now.
Yeah, I mean, it's been selling
you're
off
seeing from people like
for a
Jamie
while.
Dimon.
The story might be a little stale unless something new happens.
Well, I think we should talk about Nvidia here today because there is one more thing to cover in terms of today's price action. Our inimitable volume expert here, Frank, on the desk, he said to me today he doesn't know if he's ever seen an equity option trade more than SPX and the triple Qs. And Nvidia today traded almost as many options as the triple Qs. To that point, you can go to Zero Hedge right now. You'll see an article there that's on the front page of their website about the Nvidia retail flows. Today is the largest day, it looks like, for net buys in Nvidia by the retail crowd in history. I'm going to try to dig up to see if that's really the case here. So it feels like then this is a bit of an institutional driven move to the downside right now. Retail dip buyers are out in full force. The Nvidia 190 and 195 calls for tomorrow, for what it's worth, have traded over 10 times their open interest. So lots and lots of short-term opinions being adjusted as a result of those earnings, Ilya.
Mm-hmm.
That's one of the reasons why, when we think about that, right, the volumes are 10 times on the open interest. This may just be a pullback because of disappointment over earnings, like the stock not going to 200, 205. And so people are selling their calls and you're seeing a lot of dealer hedging activity come up. I'm not convinced, given the retail flows. By the way, retail, they nailed the bottom last year in April. I'm not convinced that retail is wrong.
Retail is not wrong until it's wrong. I mean, this is how bubbly markets blow up. When, who is retail, right? What is the constant anecdote
People like Bill
tell
Ackman.
ourselves, right? When the cab driver is giving you stock tips, you're near a top, right? That's the anecdote every Wall Street person has grown up with. So, and you and I have observed retail sentiment for 20 years. What do we know about retail sentiment? Retail sentiment is right at the turning points. It's wrong the rest of the time.
Would we characterize it that way? I mean, the problem that retail has, typically speaking, is it's poor risk management.
That's right.
Cognitive biases were because of loss aversion.
That's right.
Newer traders are ambivalent about losing money, so they'll let their losers run longer than their winners. But directionally, if we were to just break it down into a binary, did the retail trader pick the correct direction?
Most of the time, yes.
Well, more often than not. So
more often than not. I think the studies that we'd done before they're right about 60% of the time. The problem is only about 40% of them make money. Because let their losses as you correctly point out, the problem is risk management. But of course, from there is where you get these kinds of things. Number one, they chase. And number two, they don't cut losers.
They don't cut losers. Yeah, right. From the data
you could put this in the column of chasing.
But put that just for the losers conversation. The math works out that if you're taking losses twice the size of your winner, that means you need to have a 67% hit rate in order to break even. You need to be right 2 out of every 3 times if each unit of gain is worth 1 and the loss is worth 2, just to break even. And so, but even that, right? But so that's why I say it's a risk management problem, not a directional problem.
No, I agree with you.
Actually,
I agree with you.
If you're right 60% of the time, first off, that's a higher hit rate than I have personally. It's just that
mine too.
I cut my losers and I let my winners run, and I just sit on my hands.
I cut my losers viciously at the first sign.
Well, can we bring up gold as a potential winner that's worth sitting on here? Because I would encourage people, Google the phrase bullish symmetrical triangle and tell me that's not the chart that you would see on your screen.
I mean, I'm wrong. I'm with you.
This looks great. Gold looks great all of a sudden. I know it's back a little bit today. I know volatility's in a little bit, but the breakout above 5,100 ceiling throughout February, and now in the back half of the month, we break through it and treating it as support. Feels like we're just waiting right now for another swing to the upside.
Yeah. Yeah. I mean, I would agree.
Is it PPI tomorrow?
Is that our catalyst? I added into the position. This is not a narrative that's going away.
Do we think the ship is stabilized after late January, early February antics? Do you feel better about gold, silver, the metals complex, platinum broadly? I know that I personally haven't traded platinum throughout this whole
I haven't touched platinum or silver in a while.
But these are markets that are seemingly trying to turn the corner. You can see platinum here running into a ceiling near 2330, 2350. A little bit more progress. Why wouldn't these be out of the woods after maybe paper traders rather than physical owners distorted the market in recent months?
I mean, I like what's going on in gold because gold as the sort of centerpiece of a deglobalization narrative makes sense to me. I think it's worthwhile to remember that the rally in silver was a kind of Johnny-come-lately rally. Gold had already been going by then. You can say for a while, too. And you can say the same thing for a lot of the others. And so when you look at that and you go, okay, well, was silver up not because silver was in earnest participating, but because gold had become too expensive and the narrative hadn't changed, so people went elsewhere and started to get similar exposure in other markets. And when those markets were less liquid, which of course they were, silver, platinum, palladium are not as liquid as gold is, then those markets shot up. But the narrative is in gold. The opportunity, as far as I'm concerned, is in gold. And gold is just a little bit over 50% back from those lows. There's stuff to do here now. There's been a discount. valuations have been reset. I've been long. I'm looking to stay long. I'm doing it in futures so that I can have some flexibility, because obviously overnight events can significantly impact things here, but I'm using the 1 ounce futures to keep things reasonable from a risk management perspective, because I'm not trying to take big losses. I am not in the market to say, oh, well, I'm going to expose myself to this giant swing for no reason. No. We're keeping things modest. We're trying to keep things flexible, and we're trying to navigate this environment carefully, because if nothing else, it's a very headline sensitive environment. I mean, in what world would the report like Citrini's be anything that anybody cares about at the Fed official level? Only when there is a sentiment extreme of some sort, or one is brewing. So you have to be careful here. But I think for gold, the story is constructive any which way you slice it. You just have to approach it carefully, because something might go bang in the night in Tehran and your longer term idea might be rattled a little bit.
Ilya, as we close out today's overtime session, there are a few more pieces of corporate news that may be of interest to people. We did have Dell earnings come out here first. Let's start there. Dell reporting after hours revenues up at $33.38 billion versus $31.7 expected. EPS was $3.89 versus $3.52 expected. Q1 guidance is higher, $34.7 to $35.7 versus $29.3 estimated. Q1 EPS at the midpoint, $2.55 versus an estimated $2.40. They're raising their dividend by 20%, and they're boosting their buyback by $10 billion. So share prices close at 121. They are up, getting into the 137 range here, Ilya. So up over 10% right now, 12% here after hours. We also had Intuit earnings as well, so we can't look past that. They have the software giant variety, and they're oscillating to the downside. They're saying that they're going to be doing more to integrate Anthropic into their platforms. Their revenues are up 17% year over year. Their EPS came in at $4.15. They likewise are boosting their dividend to $1.20 a share. So interesting sign of confidence from the company. And then lastly, Warner Brothers Discovery just came out and said that the offer that Paramount Skydance just put together is superior to that of Netflix. And there's a 4-day matching window coming up. So if you're trading WBD, or Netflix and P-Sky, just be aware that you do have a little bit more corporate risk through the end of the weekend and to early next week, because 4 days, Ilya, Friday, Saturday, Sunday, Monday, might be some M&A option activity at the start of the next few sessions, Friday and Monday. But with that, overtime is out of time for this Thursday and for this week. We'll be back after last call this coming Monday, 4 p.m. Eastern, 3 Central, just as we are every Monday through Thursday. So be sure to tune in. For Ilya Spivak, I've been Chris Vecchio. Good luck trading. Stick around, though. Ilya's sticking around. He's here with Macro Money up next on Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Well, it's nothing if not a little bit of seesaw into the end of the trading week after all kinds of dust gets kicked up by the State of the Union address and those earnings from Nvidia. I'm going to try to figure out what in the world is going on here and what we can expect next. This is Macro Money. I am Ilya Spivak, head of global macro here at Tasty Live. And we're going to jump right into the price action first and foremost. And ask if we're back to where we were, I dare say, before the beginning of this week, which is on Fed Watch. Are we just back there now? Because had all kinds of things happen at the end of last week. They set us up for an interesting one this week, and it looks like what we're seeing is churn and indecision. We're going to try to figure out what that leads to next. Looking at the dollar here first, it suffered the biggest decline against an average of its major counterparts yesterday, down 0.5%, which was the biggest drop in 2 weeks. And that was after the president, Donald Trump, said in his State of the Union address that we are going to bring back the tariff regime that was disrupted when the Supreme Court ruled against using IEEPA legislation to justify those tariffs, and to give the president the power to levy them without Congress. After all, it is Congress that's supposed to tax and tariff. But there's a variety of regulations out there that allow the president to do various things without Congress, sometimes temporarily, sometimes under strict circumstances. And the Supreme Court ruled that the more broad interpretation of IEEPA was not constitutional. And so most of the president's tariffs went by the wayside. He since used a different law to put them back on, but that's only for 150 days. He said in the State of the Union that he's going to bring all of it back using different statutes, and that will mean that he doesn't have to consult Congress to reconstruct. Although, of course, depending on which statute it is, it's a lot more work. You have to either show that in a particular industry, the foreign version of it is using some sort of abusive trading practices against U.S. counterparts. You might have to show that a country is unfairly hampering U.S. market access or some such thing. That, of course, requires investigations and proof, and it's much more difficult to get off the ground than interpret IEEPA in a fanciful way and then say, well, this gives me broad powers to do whatever I want, so that's what I'm going to do. We already, of course, have uncertainty around this because the European Union, for example, has put their agreement struck with Trump last year on trade on hold while they figure out what in the world all of this is going to be, and have already said that these new tariffs, 15% as a blanket rate for 150 days, that this already violates the agreement that they struck last year. So we saw the president sort of double down on the idea in the State of the Union. Dollar didn't like it. So not surprisingly, we get this sell-off. But today, almost all the way back to where we started. And indeed, we were even north of yesterday's levels at the open at one point. So a spirited recovery here for the dollar. And the driver seems to be risk aversion. Dollar reclaiming its role as a safe haven today. And the venue, the liquid cash destination for people cashing out of riskier bets. The S&P down today after rallying yesterday. We talked on the show yesterday about the idea that the dollar was down, bonds were down after the State of the Union and all of this kerfuffle around tariffs, but stocks were up because there was a lot of anticipation for earnings from Nvidia. Well, after the bell yesterday, those earnings came and they beat. A larger surprise, as a matter of fact, in the prior quarter, 5% beat on EPS, beat on revenue, beat on guidance for next quarter, 78% or 78 billion rather, in revenue projected for the first quarter of 2025. First of all, that's up 10 billion in a given quarter from what we recorded at 68 billion in the fourth quarter, just from this report. But the market had a consensus of 72 or so. So beating on every measure seemingly. What's the result? Nvidia is sharply lower, and the attempted breakout through that range top that we saw the prior day, handily undone. So, not surprisingly, Nvidia being the market cap behemoth that it is, the overall stock market has been dragged down, and the dollar has benefited from haven demand. We're seeing the same story play out in the bonds. They were down, as we just said, thanks to that State of the Union speech and the kind of sell America flavored response, but for the stock market, of course. And today the bonds are sharply higher, rebounding with the US dollar and suggesting that indeed what we have here is risk aversion classic, for lack of a better term. Bonds up, stocks down, dollar up with bonds. And normally you might expect the dollar to do better when interest rates are going up, because of course that makes it a more attractive currency to own. Currencies are yield-bearing instruments, so one person's borrowing cost is another person's lending yield. So when currencies typically respond to interest rates, higher interest rates for a given currency, or the prospect of them, typically is supportive of the currency. That's the currency you want to own, usually. What we see today is that bonds are up, which means, of course, interest rates are down, and the dollar is up as those interest rates are down. That is not a dollar being animated by positive risk sentiment. That is a dollar being animated by risk aversion. And it's the same thing here, more broadly. Stocks down, bonds up, of course, fit into that story. Into the end of the week, the question becomes once again seemingly about Fed policy and what in the world the central bank might do to help alleviate all of these concerns that investors have. Of course, its mandate is narrow. Its focus is strictly maximum employment in a context of price stability. And on the subject of that price stability, the inflection point that we're going to be dealing with here for the next 24 hours into the close of the week, at least as far as the economic calendar is concerned, is January's Producer Price Index, or PPI report. This is a measure of wholesale inflation. The expectations are that at the headline figure, we're going to get 2.6% year on year. So that would be a decline in these blue bars right here. In fact, the first one in a while, but we can see already in December, we started to get a little bit softer, even though the overall trajectory, basically since the middle of last year, from August onward, has been toward higher, not lower wholesale inflation, despite the fact that the president hit the podium and said that inflation is plummeting. Just on Friday, the PCE number gave us 3% for consumer expenditure prices the first time since April 2024. So it's unclear what's plummeting, but certainly a downswing expected for wholesale inflation at the headline here for January. The core reading, excluding volatile food and energy prices, expected at 3%. That would be down from a 5-month high at 3.3% in December. And that 2.6 at the headline, that would be a 7-month low. So perhaps moving in the right direction. But the key market moving component of this is probably going to be not the headline data, but actually living under the surface. What we have here is the trade services component of PPI. It comes in two flavors: intermediate demand and final demand. So the beginning of the supply chain, when goods from abroad arrive in U.S. ports, that's intermediate demand. And then final demand is when you get to those wholesalers that are just one step away from putting goods on shelves. Because, of course, at that stage, now you're talking about consumer prices, not wholesale producer prices. So this is the intermediate demand side of it. And we'll look at the final demand in just a moment. This is that trade services component that measures wholesalers' margins. You can see here that at the start of 2025, we've had a rough ride. This has been a sharp squeeze in margins like we haven't seen in well over a decade. At minimum, by the way, because this chart goes back to 2010, and this is at least the biggest squeeze in margins since then. Although if we look further back into the data, were there to be data further back, then we might see an even longer reference period. So what does this say? This is telling us that when we saw the Trump administration roll out these tariffs at the beginning of the year, wholesalers said, you know what, we're not going to pass on these extra costs to consumers for now. We're going to eat them. And the reason we're going to eat them is because the tariff environment is so uncertain that we don't want to destroy demand. We don't want to make things expensive for consumers and get them to buy less. We want instead to take it on the chin temporarily in margins and weather this thing out until we see just where the chips land, ultimately. You can see the same thing happening in final demand. Very dramatic squeezing at the margins here at the start of the year. Again, at one point at the beginning of the year, we had a monthly margin squeeze well in excess of 3%, which again, unheard of for well over a decade at the very minimum. And so what this raises is a very interesting question. If we look at these PPI numbers tomorrow and we see under the surface a significant margin squeeze continue, then the question becomes, well, now that the Supreme Court has overturned the IEEPA-based tariffs, what's going to happen that when these businesses who've been paying this money, we can see here, most tariff revenue is overwhelmingly from those IEEPA tariffs. Something like 2/3 eyeballing it here, if not more. So if that's the case here, then all of those wholesalers that have been paying these tariffs that have now been ruled unconstitutional might reasonably say, well, I want my money back. This was not supposed to happen. I was not supposed to pay this. And because the Supreme Court did not specify that the administration has to, in a blanket way, give the money back, this is going to come down to individual lawsuits. And boy, have there been lawsuits. Since early November, when the Supreme Court began hearing arguments in this tariff case, which of course has now been decided, we have seen approaching on 1,000 lawsuits. So just in the past, let's call it 2 months, we have seen a whole ocean of lawsuits on this subject appear. And of course, we don't know how they're going to go. So we're looking at all kinds of uncertainty around the tariff conversation, perhaps coming out of this PPI data. Besides the fact that if we get margin expansion, if instead of contraction, margins go out because we start to respond over time, at least, to these tariffs having gone away, and businesses now looking to get back some of the money from consumers by rebuilding margins back, that, of course, might be inflation. At the very least, it might knock PPI numbers high. Downwind, of course, perhaps not in this January report. And so what we're looking at under the surface of these PPI numbers is a whole other can of worms of tariff uncertainty beyond how the president will ostensibly reconstitute his tariff regime, which is a source of vast uncertainty as it is. And so all of what has ostensibly driven all of the incredible surge in trade policy uncertainty since the beginning of 2025 looks like it might become exacerbated. This is the Trade Policy Uncertainty Index. It was put together by 5 Fed economists in a research paper. And what it does is it looks for parallel instances, matching instances of trade policy and uncertainty in global news flow, and makes out of it an index. The way that this works is if the index is at 100, then about 1% of news stories are talking about trade uncertainty. And so what we see here is a tremendous amount of volatility in this index, which just tells you that the sentiment around the story is very jumpy. Now, of course, we've come back a long way from the Liberation Day peaks in trade uncertainty that we saw at the end of March and the beginning of April of last year. But just look at how much volatile back and forth oscillating there is around these averages. Compare that even to the first term for President Trump, where he was already starting to roll out tariffs and there was a lot of uncertainty. Compare it even to the onset of COVID, where the global supply chain was basically put on pause wholesale. We can see that we're looking at dramatic uncertainty. And ostensibly, this is why the markets want rate cuts. It's not necessarily because the economy is doing poorly. It certainly doesn't seem to be, even though the GDP numbers that we saw out of the fourth quarter were not great by a significant margin. Expectation was for 3% annualized GDP growth. We got 1.4. And of course, everybody's been running around saying, there was a significant decline in government spending because of the government shutdown. It'll all come back. Well, that's cute and all, but government spending is a tiny fraction of GDP when it's all said and done. Whereas private consumption is 68% of the total, and much bigger influence on what happened to GDP in the fourth quarter was that we got the weakest household consumption since the first quarter of last year, which was a quarter when the economy shrank 0.6% because of all this confusion and back and forth with the tariffs. So we're looking at a situation here where the markets are seeing an economy that's weaker. There's no question, but not so much weaker, perhaps. Maybe we'll get back to something like a 2% annualized growth rate in the first quarter. That's not the heady levels that we've seen, let's say, in the second half of 2024 or even toward the middle of last year, but it's not terrible. In fact, Fed officials have been roundly saying that growth has exceeded their expectations, and that although the labor market is a little bit sticky lately and seems to be stuck in this weird limbo where there's low hiring and low firing on the whole, that the issues in the labor market may be more demographic than cyclical. Nevertheless, the Fed has been resistant to cutting rates because it says the economy is overall holding up in a relatively solid way, broadly speaking. Nevertheless, the markets want a pair of rate cuts this year. 52 basis points on the menu now in Fed funds futures for this year. That's, of course, double what the Fed owned up to in December. And all the comments since then, including last week's minutes from January's FOMC meeting, have struck a hawkish tone. Even the people that have been dissenting in favor of rate cuts, Governor Chris Waller and the dove of doves, Stephen Miran, seem to have changed their tune. Stephen Miran saying, oh, maybe we don't need rate cuts quite so dramatic. Interestingly, that lines up with him quitting his job at the White House. And Chris Waller now saying, maybe if the labor market continues to hold up, then we don't need quite so many rate cuts. But of course, that lines up nicely with him having been passed over for the Fed chair job to succeed Jay Powell, the president instead nominating Kevin Warsh. So interesting how even their opinions have changed now that they no longer have a potential suitor in the White House to think about. But nevertheless, here we are. Markets want the rate cuts, and the Fed is reluctant to deliver them. In fact, some people in those FOMC minutes even said the Fed should update its guidance to give two-way indication of what may happen next, maybe even hikes and not cuts, though that was not the majority opinion. And we can see the markets care about this deeply. The S&P 500 basically hasn't gone anywhere since late October, which is the last time the Fed came out and loudly chastised markets for over-extrapolating rate cuts. And in some sense, this makes sense. The markets want a backstop for some possible issue with all the various risks that they're juggling, but that's not the Fed's job to do. Fed's job is to worry about maximum employment in the context of price stability. And unless there is a drop-off in inflation that is radical, which we're not seeing, or there is something happening in the labor market that the Fed feels like it has agency to fix, there's nothing for the Fed to do. And the comments from officials make sense. They acted to cut rates at the end of last year because the labor market looked particularly weak-kneed. And now they feel like, well, we've done what there was to do. Everything else seems to be mostly demographic. And so when you look at what's happening here from a sentiment perspective, the markets want a backstop. The Fed doesn't want to give them one, seemingly. Meanwhile, the only thing that's really on the menu are these PPI numbers that are ostensibly in a position to muddy the trade policy waters further and perhaps make it even more confusing to figure out whether the markets are going to get that story right, which of course just extends to the markets wanting more rate cuts because of the desire to have a backstop in case they get it wrong. And lest we forget, tariff policy uncertainty speaks directly both to what has driven markets higher for the past 2-3 years, and also to what is looking the most hampered at the moment. Witness the drop in Nvidia after that dramatic decline in software names, in a lot of the sort of AI adjacent names, because apparently the market feels like the narrative has become somewhat exhausted. We see that all this tariff uncertainty has already given us a sharp knockback on global trade volumes. They appear to have declined last year for the first time since COVID. And of course, because it's been that AI narrative that has really driven markets, it's not surprising that we're talking about the Magnificent Seven because that's where all the market cap lives. That sector is vastly outperformed. It's vastly responsible for the stock market gains we've seen. It's also a sector that's vastly dependent on there being frictionless global trade. We can see that it it is a supply chain with huge pieces. About a quarter of the supply chain is in Asia. About a quarter of it is in Europe. And a lot of it are single points of failure. It's not like if suddenly there is a tiff with the European Union over this trade agreement that they don't want to ratify now that the tariff situation is up in the air, that you could go and say, you know what? We don't need lithography from the Netherlands. We can get it elsewhere. Where? It doesn't exist. So when you look at this kind of a situation, you're left thinking, okay, we have tariff policy uncertainty. That speaks directly to the thing that's been underpinning sentiment this whole time. The president has told you that the uncertainty will continue. The Supreme Court has set the stage for multi-layered uncertainty, not only in terms of implementation, but in terms of remedy for what was there before. And the PPI data may be front and center for both. Moreover, we continue to have geopolitical friction here impacting oil prices. And of course, as we've said before, it takes about a month for oil price moves to show up in CPI. Well, clearly, crude oil has completely derailed all of the forecasts for a super glut this year. Everybody was expecting crude oil to go nowhere but down, but we've been rallying since the beginning of the year, and that's around all these geopolitical tensions, be it Venezuela, be it the capturing of Russian shadow tankers now by multiple countries, not just the U.S., but certainly with U.S. leadership. And, of course, the teetering regime in Iran. All of it threatens China's oil supplies. China has relied on sanctions busting, pennies on the dollar crude, basically since Russia launched its war in Ukraine in 2022. So we're threatening the world's largest importer of crude oil's supply and potentially forcing them to go elsewhere to get it, and at market prices. Not surprising when crude oil is up. From that perspective, we're looking at something long-lasting, this regime change in Iran, which is what seems to be starting to cook here. That's not going away quickly, whether the U.S. gets involved or it doesn't. It's a popular uprising. It's going to take a while for this dust to settle and for a new government or a regime to emerge. We haven't even gotten to the part where the old regime is being removed yet. So there's all kinds of potential for this rise in crude oil prices to be sticky and to keep inflation relatively elevated. That's hardly the recipe for the Fed to cut rates. And they're already reluctant to cut them. This aside. So looking at the PPI numbers here may well give us a kind of unified look at just how much tariff uncertainty we're looking at, alongside whatever issues we might see as far as pressure in the supply chain. Let's not forget the beginning of this oil rally was in January, and this will be January data. So perhaps we'll see a little bit of it start to show up already on the wholesale side. And if all of this ultimately boils down to evidence that the Fed is not going to give the markets what they want in any kind of hurry, well, we can see from the price action here, that does not bode well for Wall Street. Whereas the US dollar might actually get a little bit of a lift, both on risk aversion grounds, as we see today, as well as yield grounds. And so with that in mind, and just looking at the exposure here, I still have a little bit of short side exposure on the dollar and the Aussie, but otherwise I'm long against the pound, long against the euro, still long gold, a little bit of a pullback here today, but all the key levels holding, and the architecture of price action seemingly suggesting we're just consolidating before a rally. Holding still on the short side of risk sentiment, put verticals that I bought in the Qs. That's NASDAQ and SPY. That's the S&P. Plenty of duration in both, so giving myself lots of time and lots of dilution of delta exposure to really give this an opportunity to work without risking too much or making the position difficult to manage. Still long crude oil, with all kinds of time and looking for that structural advance to continue. Still a little bit long Brazilian stocks because they've been on a tear around the idea that Brazil is basically the choke point for the U.S.-China, let's call it rivalry, and a beneficiary, because a lot of what China used to get from the U.S., it now gets from Brazil, like soybeans, for example. And also a little bit of a put that I bought as kind of a flyer idea in the insurers. There's been a lot of talk about private credit being hampered, and insurers own a ton of it. So if private credit were to cave in for whatever reason, insurers probably get the knock back, and there's a range there at about 55 on that ETF. I've got a put that I bought right there where if it breaks, this could work. That is macro money for today. As always, we are here Monday through Thursday, making this our last show of this week. We'll be back on Monday next week, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go there from. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money will see you soon. Happy trading.
Get tasty, free market. Come on, you know it, hang